Good morning, everyone, and welcome to Traders Corner's Fall Special Investor Summit. On our panel today, we've handpicked 8 professional trading experts of the highest caliber. They've agreed to share their most consistent and profitable trading strategies with us today in a free online educational forum. In today's summit, we're going to learn from a wide range of topics, from how you can participate in a 5-day live trading challenge to how to leverage artificial intelligence into an automated trading strategy. So let's not waste any more time. Today's show is packed with great information. Our first presenter is an expert at trading news reports. He, who actually got his start studying music at Berklee College of Music and the Boston Conservatory, began trading stocks in 2001 and learned the art of futures trading. He's been trading for over 20 years and is now considered an expert teacher and trader of the news. Here to present, get ready for our newest and best ever 5-day live challenge, is Mr. Leigh Goldstein of 10-Minute Trades. Welcome back to Traders Corner, Leigh, and I love your graphic.
Hey, Rob, thanks so much for inviting me. I've never been first before. This is awesome.
Hey, you get to kick the show off today, so I hope you do it off right, which I know you will.
Sounds good. So thanks for the great intro, Rob, and I want to say hello to everybody. So how about this? I'm assuming you can hear me, and let me know that you can see my screens. If you're all the folks that are out there, I see a couple of friends out there, people I know. So it's always nice to see you. Steve S., thanks for letting me know you can hear and see. So a couple of quick things. I'm going to get started. Actually, we are started. So type in, if you would, where you're from, where you are watching this webinar from. Give me an idea. I'm just curious where everybody's from. And after you type that, let me know if you are currently trading live real money and what are you trading. So just, type in what you're trading and whether or not you're trading live real money. A lot of people these days, they're watching, trading, they're using prop accounts, not really trading real money, hoping to make money. You know the deal. So I'd like to know what you're doing. It gives me a great idea how to really do this presentation. I can filter it on the run, so to speak. So Tim is trading Forex. Steve is trading news. He's one of our members. And we've got Apex from Rick and Yak in Toronto. Okay, Florida and Oregon. Okay, so look, anybody international. We usually have a lot of international people. Roz, I know you're in Kenya. Roz is one of our members. I hope I'm pronouncing it right. Rajesh, I think it's Rahish. I hope I'm pronouncing that, in Ottawa. Okay, Marie is a beginner. That gives me a good idea. So I'm really excited today. We're kicking off a program that we call a challenge. We're on our 4th challenge. I'm going to explain what these challenges are. And we want to teach you how to make money trading futures using the Ninja Trader platform, because that's the platform our software works on. And we trade market moving events. And the way that we teach everybody how to do it is we've come up with a fantastic system called challenges. We're going to spend 5 days in November, starting November 13th. Today is our kickoff day, where it's the first day you can register for this challenge. And also, it's going to double in price to be able to take advantage of the challenge. And don't get worried, it's incredibly reasonably priced to do it anyway. But we're going to spend 5 days, 5 classes, a very significant class each day, having great education all about our trading system. We call it ABT, appointment-based trading. And I just want to go back in time to just tell you a little bit about who I am, so I can, make you understand why it makes sense to listen to me. I'm not just a nobody who knows nothing about nothing. I'm an expert in news trading, but I'm just like you. I'm a regular trader. I'm not the world's greatest trader that ever lived, but I know a lot about news trading, and I'm an expert on teaching people how to trade news. Everybody loves the news. people are sometimes afraid of the news because there's been false stories made up about how it's not safe to trade news. Only people that don't understand trading the news say it's unsafe to do it because they don't get the whole idea, which is just like any trading system, you have to know how to do it. If you know how to trade the news, news trading is no less safe than any other types of trades. But all these rumors have been circulated over the years that news trading is unsafe. It's not true. I've been doing it for 7 years at the same company. Our trading account has not blown up. It is absolutely possible to make money trading the news or events by appointment. We call it appointment-based trading. It is the best way to trade because I don't sit in front of my charts all day long watching, waiting for setups that don't always come. Now, just keep in mind when I'm done, I'll leave a couple of minutes to answer all your questions. So don't feel I'm ignoring you, but I'm going to answer all the questions at the end of the presentation. Type in your questions. I love answering questions just as much as I love teaching, and that's why I'm here. I love teaching people how to trade the news, and I absolutely know how to do it. That's the most important thing I can tell you. I know so much about news trading that sometimes I outsmart myself. Here's my history. So I got involved in trading many years ago when my mom asked me to help her manage her investments. And you know, it's a funny thing. It's sort of like at times you remember the exact moment you were when something happened. I remember where I was the exact moment I made my first trade. I was trading Apple stock, and the second I saw the price move and I saw money go into my account, something happened to me. And I knew at that moment that I was hooked on trading for the rest of my life. And I started helping my mom with her investments. I got involved in futures, options, just like everybody else. I went to trade rooms. I paid money for mentors. I paid money for people that stole my money. I paid some good money for people that were honest and taught me a lot about trading. Not everybody is a crook. There's a lot of great people out there. And over the years, I became very interested in news. And I actually was using the TradeStation platform probably about 8 years ago. I was trying to trade natural gas. I was getting my head handed to me every day that I tried to trade natural gas. But I also noticed that on Thursdays at 10:30 in the morning, there was a crazy move in natural gas. And it made me realize there must be something causing these moves. Of course, over time, I learned that news events move markets at certain times, and that's how I got involved in this. I searched all over the internet looking for software to help me trade news. I couldn't find anybody, and I hired TradeStation programmers. And then one day I stumbled upon this little program called JoeBracketBreakout.net, this little crazy website, and this software program that put brackets on the chart, and it let you bracket the price of what you were trading. So it put these brackets just like you see here. The current trading price is right there. And then the software put these X's on the chart. And when the news would come out, if the price went up and burst through the bracket, you'd get pulled into the market long. And if it went down, the opposite was true. Lo and behold, we had bracket trading breakout software. And I became a member of that website, and I started using their software, and they didn't have a trade room, and it drove me crazy. I would trade. They had these trade reports called HIRA. It was a high impact report alert. It told you very roughly how you might trade a news event that was coming out tomorrow. But when the event was over, there was nobody to talk to. They had this goofy little web-based trade room that wasn't really, it was like a chat window. No one was ever there. I started bombarding these people with letters and emails telling them that they need to hire me because I wanted to, set up their company in a way that they would be able to get members like crazy. They hired me. It took, first they ignored me completely. They probably just thought I was crazy because the emails weren't crazy, but who's this guy? I don't know him from a hole in the wall. Eventually they read the emails and they hired me. And the first week that I got hired by them, we opened a trade room using my own personal Ninja Trader account because we didn't have a company account set up. And honestly, folks, the rest is history. Over the years, it's been 7 years now that I've been working for them. A couple of name changes. They went from joebracketbreakout.net, and then we figured, what could be worse than that name? It doesn't tell anybody anything about what we do. So we changed our names to thenewstraders.com. And then we hired a marketing guy, and he said, you know what? That name is not quite good enough either. And we came up with 10-minute trades. We've been 10-minute trades. It's probably about 4 years now. And that really, our name really could be 10-second trades because many of our trades take place in a nanosecond. The point is, over the years, we've upgraded our software. We've added features to the software. We have a pro trade room. Everything about the company has been upgraded. And as the years have gone by, we got real tired of going to webinars, having people sign up, buying software, never coming back into the trade room, never using the software. Year after year, it was becoming the same old story. And people would sign up, we'd never hear from them again. Obviously, some people would follow through. And we decided a year ago, a little bit more than a year ago, we needed a new way to get people involved. It was really important to us to be able to teach the method that we trade because we love the way that we trade and we think it's a fantastic method. And let me give you an idea why I feel this way. So we don't do a lot of technical analysis. That's not what we're all about. I don't spend my life looking at moving averages, looking at Elliott wave, that Elliott doesn't even know where the wave is. I don't spend a lot of time with Fibonacci. I don't spend that much time with moving averages and the crossing over of where things are going to go. And it's just not what we do. But what we do study is the event that takes place and how that event took place the last time it was traded. So instead of doing moving averages, we look at the same events over and over. And over the years, we've come up with trade setups in our software that allow us to trade these events that are constantly repeating their behaviors. That's the way that we do it. So it's news event trading because events repeat. So let me give you an idea of a couple of things that we've done. So very recently, we've traded Amazon. And in fact, Amazon earnings are coming up today. We'll be trading Amazon today. We traded Amazon in August. This is our Amazon trade in August. It was literally an $1,100 profit in a nanosecond. We know from studying the way that Amazon releases their earnings that we can put our orders on the chart at a certain time. And what's going to happen is the earnings are going to come out. We trade the NQ. Here's the big deal about the way we do earnings. We came up with a method, and we're going to teach this method in our challenge. We came up with a method to take selected stocks that move futures, and we're not trading the stock, we're trading the futures. So I was trading the NQ futures on Amazon earnings. The news came out, it blasted through my orders. That was an 1,100 live real money profit in our trade room. Every single person that traded with me in the trade room made money on that trade because our software had a safe setup for that event. That was Amazon in August. This week, we did our research and I knew that Microsoft and Alphabet were trading earnings together. I knew that that was a difficult earnings trade to take because think about it. We're trading the NQ futures on that trade. If Google comes out before Microsoft, it's going to move the market. But also we know Microsoft's very important. If they come out before Google, they're going to move the market. I came up with a method that told me it's going to be safe if we trade Microsoft first. They're going to release their earnings first. So here's what happened. We did our studying, and I'm talking years of studying, not looking at one report. I've looked at years of research on these events where Microsoft and Google, or Alphabet really, trade together. That day, I was down $100 on an early morning trade that didn't work. Not every trade works. I'm not going to sit here and tell you every single trade is a winner. I knew, though, that I could count on the fact that Microsoft was going to come out, and it did exactly what I thought. It exploded to the upside. I traded only one contract because it was high risk. The market is in war mode. The world is a mess, and I wanted to be safe, and I wanted our members to be safe. So I only recommended one contract, $375 profit, based on our research working, the market moving the way that we thought, exactly what happened, what we expected to happen happened, and it was a profitable trade. That's what we're going to teach in our challenge. We have 5 days of education based on the way that we trade and why these events move the markets. I'm not going to go over all the things that I always go over in these webinars today, like what makes up our trading system. All that stuff is going to be taught in the challenge. Suffice it now to know, even if you're not a Ninja Trader brokerage account customer, it is possible to get a free 2-week demo so you could learn along with us and experience Ninja Trader and get a trial to our software. When you take this challenge, you can function and learn to function just like you are a real member of our service while you're learning in the 5 days of this challenge. Today is the first day that we're kicking off the challenge. That's my boss, one of the owners of the company, Eric Roth, one of the co-founders. Today is our launch of the challenge. This is our 5th challenge, and it's a fantastic way to get people excited. The reason these challenges work is because we are convincing you to be active, to learn, to be willing to take your first live trade or your first sim trade if you never traded before. We're getting you to open a brokerage account. We're getting you to take action during the 5 days and of course after, so that you can have an experience that changes your trading life. You're going to have a whole new system of trading to take with you forever. If you're an experienced trader, you're adding another system of trading. And it's a fantastic system that can sit side by side along other trading methods. Because with our system, as we're going to teach in this challenge, you're going to know exactly when you're trading. You know, I have a schedule. Every week we send our members our weekly schedule. Look at this schedule from this week. This week is not even over. We were in the trade room. When it says the room opens, that's when we have a trade room. 3 in the morning on Tuesday, we got up to trade a French manufacturing report, a German manufacturing report. We traded GM and GE earnings. We traded US flash manufacturing. Google and Microsoft, like I just showed you. We were looking to trade Snap earnings, Australia CPI, Boeing. It just goes on and on. This was a busy week, an excellent week, but it is very normal in terms of what a schedule would look like. Today, we've already tried trading the ECB finance rate, their bank rate statement, didn't move the market, there wasn't a trade. Advanced GDP, we put out a setup that had a very positive trade if you traded the setup. Now, I missed natural gas today because we're giving the webinar, so I don't know what happened yet in natural gas. And then the big moment of today, Amazon with Intel will be in our trade room at 3:30 today. The point of all this is we want to teach you how to do this, and we're going to do this in our challenge. Today, the challenge, all I'm selling today is 47 bucks to join our challenge. I'll show you the link. I just want to make sure that you have this disclaimer. Everybody knows it is possible to lose money trading futures, okay? Trade carefully and trade smart so that you know what the risk is. If you go to our website today, www.10minutetrades.com, we'll give you a free Trade Live Challenge workbook, okay? And one of my members right now is telling us that he made 38 ticks on the natural gas storage trade today. We have a setup that brackets the price of natural gas. Natural gas has been trading incredibly well, even though potentially it could be one of the most risky events to trade, but it traded well today. I'm being told 38 ticks per contract is approximately 380 bucks. It's $10 a tick. Very nice to hear, Dutchy, so thanks for that. Go to our website, www.10minutetrades.com, and opt into our free video, How to Find 10-Minute Trades. You'll get two things for free. Our weekly schedule that I just showed to you, and that weekly schedule is useful whether or not you trade the way that we do or you don't. Keep in mind that if you know when the news is coming out in the market, you can keep yourself safe, because that's what people didn't understand when they said news trading was not safe. It's totally safe, but you need to know when news is coming out so you could be prepared to trade it, or you could be out of the market for 5 minutes while the market comes down after the news gets released. We will give you our Trade Live Challenge workbook for free. Just go to the website, 10minutetrades.com, and opt in for our free video, How to Find 10-Minute Trades. Now, so why a challenge? Are you up for a challenge? Our trading performance, our account is up $6,000 since the end of the summer. The beginning of the summer. I've been trading our account like a beginner trader. I wouldn't say beginner, like a regular retail trader. 1, 2, and 3 contracts at the most, no gigantic 10 contract trades, just trading our account average the way a regular person would do. But the key is there's something that we teach that is vitally important. And some people can never master this simple concept. If you overtrade, you will never be a successful trader. Our mantra is we will trade the events that offer us the best opportunity for profit. And we also want to trade the safest of those reports. When you do it that way, you give yourself the greatest opportunity to succeed. You're not going to trade every single report that we recommend a trade exists. In other words, we have a system. Our system is our software, our trade room, and our daily reports and our weekly schedule. The weekly schedule is free, and then of course our trade room and our software and our reports are a subscription-based product. None of them are very expensive to begin with, but they're not free, and the point is we're teaching people how to use them. We have a daily report called the DMM, the Daily Market Report, that shows people how to trade an event, or it's a baseline how to trade an event, and using those daily reports helps us to be safe. We don't trade every single report. We recommend setups, but you want to do your homework and know which reports are performing the best. If natural gas is stopping out every week that the storage report comes out, then it makes logical sense that you're not going to take the trade in the upcoming week. We will wait for a certain event to start performing well. The US jobs report coming up next week, that's been a pretty good trading report, so we'll trade it live. Earnings trades, Facebook, Amazon, Netflix, Google, most of those we trade every quarter. They offer a fantastic opportunity for profit. You saw $1,000 on one trade that was real money, I don't make it up, and you saw this week we traded Microsoft, one contract, 375 bucks. I did not make it up. We teach how to do it. the 5 days in the challenge is where we spend all the time on education. The point is also, we know that we have to get you excited and get you motivated. And we also know that if we make this a competition where there's actually a winner of the challenge, then and there's an incredible prize, then we think you're going to join the challenge, and then we're going to motivate you to learn the trading methodology. We are doing something over the top for this challenge. First, before I get to what we're doing that we think is over the top, what are the goals? We want people to learn a great trading system, appointment-based trading. I showed you our schedule. I know that when I'm done with this webinar at 12:30, I'm going to go into our trade room. All of our members are going to join us, and we're going to go over the daily trade report on how to trade the 7-year note auction, because that's what's going on today. Our daily report looks like this. And then at 12:30, there's our natural gas trade report. The yellow line shows people how to trade the natural gas report. I'm going to get to my trade room at 12:30 today, and we have a report that has a little journal in it showing the recent performance of the 7-year note auction and a way that it might work out to trade it if it's performing well. That's what we're going to teach. That's one of the things we're going to teach in our 5-day challenge. If you understand how to trade events, then when that challenge is over, you're going to be able to take your first real news trade properly. We're going to get you into learning about momentum trading, and hopefully you will be able to understand the concepts of trading consistently. Don't overtrade. Trade the best of the reports. Trade reports that are behaving properly. Know if you're taking extra risk. Maybe you could trade micros on a report that maybe isn't performing as well as you think it should be. We want to teach you how to transition to be a live trader. Our prizes for this challenge, because we know that if we convince you to join our challenge and really take part in it, actively engage with us, post pictures of your trades, get involved. We are giving away a Dell XPS 15 trading laptop and 6 months of our software and access to our trade room. That's our first place prize if you win the challenge. Of course, we're going to explain how you win the challenge. You win the challenge by engaging, by posting, by making a video at the end of the challenge and explaining to us why it was a meaningful event in your life, why the challenge made sense. And look, if the challenge was lousy for you, you're not going to win it, and we don't want you to make a video. We want to reach you as a person. We want to reach you and teach you and make it so that you have a great experience, so that you want to make a video, and you could win a Dell XPS 15, which is a very, very excellent trading laptop. It's a $1,500 laptop. That's prize one. Our second, now here's the other thing. If you refer someone into our challenge, let's say you refer someone to take the challenge, we're going to send an email with a referral sheet where you could just type in the name of the person you referred to us. If you refer someone, bingo, and they win the challenge, you're going to get the first place prize also. All right, that is pretty incredible. Second place prize is an Apple iPad, the latest model, 6-month subscription to our Pro Trade Room. And then our third place prize, which I'm a headset lunatic. I actually want the third place prize because it's Quiet Comfort 45 Bose headphones. I love Bose headphones, plus a 6-month subscription to our daily market mover trade reports. Those are awesome prizes to take. It's going to take place in our 5-day challenge. So what actually happens during the challenge? The idea, right? What's the idea? We want to show you how to do a trade properly. Look at the setup we had today. And this was a trade that the irony of ironies is I thought that this would be a little bit too risky for us to trade, but it still shows the exact truth about what we do. There was GDP, durable goods, unemployment claims Thursday, 8:30 trade. We knew through our testing that trading the NQ should offer a real good possibility for a winning trade. Members that traded live on this report, one of our members made over $1,000 on this trade. Here's what the trade looked like. Our orders were on the chart. The news came out at 8:30. It took 4 seconds for the NQ to blast through our targets. And anybody that traded our setup on the NQ or gold, we also had a gold setup, made money. That's what we are teaching in the challenge. That is our goal. How to find the events, how to put your orders on the charts, how to use the software, how to learn to trade events so you don't have to sit in front of your computer all day long going through setups, waiting and waiting and waiting for this moving average to cross over that moving average. You know the deal. But if you like sitting in front of your charts, I used to love sitting in front of the charts. You can still add appointment-based trading into your arsenal of trading because you'll know exactly when you're taking the trades. Now, I'm not going to mention names, but we have other trade room moderators that trade in our trade room because they can go and teach their members their trading system and trade with us our trading system at certain times of the day. It's a fantastic way to trade. So the challenge is teaching, daily live coaching and trading, okay? And we consider that a $1,997 value. We're also going to include as a bonus, if you sign up for this challenge, our stock earnings masterclass. So besides also teaching you in the challenge how we trade earnings on futures, we also have an on-demand masterclass that we have recorded. That's $1,000 value. You saw one trade made over $1,000. Now look, we're totally transparent. We have a trade room. People come into our trade room every day. When you have a lot, and we trade live money when it's appropriate, okay? And that's the key words, when it's appropriate. If you can learn, if I'm gonna give you one piece of advice, if that I think could make your trading life meaningful, it would be one thing and one thing only. It would be to learn how to not take every trade. If you can accept the fact that maybe sometimes you're only going to trade 5 times a week and be happy trading that seldom, I can promise that you're going to learn how to trade successfully. Because think about it, the market makes it hard for you to take money out of it. The more time most people spend in the market, the more chance there is that the market's going to take your money. Doesn't it make sense that if you could learn to trade, learn to pick your battles, that it's going to increase the possibilities you're going to do better? I know for a fact that that's the best way to trade. I'm not going to trade every single little news event because not every single little news event is going to be profitable. I'm going to try and pick the best of the best. Every trade room, every challenge, we go through the events that we're discussing and we walk through them, and we have videos of many of those walkthroughs. When you take the challenge, every class is recorded and every class is available to people that take the challenge. We have a live graduation ceremony, and that's of course where we announce the winners. And this, like I said, this challenge has fantastic prices, great, a trading computer, the iPad, headphones. It's really the ideas we want to motivate you to join the challenge, learn our system. Obviously, the prizes are just fun. And that's the other aspect. Life is so difficult these days. We want it to be fun and enjoyable. I know that trading is serious. It doesn't mean we're not taking it seriously. I take it as seriously as anything can be done. Um, we know that the markets, especially in these times now with everything that's going on in the world, it is harder and harder to trade because the markets are more volatile. You see oil up and down $2 sometimes in a day, sometimes more. These are markets that you have to be careful in. The amazing thing about trading news and trading events is that year in and year out, there are many events that you can regularly count on that they're going to move the market in a manner that can be predictable. It's not so predictable, obviously, that every single event does exactly what it did the last time, but you're looking at events that do repeat, and they repeat often enough to have very viable trade setups to trade these events. We also have a private Facebook group for people that are willing to engage, and you can post your trades. We post various documents that people want, extra documents. We have found that joining the Facebook group with us, it's private, so there's nobody except people that are taking the challenge. Everybody's focused. We're not, goofing around on Facebook. What'd you do on your vacation? That's not what we're doing. It's a Facebook group, it's private, and it's geared specifically towards the challenge and all the things we can do to help each other, engage with each other, and make the challenge even more positive as an experience for everyone to learn the methodology. It's 5 days, all right? And we're starting this challenge November 13th. And like I said, today is the first day that you could sign up for this challenge. And again, let me show you our website so you know where to go and what to do to sign up for the challenge. And it's only $47. For $47, we are going to teach you all the ins and outs of our trading system. And I mean all the ins and outs, all the important elements that you need to get started as an appointment-based trader. We're going to introduce you to our software. We're actually going to have a trial of our software. You can come into our trade room. There's a VIP upgrade, very inexpensive. If you want to spend time in the trade room and get the daily reports, there's a way to do that as well. You don't have to spend anything more than $47 if that's all you want to do, to spend time in our classroom every day for 5 days, learning so much about appointment-based trading. www.5daytlc.com. You can sign up today. I want to show you what the website looks like. When you go there, you'll get the 5-day challenge information, and it's going to go over all the ins and outs, all the great prizes that we're offering, what you're going to learn, what we're going to cover, the tools that we use. Remember, we can recommend how you're going to be able to get a 2-week demo to Ninja Trader. We have a brokerage contact. We really plan this properly, and it's going to be a fantastic challenge. So go to the website that we pointed out, www.5daytlc.com. I can't think of a better way to trade than trading news events. It's fantastic. Let me keep going through the rest of my slides here today. We're starting November 13th, www.5daytlc.com. I want to show you a couple of more events so you understand exactly what I'm talking about. So we've got, I have just to give you an idea, this is a file folder of events that we've traded, all right? I have file folders also of screenshots that our members have sent us, hundreds and hundreds of winning screenshots. I can just pick a couple of random ones, okay? And I'm literally just pulling up a random screenshot that a member sent me. This was an ADP report, $130 that a member made trading gold, okay? Another screenshot, and I'm serious, I have so many, I don't even know which ones to pick, I have so many. Members trade the Euro with us, $300 profit. Look at the move. That's how you make money on a news event. If you can position yourself with a bracket before that move comes out, that's what we're teaching how to do in our challenge. That is the way you want to trade events. Now, I want to answer a couple of our questions that people are asking, so I make sure I get through all of them. So give me a second, and then I'll just sum up at the last minute what you have to do. This, like I said, is our 5th challenge. We have had a fantastic experience teaching hundreds of people how to do this. Okay, so people are asking for certain things. Marino, please send me an email. Marino is asking about getting a letter about something in specific. If you need help and you're confused about something, send me an email to help@10minutetrades.com. And I'll send that to everybody right now. I will answer your email. So if you have questions, you can email and reach us, help@10minutetrades.com. Okay, and that's everybody. I'm happy to answer your emails. So please, if you're confused or you just don't believe me, send me an email. Okay, let's see what else. How well does the software handle slippage on these fast trades? So Steve K is asking that. So Steve, slippage is one of those things that it's always there. There's slippage when you trade fast moving events. Sometimes there's tiny slippage when you trade slower moving events. There's 2 types of slippage also. Sometimes slippage will ruin a trade. There's nothing you can do about it. It just is, it is what it is. There's other times that slippage will give you more profit than you expected. We have done the research on slippage, and there is positive slippage and negative slippage, and they pretty much cancel each other out. We've made extra slippage on as many trades as we've lost money because of slippage. So it's just one of those things. The idea, though, Steve, is if you understand that, yes, there might be slippage, but in a good trade, the slippage is going to be way less than all of those ticks of positive movement. This particular member made 300 bucks on that trade. Okay, that was a big move, one contract. So the idea is many trades, yeah, they have slippage, but they have a move that way out, goes way past the amount of slippage. Okay. And someone was asking if the entire schedule today is about news trading. No, there's a ton of different people, presenting. Now, people always ask the same questions over and over, especially because, it's like you're trained to think in one way and you're trained not to really think outside the box. You have to think outside the box, especially if you trade news. And I'll tell you something, if you trade outside the box, and learn to think outside the box, you're going to do much better. So the most common question that people ask, and think about this carefully when you ask it, what's your performance? There is no performance, overall performance for news trading, because we're not telling you to trade every single event. If I tell you to trade an event, then that particular event has a performance value that's showing up many times on our daily trade report. So for instance, this morning, we traded the Euro main refi rate, their bank rate statement. It's had 3 winners out of 6. It's had 1 stop out of the last 6 months, okay, and it's actually since February, and it's had 2 canceled trades. That's the performance of that particular event. That's how we make our decisions on what we're going to trade. Some events have performance that might be 5 out of 6 winners over the past 6 months. Some events are weekly events. Some events are quarterly. Every event has its own performance quality, okay? So there's no overall performance. Every event is different. So that's important to realize. Is this class for beginners? Absolutely. Any level of trader can take this class. We start at scratch and we go through what you need to do to trade these types of events. Someone else is also asking, aside from $47, what else do you pay? Any trading that you have to do, there's going to be fees for platforms and data, and that's, depending on any trade that you do. That has nothing to do with us. We don't charge you for data, and we don't charge you for platforms. But in this day and age, you have to pay to do things. So you have to figure that there's going to be some sort of fee to get live data eventually, right? And you're going to have to choose a platform. We use the Ninja Trader platform, which is very reasonably priced, and you can get their pricing from ninjatrader.com. They have a lifetime license. I believe they have a quarterly license now. So it varies, the prices are variable, but obviously it's not so expensive that you can't make money trading or no one could afford to trade. So folks, my time is pretty much up. www.5daytlc.com to join the challenge. Literally thousands of dollars in prizes. You could win a free laptop to trade on, the XPS 15. It's an awesome trading laptop. I want to thank everybody for giving me your time. We love our trading system. We believe it works, and we believe that you can be a profitable trader doing it. So Rob, I hear you in the background. Thank you so much for having me.
Hey, Leigh, thank you so much for being here and coming. I'd like to add that I believe I've seen that Ninja Trader has recently gone feeless. So there's no longer a purchase price or a 3-month, lease of the software. Ninja Trader has become cost-free. But
wow.
Every time I hear your presentation, I love it even more. Thank you for making such a generous offer to our audience today and trading the news, being able to sit down and, like your title says, within 10 minutes, analyze, set up the brackets, and get in on the correct side. Your 5-day live trading challenge sounds like a great opportunity to learn more about trading the news for someone. And ladies and gentlemen, no more sitting there all day waiting for a setup. Mr. Leigh Goldstein of 10-Minute Trades, who's a seasoned expert at trading the news. And like you heard him say, sometimes he overtrades himself. You'll know exactly what time your opportunity will present itself. And within 10 minutes, your trading session is over, and more often than not, very profitably. You can learn more about his special offer today by clicking the link I put in the chat box or going to 10minutetrades.com. Leigh, thank you again so much for joining us. We can't wait to see you back on Traders Corner again.
Thanks so much, Rob. I'll see you next time.
Be well, sir. That will bring us to keeping the ball rolling. Our next presenter is a 9.5-year United States Army veteran and married father of 9. He's a leader in his local church and a successful business owner and trader. That, however, wasn't always the case. His compelling broke dad to 7-figure trading success story will captivate and inspire you. He's dedicated to helping people from all walks of life fulfill their financial dreams and achieving financial freedom. Helping others is at the heart of all that drives him on a daily basis. Ladies and gentlemen, here to present $250 to $1 million in 1-year plus trade setup. It is my pleasure to introduce Mr. Casey Stubbs of Trading Strategy Guides. Welcome back to Traders Corner, Casey, and I hope your event this morning went on the positive side.
Okay, well, great. How are you doing today?
I'm doing pretty well, and I hope you are too.
I'm great. Yeah, awesome. So thanks for having me, and everybody can see everything and all that good
we
stuff.
Can see your camera. I think you might have the wrong screen up though.
Okay, what do I see? What do you guys see?
I'm looking at your splash screen, but very small with kind of the slides again over on the right.
Okay, sorry about that. Let's try this one.
I've got your camera, and now I've got the right one. Wonderful.
Okay, all right. Okay, now all right, sorry about that. Just trying to get everything situated here. Okay, all right, well, let's go ahead and get started. My name's Casey. Thanks for that great introduction. And, we're going to go through the slides here, and I have 45 minutes, so I'm going to do my best to make sure I cover a lot of content in a short period of time. And one way, so I'm going to talk a little bit about a strategy as well, because there's a lot of different strategies that we can use, but I wanted to kind of give you guys something here to work with. And one of those is to use options. And the reason why options is really great, and you need to obviously do your education, but options is great because there's leverage involved and you can make some gains pretty quickly. With that being said, you got to remember that with quick gains can also come the opportunity for quick losses. Big gains can equal big losses. So you got to always calculate that. But my charts are acting just like weird. Every time I try to move them, they get big. Okay, so maybe it's because I'm presenting. Oh no. Okay.
It knows that you want to go to the charts to give an example.
Yeah, and it's acting just nutty right now. Let's see if I can. I don't know why it's doing that. Okay, all right, forget it. I can't figure it out. Okay, I'll figure it out here. Yeah, in a minute. All right, sorry. Okay, so here we go. Let's get started. So I hope you're ready for an exciting journey, because I'm about to share a step-by-step guide on how to grow your trading account from $250 to an impressive $1 million in just 1 year. Now, while this is undoubtedly a challenging endeavor, it's not impossible with the right strategy and the right mindset. And if I see a trade happening while I'm talking, I'm just going to interrupt my presentation and show you the trade if I can get the chart to come over, and I think I've come up with a way to make it happen. Okay, so first thing you got to start with, step number one, we're going to go through step by step. And the first step is you want to set realistic goals. Okay, realistic. And so a normal person doesn't set goals like this, and I'm not normal. And I think that if you want to accomplish big things, you got to have crazy goals. I read something from some social media guru, you know, and I can't remember who it was, but he said, make your goals so big that people laugh at you, right? And so I'm laughing at myself, and you guys can laugh at me. And, you know, some people might laugh at me, other people might criticize me for being stupid or whatever, but it's just fun to go out and try big things. I've always liked to do that. And, but this is still actually realistic, because another little tidbit is I have a podcast. It's called the How to Trade It podcast. I'm going to show you how to get access to it at the end. But I just interviewed a guest who did this. The episode's coming out next week, so you might want to subscribe to my show and hear the interview, because it was pretty cool. All right, so step number one, you start with a realistic goal, and you begin by acknowledging that this is an ambitious target, and understand that there's risks involved, and be prepared for the losses, and also understand that, you know, things in life are not easy. If you want to accomplish great things, don't expect it to be easy, but it's kind of like staying married for 18 years, right? It's not easy, but it can happen. And I use 18 because I just recently celebrated my 18th wedding anniversary. And out of those 18 years, they were all very happy. Although if you ask my wife, she might tell you something different. Okay, mastering the basics is step two. So you want to build a strong foundation. Learning the fundamentals of trading, technical analysis, risk management, and trading psychology. Those are really the big things, right? Understand trading, learning the charts, learning how to manage risk, and then managing your own mind, managing your own behaviors and your own actions, building up great habits and great disciplines. You know, all successful people have great habits. And you know, that's the boring part of trading. That's the part that nobody wants to think about. That is the part that doesn't sell expensive trading products, but it's the part that's going to make you wealthy. It's the part that's going to make you successful. So you want to build in your habits, right? And all of those habits will include things like how to manage your risk, how to do mindset, how to take care of your health, right? How to do daily journaling, how to eat right, get enough sleep, how to put education in your trading plan, you know, how set time to spend around the right people and get around the right the right traders. You know, those are all things that you got to build in as good habits. And then step 3, you want to choose your trading style. You want to decide whether you want to be a swing trader, a day trader, a long-term investor, and your strategy will determine your approach. Okay, so it's very important to look at your strategy, and there's a lot of different ways you can do it, and you want to try to find a way that would be really good at fitting for you. Okay, something that fits your personality. If you get and you adjust the goals, you know, I'm doing a big goal. You don't have to do goals quite like that. You can do goals that are a little bit different. So with that being said, you want to really dive into your strategy and make sure that it works. Okay, next part is risk management. Risk management's critical. Never risk more than you can afford to lose on a single trade. Use stop losses to limit orders. Always know your risk before you get into a trade. That is, again, one of the habits that you got to build. And always, you know, we talk about building habits and trading psychology. Always honor that risk. If you plan to risk $100 on a trade, then risk $100 on a trade. Don't let it turn into a $500 loss. Don't let it turn into a $1,000 loss. Don't let it turn into a $10,000 loss. You know, I was just talking to somebody the other day that was working really hard. He scaled his account from about $1,000 all the way up to $12,000, and he worked hard on it. And then all of a sudden, in one day, he gave back all $12,000 in one day after working hard for months. All because, why? Because he didn't want to take a loss that day. If he would have nipped it, took the loss early, was hoping that the market turned, you know, if you hope that the market turns, you're already asking for trouble. So just honor your risk. It's easy to make your $100 back or whatever your deal is, but it's not hard. It's extremely hard to make up the full loss back, okay? All right, so another big thing is proper position size. You know, I am very guilty of using the wrong size. You know, I want to make a lot of money quick. And so in this particular type of strategy, you think, oh, well, I got to go all in. That's called YOLO. You only live once. And sometimes that works, very rarely though. But the problem with trading like that, with YOLO, a lot of guys did that on like meme stocks and things like that. Most of them are broke right now. The problem with doing that is that even if you get it right and you make $1 million, you're going to give it back because you built in bad habits, right? You are YOLOing once. You're like, oh, I'm going to YOLO and I'm going to make money and then I'm going to change. Wrong. You're not going to change. You're going to do it again. You're going to get greedy. You're going to try to make something happen, and it's just not going to work out well for you. So make sure that you use your proper position size on the front end and then slowly grow it, right? This is an aggressive plan, but it's still a slow growth plan. You might think that this is get rich quick, but it's actually not. It's get rich slow. It's slow scaling growth because we're actually going to run a strategy over a period of 12 months. Okay, so with that being said, I want to just kind of take a break here. I'm looking at a trade that I wanted to take, and so I'm going to see if I can switch my screen sharing here. Instead of moving the chart, I'm just going to try to move the monitor. So I got a 1 minute chart right here on the S&P 500. This is the SPY, and we're bouncing off of a trend line. And so I'm just going to go for an options trade right here, and we're going to go with the 0-day expiration. Okay, so you saw the entry already. Okay, so now we're just going to buy right here. Okay, so we're just going to click buy. I got to click here, and we're going to buy. Okay, so I put the order in. Okay, or no, I didn't. Now I'm putting the order in. All right, so there we go. We put the order in because we got to break out off the level, and so I've got my risk place in order. If it continues to move up, we're gonna take profit. If not, I'm gonna keep my risk on the table and keep the trade light, keep the loss small and the winners big. I actually just took a trade like this right beforehand with this bounce off this level. You see that nice move, right? And so if it worked once, it can work again. And the first trade was really good, right? And even if I take a small loss on this one, I'll still make money because this first trade was great. All right, so now hopefully you guys were able to see that because can't see which screen I'm showing. Maybe I didn't. Oh yeah.
We see the one with, it looks like a daily of the SPY.
Okay, good. Thank you. Okay, I'm going back to my slideshow now, and I'll just keep my eye on that. I'm going to be presenting and watching my trade at the same time, so that's always fun. It's called multitasking, and it's something I'm not very good at. Okay, so that's one of the things I should put in the list is focus, don't multitask. All right, so step number 6 is you want to create a winning strategy, develop a strategy that suits your trading style, right? Make sure that you have an edge in the markets. You want to continue to work on that strategy, test that strategy, trade that strategy, live and breathe your strategy. One thing that I see traders doing all the time is they don't really know if their strategy is working. So before you go all out and you work really hard at launching a new effort to grow your account rapidly, make sure your strategy works first. You know, trade it for a month, practice, or trade it for a month with a very small amount without really trying to be aggressive on the growth. Just make sure it works and make sure that you have the discipline to do it properly. The main thing you got to learn is you got to manage yourself. You got to be good at following your rules, good at reviewing the strategy, good at reviewing the trades, reviewing the charts. All of those things will help you develop your strategy. So you want to make sure that you have an edge, and you know, it takes some time. It takes some time. This isn't going to happen automatically. I'm actually working with some students right now. This is just to kind of give you guys an idea. I'm working with some students right now, and we're working together. And I've been working with these students, this class, since May. Okay, and so now we're getting close to November, right? And the thing is, I kept telling them, you know, if you keep making steps forward, you're going to be successful. But it's not going to happen quickly, but every week you want to make a little progress. So we meet once a week, we go over our trades, we go over our strategy. And the cool thing is, I love seeing the progress that they made, but it didn't happen overnight and it didn't happen right away. It was happening because they were taking baby steps, little by little, building skills upon skills. It's like building a house. You start with the foundation, then you continue to work your way up. You build skill upon skill upon skill, and you continually review the process as it goes. Okay, so then the next part, which kind of ties into that, step number 7, is you want to stick to your plan. Once you have a strategy, you want to stick with it. Avoid emotional decisions and impulsiveness, right? Just remember that goes right back to what I said about the habits. Habits are consistency, and I'm going to hit my next step is very similar to that. It's not exciting, it's not fun, it's just what needs to be done. I'm just sharing what needs to be done right here, okay? And that's the truth. It has to be consistent and following a process. So then the next part is set up a daily routine. This helps you build your habits, right? Okay, so what does a daily routine look like? Well, including specific times for market analysis and execution. You should review your trading performance every day. And I believe in doing a self-check, right? Okay, how do I feel? What's my emotions? What's my, am I going to take a good trade? Am I seeing things clearly? Just take some time, ask yourself some key questions. Identify that sometimes a trader's worst enemy is self-sabotage, right? And so I really believe that mindset is critical, right? Especially in your daily routine, and that is have a good mindset and practice gratitude and thankfulness. Here's the thing, we see things with our eyes, and we have to be able to grab what we see we can accomplish the things that we see. If we have a vision for success in the future, we see it first with our eyes even before it happens. We visualize it, we believe it, we make it happen. Then when we see it, that's when we can achieve it, right? And so that's why gratitude is so important, because if you focus on the negative parts of your life, and I'm not saying ignore problems, I'm not saying live in a fantasy land, I'm not saying don't have a plan. Like, so a lot of people will say that, oh, well, you're saying all these things and that's just crazy. But I'm saying is focus on the good, celebrate the good, recognize the good, and more good will come into your life, right? If you focus on the negative, if you focus on the problems, if you focus on the bad, you're going to recreate the things that you're seeing, right? And so it takes actual mental training to be able to focus on things that are right in front of you that you might not see. You see what you look for, right? Success is hidden, but you got to look for it and you got to see it. And you got to, so daily in your daily routine, take a time to be grateful and to have gratitude for the success in your life. I do this all the time. I celebrate wins every day. Okay, what was a win for today? I teach kids to do this, right? What was your win for today? I just did it last night. I was talking to a group of young teenagers and I'm like, what were your wins? And one of the kids said, I don't have any wins. I'm like, really? There's not one thing that you could say that's positive in your life? And then finally, after working with him a little bit, he's like, well, I did get some food. It's like, okay, good. You were able to get sustenance. Let's celebrate that, right? And so it's a matter of not understanding that you have to look at the positive, right? And so build out that daily routine, include positive affirmations, look for the good side, do review of your performance, stick with the routine, really build it in there and build out good habits. And then also continuous learning, right? I build this into my habits. Okay, how am I going to learn today? What am I going to do? Am I going to invest in a course? I believe the best investment is investing in yourself. So I like to buy courses. I like to join masterminds. I like to join coaching. I like to do all of those things so that I can learn from other people. As a matter of fact, the guy that I interviewed that I hope you guys will come and check out, that grew his account up to like $4 million in a very quick period of time, he would sign up for free internships and he would literally learn everything that he could. He would go night and day studying, and he would be doing internship at these financial places and just devour. He was a devourer for learning. So be hungry. Someone that's continuously learning is a person that's hungry, right? They're hungry for success. They're hungry to learn new things. And I'm always hungry to learn. It's just part of my personality, and it's helped me build quite a bit of success. Okay, so then we want to go with building your account. You want to remember gradual growth. We want to start small and gradually increase your position size as your account grows. Okay, so slow and steady wins the race. Slow and steady wins the race. All right, now we don't want to try to do it in one trade. You can, if you want to do your strategy that way, you can though. And I could talk about that, but that's like you could go for big winners versus small winners. Well, step 11 is to reinvest your profits. Focus on scaling, focus on growth. And as your account grows, you're going to have to adjust your strategy a little bit, right? Because once you get to a certain size, then you're not always going to be trading the same way, or like you might be at the beginning, you might be going all in or putting in all of your trades on one thing. And then as time goes on, your account's bigger, you're going to diversify a little bit more, right? And you might change your strategy a little bit because of the size of your account changes things. Okay, and once you get to a certain level, I know that you could be trading just a little bit safer, right? Because you have something to protect. once you get to a higher level, you know, you make $500,000 in your account. Now you have something that you're trying to work for, something to protect, something that you are, you know, just takes a little bit of adjustment. So that's just something to consider. Okay, and then you also want, now I believe in looking at a monthly profit target. Okay, so calculate a realistic monthly profit target that will help you achieve your yearly goal of $1 million. Like, give yourself a framework, give yourself a formula, give yourself a way to make that happen. And so one way you can do that is to analyze your results month by month, looking at all of your trades. So if you're starting with a $250 account and you want to make $1 million of profit by the end of 12 months, well, you can do that by doubling your account balance each month. And so here's how it would look month by month. And the thing is, you can do this. I'm going to kind of run through some different scenarios of trades that you could take, but you could do this without actually risking a ton of money. You could actually do this with keeping your risk relatively simple, which is one thing that a lot of people don't realize. All right, so let's start with what this would actually look like. So if you started with your starting balance at $250, right? You want focus on a profit of the month for $250. So the first thing is you got to say, okay, it's going to take me an entire month to make $250. How much money how many trades would I need to make to win? How many trades would I need to take to win $250, to earn $250 in trading? How many? So the answer to that is, it depends on the size of your trade. It just depends on the risk of your trade. But if you're focusing on 2 or 3 trades a week, you know, you could do 2 or 3 trades a week, risking a certain amount of money on each trade. You lay that out, you find out how many wins, how many losses it would take, and you could do that. And so let's see if I can pull up see if I can pull up another screen here that kind of, this is one of the tools that I use all the time for helping me plan these things. And this is a risk to reward calculator. And this is one that I built for myself, but I'm going to just pull it over here. So this particular chart here tells you what you're going to risk, and it gives you winning percentage and other items. Okay, so with that being said, we could say I'm going to risk, for a $250 account, I'm going to risk $50. So we'll just type that in the box there. We're going to risk $50 per trade. Now, how many trades do I think that I can take in the month? How many? Well, I think that I could take, let's just say I'm going to go for 2 trades a day, because I don't want to be day trading. Or if I am day trading, I only want to take 2 a day. So I'm going to say that's going to be 10 trades a week times 4 weeks. So that's going to be 40 trades. Okay, so now if I take 40 trades and I'm risking $50 a trade, then I will look at my risk to reward ratio, which goes up here. So if I'm risking a 1-to-1 risk to reward ratio, that means if I risk $50 to make 50, right here is a $300 target at 58%. So if I win 58% of my trades and I'm going for a $50 win and a $50 target, I will make $300. So that is a reasonable winning percentage, 58%. So 58% is doable. You can do 58%, right? And so what would that be? That would be 23 wins and 17 losses. Okay, that's definitely something that can be done. Now, the next thing that you want to look at is, okay, now if you want to go the next month, right? Month number 2. So I'm going to go back to let's close this down. Let's go to the month number 2. What does month number 2 look like? Okay, so month number 2 would be $500, right? So your starting balance is $500 and your profit for the month, you're looking for a $500 profit. So let's take a look, and this is, you just take your time and you plan this out. Okay, what would I need to do? If I'm risking $50, let's just keep our risk the same, right? Because $50 risk on a $500 account is still pretty heavy. That's 10% risk per trade. Okay, so that's a little aggressive but could we make the 500 with the $50 risk? Well, what we could do here is, if we're targeting the 300, and all we got to do is either A, bump up our risk to reward ratio, or B, bump up our winning percentage a little bit, or C, take a few more trades. So you just kind of come up with a strategy that would adjust a little bit. So let's just say that we're going to, instead of taking the next month, we want to just take 20 trades, okay, or 20 additional trades. We're going to do 3 trades a day. Okay, now we get our target up here. We're at $400. Or if we hit 60%, we're at 600. So we're right in that range right there. Or we could just bump our risk just a little bit more and risk $55 and try to get our number up there. Or we could change our risk to reward ratio a little bit, 1.2. And we can't always control all of these things, okay? We can't do that. But what we can do is put ourselves in position to make it happen. And even if we don't hit our target, you just readjust every month and you just kind of focus again on consistency. It's not so much about how much money you make or hitting your massive profit goal, but it's about being consistent, following your process, and doing what you need to do on a daily basis to be successful in the markets, right? And so some months you're going to hit the target and some months you're not. And that's just the way that it is, okay? And so we want to be constantly evaluating, moving forward, and just being consistent and slowly increasing. And so every month you want to do that and just reevaluate and continually follow your daily process day in and day out. So let's continue. So obviously, I think you kind of get the idea of what we're looking at right here. So let's take a look at the next one. Same kind of thing. Month 3, $1,000 profit, starting balance 1,000, ending balance 2, and then we go to month 4, 2,000, 4,000. 8,000. And so once you get up there a little bit, it's definitely, it takes more mindset training. It takes more focus. It takes a little bit more dealing with those numbers, because really numbers they're just numbers, right? But it can be psychologically, those numbers you have to deal with those. You have to be able to handle a little bit bigger of a loss. But remember, as you're growing this, you want your percentages to be smaller and smaller as time goes on. You don't want to always, so the first month we were risking like 10% risk, but as time goes on, we want to be risking less and less and less. And so what I mean by less and less is I mean by percentage of the account. So let me pull this up just to kind of give you an idea. So we're on month number 6. We're going for $8,000 in profit. So, we want to risk a little bit more, but we still want to be risking less on a percentage level. So let's say we're going to risk 500 per trade. Okay. So 500 per trade, we're looking for 800. So 500 out of an $8,000. So we go 8,000 is what our starting balance is, times 0.05. So that's actually less than a 5% risk. So now our risk, is about just at about 5%. So the risk is getting less and less as you grow your account. And you want to always be, as you scale your account, as you continue to move forward in your trading, you want to always be you want to always be getting your risk tighter and tighter, right? Risk management is the name of the game. There's so many other things that you can work on, but risk management, you'll never regret focusing on your risk management. Okay, so let me blast through the last few slides here. We've got month 7, 8, 9, 10, 11. Okay, so with the last month here, let's just see what some of the numbers would look like on the month. Okay, and then so right here, we want to just bump it up. What about if we risked $5,000 on a trade, right? Okay, so here you go, got it, 5,000, right? $5,000 risk per trade, you're gonna make $40,000 if you hit 58% at a 1-to-1 risk to reward ratio. And as you adjust with your trades, you can do different things with those. You can see the different possibilities here. If you can, and I put a 2,000 to 1 risk to reward ratio at the end just to get a little crazy, but there have been times, I like to play around with this just to kind of see possibilities, but there have been times where I have made some really awesome trades, right? Where I've actually got like a 2,000% ROI. And I was just, playing around with it to say, okay, what if I was able to hit one trade a month at 2,000%? What if I was just going to go for some big home runs with a little bit of risk and try to hit some big winners, right? And so that's just another money management strategy that you can use to try to make that happen. Okay, all right, so that is that, and I still got a couple minutes left, so what I wanted to do is kind of review the trade that I took, but I might have one more slide here. Oh yeah, so visit my website, tradingstrategyguides.com. The thing about my website is that I have a lot of free education there, a lot of free trading strategies, and I also just interviewed, I have a podcast, it's called How to Trade It. I interviewed some of the greatest traders, and I just interviewed a guy that actually did what I'm talking about here. And so that's going to be in the show, going to be released in the next week or so. So you might want to go to my podcast. It's on the website. It's called How to Trade It. Subscribe, and then you can listen in because it was a really insightful interview. And I've benefited a lot from talking to these amazing people, and I've done it with the vision of helping traders get the tools and the resources they need by talking to the best, right? You learn from the best, you become the best by learning from the best, and to continually focus on learning. So I wanted to now, let me switch my screen here, and we're gonna just, we're gonna go over the chart for a minute. Let's see here. Okay, so do you guys see it now? Yeah. Okay. All right. So this is that same chart, and we entered down here on the bounce of this level, and I have a little 8 EMA, which I like to use as a reversal tool. And I like to trade in the direction of the 8 EMA as part of my strategy. So I like to use support and resistance levels, identify those key levels, and then use that 8 EMA as to get the current direction. So once a level bounces and then the price will get above that EMA, then I like to go into the trade. So if we're off of a level here, like we see on this trade, this one I made earlier, I don't like to take the trade until the price gets above the EMA. But you can see there's always been quite a few setups. They don't work all the time, but it works pretty good, especially if you're using it off of support and resistance levels. You'll notice here that there's been some very good trades along the way with this. And the thing I with the strategy I'm running right now, I don't usually have to wait for I don't have to wait for a ton of movement I just try to grab a profit once I get up to a certain level, and then, you know, that helps with the winning percentage. But I wanted to just do a little bit of analysis here on the S&P 500 because we're really in a down streak here just in the last little bit. We're at 400, we went from 438 down. But if we zoom out a little bit, I wanted you guys to see a couple things. Okay, so if we just go from year to date here, well, just from last year, this is our 52-week October. You're noticing we're in a nice channel, a nice upward channel since last October. Okay, and so I like to look at the S&P 500 a lot for a couple of reasons. Number one is I like to trade it. It's great for trading. And number two, it's if the S&P moves up, a lot of the other stocks will follow. So that's something to really keep our mind on. So right now we have some negative stuff happening. We have the MACD going lower. We've got the 50 period breaking. The 200 is breaking. And now we've got this ADMA crossing below the 200. And one of the worst things is when the 50 crosses below the 200. That's a very bad sign. And it did happen right here, and we got a little bit of negative action, but not too much. But right now, I never know where the market's going or what it's going to do, right? That's impossible. No one knows. But what I would say is that we're at a bouncing level here off this trend line. And actually, let me readjust this because now that I look at it, this I might have drawn that wrong. Let's see. See, we actually just broke that trend line, okay? So now that we have that in place, we're like, okay, this is not a good situation for us because we're making lower lows. So we go down here. This is how trends work, right? We make lower lows. Here's a new low, and then the high, the bounce, a lower high. We come down, make a lower low, okay? And then a lower high. Oh, now we come down and we make a new lower low. And so that's where we're at right now. And one thing we want to also notice is that we crossed below the 200 moving average and we broke this trend line. Okay, so those are two really negative things. We also just broke below on the MACD, just crossed lower. So this is an indication that we might continue to move lower. Okay, so with that being said, the way that I am going to be trading this is looking for bounces to the short side. You know, understanding what your edge is a great reason, a great way to really scale your account. So what I talked about in the growing from 250 to $1 million, find an edge and hammer that edge, right? And so one of the things that we can do right now is we notice that we have a pattern. Find that pattern and repeat it. So we got to move down, a move up. And so right now, if we go down here a little bit more and we get a pop back up into 420, that's a short zone, right? So try to be able to anticipate and wait for the market to do what you expect it to do. And then when it does it, then take the trade. So right now I'm expecting it to bounce a little bit, maybe go down to 410, I don't know, but at least come back to 420 and bounce. That's what I'm expecting. When it does that, then I'm going to be ready to jump and take the trade. And so how would I do that? Well, what I would do is I would watch for this thing to come up, and then I would look for a price action pattern, some type of candlestick pattern, something called an evening star, a morning star pattern, evening star to get in the direction of the trend, like what we saw on all these other bounces. So what do we see here? Like on this bounce, price came up. We get a fake break to the upside. Everybody thinks we're going to new all-time new highs. And then all of a sudden it didn't work, right? So that's a bearish price action candlestick pattern. And that's something that we can use, okay? And so let's take a look. Let's go ahead here and take a look at my 1 minute chart. It looks like I'm breaking down. No, I'm still kind of hanging in there. If we break lower here, like this is where I just broke below this moving average now. I don't like it. I'm kind of close to break even on the trade right now. So if it starts showing some more I should have closed it when I was talking. It went up here. I would have made a little bit of money. But anyways, I'm not going to risk a lot on this. If we break below this level right here, I'm going to close the trade. Okay. And then I'll look for another place to re-enter. And again, on the 1 minute chart, it's the exact same thing. You use the high and the low, you use support and resistance, you wait for breaks to go up and above the level. Okay. All right. Well, that is it. Think I'm out of time, but Rob, thanks a lot. And guys, if you're interested, go to my website. It's tradingstrategyguides.com. Sign up to listen to the How to Trade It podcast.
All right, thank you, Case. If I said I think I know the quote, should I share it?
What's that?
If I said I think I know the quote you mentioned at the beginning, should I share it?
Oh, yes, sir.
You have to set enormous to the edge of insanity-sized goals, because only when you do that will it bring out the best in you to find out what you're actually capable of.
Okay.
Sound right?
Who was that?
I heard it from a Billy Allsbrooks, but I believe Les Brown said it as well.
Okay. Yeah, I like it. I like it. And the version I heard, there's probably a lot of iterations. Different people are saying it like I'm saying it today. But yeah, no, that's good. Thank you.
Hey, thank you, Trace. Great stuff. Not only is your story incredible, inspirational, father of 9, military vet, blue collar worker who perseveres and succeeds, but your $250 to $1 million in a year plus trade setup. That was a great presentation. Thank you so much for making such a generous offer to our audience today, Casey. Just incredible stuff. Ladies and gentlemen, if you want to consistently find accurate entries, even with a small account, and have the ability to consistently make $10,000 a month profit trading, then the markets, then look no further. Mr. Casey Stubbs of Trading Strategy Guides at tradingstrategyguides.com has a solution for you. I've put his link in the chat box. Thank you again, Casey. You have no idea how impressed I am just with the presentation, the story, the everything. It's great to have you back, and we hope to see you again.
Thank you.
Have a great day, bud. Well, ladies and gentlemen, I mentioned at the top of the show that we have a great lineup, and our next presenter has a very impressive resume. He was inducted into the Traders Hall of Fame in 2007, and you've probably seen him appear on CNBC, Fox News, Bloomberg Television. He's the founder of BigTrends.com, which provides investors with specific real-time stock and option strategies and investment education to profit from significant market trends. Here to present how to trade same-week options in 48 hours or less is Mr. Price Headley of BigTrends.com. Welcome back to Trader's Corner, Price. It's nice to see you again. It's been a little bit.
Well, yeah, thank you, Rob. It's great to be back with you and everybody here, so I hope all is well.
It is. We hope you'll have the same for you.
Thank you. We ready to roll?
Go right ahead, sir. I
Let's
think I
do
see
it.
the right screen and we can hear you.
I appreciate it, Rob. Always great to be with all the good folks at Trader's Corner, and hope everyone is doing well as we hit the noon hour here, Wall Street time. I want to talk about how we like to trade same week options. These are the weekly options that expire every Friday, but we actually like to trade them, not day trade them, but actually hop in one afternoon and then hop out either the next day or the day thereafter in some cases. So I'm curious how many of you just, have traded options. If you have, give me a number of years you've traded, type a number in your chat box. If you're brand new to options, type a 0. If you're been the 20-year veteran, type a 20. I love to see what kind of an options experience level we have. And don't worry if you're new, we got a number of people who are. I'm a big believer that what I'm going to teach you today is this is a great bridge from stock trading and stock investing into options trading while still managing the risk. We've got a 0, a 3-year options trader on and off for a couple of years, 1 to 2 years, 15 years, 0. So we got a nice mix, and we got some new traders with us. So I always love seeing new traders and introducing you to concepts where you say, hey, I'm not an options trader. Well, maybe you could consider a small piece of this for your portfolio. I always encourage people to start small and build. So let's get right into it, talk about how we manage this. Because, one of the things I heard and hearing Casey talk before I came on is, talking about the markets, talking about not knowing necessarily what's going to happen next in the market. Let's face it, anything we trade, we don't necessarily know exactly what's going to happen, but you have to be able to trade under uncertainty and have a plan, and that's what I'm going to walk you through today, is how to create a plan that when it works, how you take your profits, when it doesn't work, how you get the heck out, limit your risk, and move on. So of course, everything I'm sharing with you today is based on our proprietary research and intended for illustrative purposes only. These are not specific advisory recommendations here today. As you know, stock and options trading have large potential rewards, large potential risk. The past performance of any trade system or method is not necessarily indicative of future results. See our terms of use on our bigtrends.com homepage for more here. So with that understood, I want to give you some very specific tactics. So we're going to talk about how we do this short-term options trading strategy with 0-day trades, where we could buy it one afternoon, be out the next morning, and even if we were in the trade for very little time, you still have 2 different trading days you're in versus out with limited risk on any one trade. So we're only going to trade on certain days of the week. We can only enter on 2 potential days out of the 5 days of the week. So we'll talk about that and how therefore you can increase your leverage getting closer to the expiration and yet still minimize and manage risk intelligently. And I'm not going to share with you one, but actually 2 indicators I like to use together. I call this double confirmation. It's kind of like 2 heads are better than 1. I find in this particular approach, 2 indicators are better than 1, and they both have to be freshly signaling on that same day. Okay, so you can't have one that's already in a buy and then the other one comes along for the ride later, even if it's a day later. They've got to both be crossing up to the upside for bullish trades or crossing to the downside together for bearish trades to give us that double confirmation. This is designed to avoid or at least minimize, reduce the number of fake outs, right? We don't want fake outs, we want true breakouts. So get rid of more fake outs, trade more true breakouts here. That's what we're focused on. And then how to use strategic stops and targets to put the trading odds in your favor over time. There's going to be losing trades. Anybody who tells you their system has no losing trades, you shouldn't walk, you should run away. Every system I've ever experienced in my trading career has losing trades. The question is how you manage them, how you're able to stay in the game, not just financially, but also psychologically. Because let's face it, we've got 20-year option veterans with us. We've got folks brand new to options. Options are a leverage instrument. You got to be able to manage that leverage intelligently. So we're going to talk about that. If you don't know me, I've been trading for over 33 years. I caught the trading bug while I was down as a student at Duke University, and upon graduating from there, for most of the 90s, was helping lead the nation's largest options newsletter firm. And then in 1999, started bigtrends.com. So as of next month, we'll be on our full 24th year of helping people around the world with bigtrends.com trades. So what I want to share with you today is a specific system that we call lightning options traders, about those quick strikes. And so I'm going to share with you these top 3 tactics here and get in with the first tactic being which days should you trade. So let's face it, with a weekly option, as you know, a weekly option means every single Friday there's a weekly options expiration. The old days, we used to just have monthly options that expire on the 3rd Friday of the month. But based on demand, people started to ask for more frequency. And as you know, the hottest trend in the options market today is 0 days to expiration options, what's called 0 DTE options. We are not doing that here. That's too aggressive, we think, for most options traders. I've experimented with it, and then what's happening with the 0 DTE options is you're seeing incredible intraday volatility created because of all the swings that can happen on a 0 days to expiration options. In fact, it's said that half of options volume this year, and certainly options volume in the SPY, which is the S&P 500, is geared around 0 days to expiration trades. You think, well, if that's where the action is, that's where you should be going. We kind of don't want to go that aggressive and have you freaking out on the final day of an expiration. We would much rather give ourselves a little more time to wait. So our goal here is let's not get in the first couple of days, and let's not enter in the final day of the week either. Let's enter on a Wednesday afternoon or a Thursday afternoon. So typically around 3 o'clock Wall Street time, Eastern time, either Wednesday or Thursday, up to as late as about 3:30, technically 3:45, but we try to get it out in that 3 to 3:30 window if there's a trade on a Wednesday or Thursday. So we could have a brand new trade today in a matter of about 3 hours from now. Why do we wait for 3 hours from now? Because we are using daily charts, and we want to make sure that our breakout signal is confirmed to get the follow-through action into the next day. So if we're buying on a Thursday afternoon an option that's going to expire the next day at 4 p.m., that sounds way risky, right? We manage the risk by buying the right kind of option for these same week trades. So we'll typically buy it on a Thursday afternoon, an in the money option to get rid of a lot of the time risk and basically just trade the underlying stock movement for the next 24 hours into the next trading day. And as late as 3 p.m. on a Friday, we don't hold it to the bitter end of expiration, so you know you can get out in advance. You say, why should you care? This sounds more aggressive if you're not as aggressive of a trader. Well, you might be interested in some growth opportunity, right? If you go back to this portfolio since inception, the beginning of 2020, that includes, of course, the pandemic, 33% haircut or so that the market experienced in just about 6 weeks there in the first few months of 2020 with COVID, the big snap back up as the Fed poured on the gas. And then, of course, the Fed tightening the reins and saying, okay, well, you know what? Now the Fed has been trying to slow the economy. Guess what? They haven't slowed it that much, right? We just had a new economic data report this morning that showed that the economy, GDP, global domestic gross domestic product, soared at a 4.9% annual pace. So much for the Fed slowing down the economy, right? That's why the market's down today again, because they're worried the Fed's going to have to do more. But the problem is, it's not just the Fed's job, right? Our U.S. government continues to spend like there's no tomorrow. Our deficits are out of control. We all know it. And so the reality is, of course, the interplay between these things is what's creating momentum up or down. Your job gets a lot simpler when you don't have to worry about what's the market going to do in the next year. We're focused on what big name stocks are going to do in the next 24 to 48 hours. I believe that's a lot easier to predict than what the market's going to do in the next couple of days or a couple of weeks or a couple of months or a couple of years. So the bottom line is that we believe that, we can find edges and help you to extract that here. So you can see our portfolio since 2020 through today, my staff's so good about updating this stuff to current time, is looking at, if you start with a $5,000 account, you put in no more than $1,000 into each options trade that we called out, then your portfolio, looking backwards, would have grown from 2020 to now to more than $20,866 gross profit. That's before commissions or subscription investment. Hang around with me to the end because you're going to get a fantastic way to get my lowest subscription starter test drive and get you also learning while you're earning with some extra bonuses for you. Remember, past performance never guarantees future results. I am not making any prediction about the future here. Future results will vary. They could be better, could be worse, right? We know that our objective is to keep executing our system consistently. I'm going to get into the system here in just a couple minutes, but the idea is that also, if you say, what have you done for me more recently? Look at the bear market of 2022 and the mostly bull market of this year, even though, the last few months here have been bumpy. But, we had a really nice vertical ride up in the first 7 months of the year this year. You say, okay, even with the bear market and then a bull market, a $5,000 account grew to over 17,000 gross before commissions and subscription investment. You made 12,142 gross profit. That adds up all the winners and losers before that commission and subscription investment calculations are factored in. And by the way, commissions have come down so much in options in my 34 years of options trading, never a better time to trade options than right now. So the beauty of this is that we're not telling you to go crazy with the amount that you allocate. We're not compounding these results either. We're using the same fixed dollar amount, even as the portfolio grows. We're not trying to grow our allocation. We're just saying stay consistent with your capital allocation. And I think you'll find you get a more consistent experience in how your portfolio grows. And even when you have drawdowns, it's more manageable if you're not kind of compounding your way up there. Now, how do we find these trades? I'm going to show you, but let me just first remind you about this second tactic here. When it comes to momentum, we find that two indicators, both freshly signaling together, are better than one or the other. We like to use oscillators, but actually in a very unconventional way. These oscillators are similar, but they are not the same. And that way we're getting kind of two different looks at the momentum. Is there enough momentum in that move to justify making that trade, to putting capital at risk? as you know, options are a leveraged instrument. I like to call options a double-edged sword, right? When it's working for you, it can be amazing the power of that leverage. If it's working against you, you can really get yourself in trouble if you don't know how to manage these trades properly. That's why people come to us at bigtrends.com to find these trades, but more importantly, it's easy to get in. It's harder to get out. Our system makes it easy on both sides. So here's a recent winner on Roblox, RBLX. This is maybe not as household of a name as some of the other ones I'll share today, but Roblox has become a big kind of a online gaming app provider here, RBLX. And so you look at this and you say, okay, so what's happening on this chart? We have two different oscillators shown below. One's in red when it goes over bot. Red's supposed to be bad, right? I didn't even change the color there. I just said, look, this is supposed to be bad when it crosses up into its upper threshold, right? Shouldn't it be too extended? Well, our experience is if both that one and then the other oscillator in black both cross up on the same exact point there, in that last hour of the trading day, this is a daily chart. You can see this one's pulled out of TradeStation here, but the idea is you can use any platform as long as you can execute your trades in real time. We'll send a real-time email to subscribers and a real-time WhatsApp update to your smartphone to say, you know what, we want to get into buying these call options. Remember, if you buy a call, if you're new to options, a call gives you the right to buy the stock at a fixed strike price here of $28.50. When we got that signal, Roblox was trading closer to $29.50. So if you think about it, if nothing happens, you hold this to expiration, it stays at 29.5. If you bought it at 28.5, it's worth $100 or $100 a contract. You're paying a little bit more than that. You're paying $1.15. The other 15 cents is what's called the time premium. So you're paying $115 to control something that if it doesn't move is only going to be worth $100. So, but the beauty of this is that most of that premium is what we call intrinsic value. That buck in the money from 28.5 is now 29.5. That's $100 per contract out of your 115. That's intrinsic value. That if it stays flat, you're only going to lose the time portion of the trade, which is the 15 bucks out of the 115. What, maybe in this case about 14% of that option is time risk, 86% of it's intrinsic value. Now that was called out on a Wednesday afternoon, October 4th, just looking back a few weeks ago. So we know that our first goal is if we can double this trade, we will take the whole trade out of the double, right? So if you're putting $1,000 in, theoretically you could turn it into about $2,000, and you could say, okay, in this case you get what, 8 contracts here for like $920. You can make a double $920 on your $920 invested. You couldn't buy that extra contract because it would push you over $1,000 maximum, the way we calculate our tracking. But you can put more or less in as you wish, right? The beauty is you can put in one contract at a time. It costs you $115 every trade. And this, if we're calling this out every single time, right? It's going to vary, but bottom line is that these will usually be between about $1 and $2 on these option contracts to get in, $100 to $200 a contract, give or take. But in this example, it didn't get. You see, it trended up here. Got up to about 30.5 on day 2. That's on the Friday expiration day. And we have a rule that says on the expiration day, if we haven't gotten our 100% target or our stop loss, we will say exit at 3 o'clock Wall Street time with an hour to go before these options would expire. We never take them into expiration. We never want to see that get exercised or signed where we basically would try to acquire stock. That's not our game here. Our game is to say be out by at the latest 3 p.m. on that Friday. In this example, that option at that point, we sent out that final exit alert to subscribers. We never leave you hanging, by the way. We guide you through each and every trade. Then you say, okay, look, we're looking at, and the question comes up from Rajesh, how many trades? About a trade a week. So typically about 4 trades a month or about 50 trades a year with this portfolio. So the idea is that, look, we're looking at, got out at $1.94, $194 a contract versus the $115 on the way in. So you think about that, every contract you trade in this example makes you about what, $79 before commissions. Commissions are less than $1 a side round trip, right? $1 or less. And for a lot of people are paying $0.50 a contract if you're semi-active to active. That's a 68.7% gain in basically 48 hours held. That on 8 contracts you made $632 on your original $920 investment before commission. So the idea is that past performance never guarantees future results. Future trade results, of course, are going to vary. But our first goal is going to be to make that double target. Let's look at one that did get the double target on Best Buy. This is a bear example now. Now you flip the script and you say both of our indicators, our oscillators, should be crossing down underneath their lower, what we consider to be bearish thresholds, right? If you get an example like back here where this one crossed below a few days before, but this other one was not there, it had already crossed below, then we would not take that trade there. And you can see next day it's down a little bit, then the next day it shoots back up, right? And also it's got to happen on the right day of the week. That was a prior Friday. But even if it was on a Wednesday or Thursday, we wouldn't have taken that prior setup. But then we get that setup kicking in here. That was on August 31st. And we said, let's get into the September week 1 71 strike puts for $1.07. That's $107 to play the downside. If you're new to options, remember a put gives you a right to sell the stock at the fixed price of $71. Stock is trading here near $71. So it's actually almost an at the money option. But then the next morning it pops down here to about 69. So that 71 strike put at 69 is worth $2 intrinsically plus a little bit of time. We got out for $2.15 off of our original 107 entry. Cost you $170 per contract to get in, so that would get you what, 9 contracts. So you're putting $1,000 in, will cost you $963 to get in, and you're making a little bit more than that, about $970 on the way out for that 100.9%, roughly doubler the next morning. You can see it ends up reversing after that. Sometimes it'll keep going, sometimes it'll reverse. We are playing a short-term momentum pattern here, preferably from one afternoon to the next morning in an ideal scenario. Obviously, the quicker you can cash out, the better, right? So if you can get your double, anytime you can get it, we don't just sell part of a position, we sell the whole thing at a double whenever we get those doubles, okay? We've learned that while sometimes they'll keep going, sometimes they'll reverse, and we want to take that bird in the hand of the double when we can get it in a day or two at most. So as you can see here, we're talking about both bullish call options purchases and potentially put options purchases. To me, this is why you don't get hung up in worrying about what's the market going to do next week, next month, next year. You say, look, we're trading a short-term momentum pattern. The pattern tells us it's fresh because both of the oscillators are signaling at that same last hour entry, whether on a Wednesday or a Thursday. If we're not getting a signal on both, we won't force out a trade. We'll never force out trades and go for a quantity of trades. I much prefer high quality trades first. There's going to be some weeks where we don't have any trades. There's some other weeks where we might trade on a Wednesday and again on a Thursday. So the idea is that, look, let's make sure we're getting accurate signals that have worked for us over time, looking back at the history of each of these big name stocks. Now, here's another one we want to show you on puts. This is on Wayfair, online retailer. And this is pulled out actually out of Thinkorswim just to show you can set this up on your end, whichever type of platform you like to use. But you see back here that we're getting our cross under point happening on both of the oscillators here, right into the close of that particular bar there. Stock is trading here near $50, maybe 50 and a quarter. We're buying the 51 strike puts. And so we're playing for about a couple point move down in the stock, and you see that's what happens the next day. It pops down here as of that was October the 16th, and makes us our double. We could have gotten $1,000 invested, so we made $1,000 in gross profit before commissions in the next trading session, right? When we say one trading session, we mean the next one, because we were in the prior afternoon, we're out the next day. So you don't have to worry about day trades with this strategy. And that's very unusual for a quick trading strategy that's 1 to 2 days before the expiration. But we manage that by going more in the money as we get closer to expiration and then looking for that quick pop. We can book the doublers when we can get them and go on from there. Now, let's face it, not every trade is going to win. There's going to be trades that miss, and you've got to have a plan on how you get yourself stopped out. So why only Wednesday and Thursday, says David, if you got a signal on a Monday or Tuesday? Our feeling and our history showed that, you know what, you're paying more time premium if you're in a Monday or Tuesday. You got to go closer to an at the money option, and that's changing your risk reward dynamics where you've got more time risk if you buy them too far away from the expiration. So here's an example with ON Semiconductor. Look, both of them were signaling here, fresh cross-ups. You know, semiconductor stocks have been hot, right? Looks like a great looking breakout here. Stock's trading here near 76 and a quarter. We're buying the 75 strike call. It's more than $1 in the money. We're paying $1.53. Obviously, if that stock had carried on up towards maybe 78, we could have doubled those options, right? Didn't happen. It opens flat to a hair lower, and then it starts rolling over. And so when we hit our stop out point, our stop is a minus 50% loss. Now, you can get a little bit of slippage. Slippage is like we're trying to get out 50%, but we know we need to be out. And we're telling subscribers just go ahead and blow this thing out. We got out at 75 cents. We took a slightly worse than 50% loss. It was about 53% loss. And you say, oh, that's not good. Lose half of your money on a trade. This is why you don't compound your capital. If you could lose half your money on one trade, double the next trade, lose half, double, that would be a really healthy system, right? Because if you're putting $1,000 in, you lose 50% or so, you lose about $500. Next trade, you put $1,000 in, you make a double, you make 1,000, lose 500, make 1,000. You'd be averaging $500 over 2 trades profit, which would be $250 profit per trade. We call that your trade expectancy over time, right? If you've got a plus 250 trade expectancy, you know, it's kind of like, you know, knowing that some trades are going to work, some trades aren't, you're going to be pretty happy to make each new trade if you've got a healthy, positive trade expectancy. That's what we look for in our trade systems. Obviously, we can't guarantee that the next trade is going to be a double or a gainer. There's going to be losers. There could be more than one loser back to back. You could have 2 or 3 losers, but you could also have 2 or 3 doublers. You know, the idea is that, you know, you're looking at playing the odds over a long sample of trades, right? So you really want to make sure you're managing that. So we took the 53% loss there. You see, if you held it to expiration, you'd had 100% loss. So you're trying to kind of cut off the legs of the trades that don't work. You say, well, why not take a 20% stop out? Because that will whipsaw you and end up causing you to miss out on good winning trades that might have been at a brief loss at some point or whipsawed you and faked you out, right? So the idea here is let's focus ourselves on how many times can we get these doublers, right? If you go back and look at our history, you say, okay, 50% stops, 100% targets. It doesn't take that many doubles to generate some pretty healthy net returns over time, even with when we hit our stop losses, right? If you look back at how many times we had doublers or more over the past 2 years, we had 31 trades that doubled or better over the last 24 months. Now, like I said, if you look at, if we were doing a trade a week over the last 2 years, that'd be like 104 trades. That would be a pretty healthy ratio, right? 31 of those trades doubling. That's saying, okay, that doesn't mean all the other ones hit their stop outs. There's going to be times where we just hit a time stop and we take a smaller gain or a lesser loss at the hour before the options expire. But the idea is that you can reach out to us at our 800 Big Trends line and get a full tracker and study it at your heart's content as you wish. But sometimes you really get big outlier winners way past your double target too, right? These are not very frequent. These are why we call them outliers. They won't happen that often, but when they do, it's like getting multiple doublers all at once. This was one we did on First Solar calls, FSLR, and you can see there was our cross-up point there. It was the prior, not this July, but the prior July, we got this breakout on First Solar. Stock was trading near $77, and we recommended the July 77 strike calls that were going to expire just 2 days later. Now notice what happens. There was a big surprise vote in Washington that said let's put more money into renewable energy, and solar was part of that. Stock had finished at 77. We had paid $249. So if you put in $1,000, that would get you 4 contracts for $996 invested, right? At $249 a piece. That was our average entry price. Next day, it opens just under 90, right? At 90, those 77 calls are worth 13. So say 79.5, they're worth 12.5. That's a 5-bagger. You can see our average exit price was a 407% gain the next trading morning. So the gap, the big G there, worked in your favor. Sometimes gaps can work against you. Sometimes they can work for you, right? The benefit of if they work against you, you can't lose more than you put into an options purchase. If they work for you, you have theoretically what's called the asymmetric benefit of much bigger gains than your 100% loss, right? We made 407% if we were theoretically risking 100% risk on any one trade. This is why we tell you not to load up on any one trade. Take a slow but steady approach and be around for those that can win. You see, hey, you can make even more money the next day. We're not in that game to play the woulda, coulda, shoulda, or the hope mode. If we get more than a double, we take it down, book them, Dano, and move on. Now, we think of common issues that traders have. Everybody's in this line here looking for the next magic indicator, right? The next hot name, the next tip of something that's going to get taken over, or something that's going to be the next Tesla or the next Microsoft or the next Apple, right? But the idea is that, we did the research for our Lightning Options Trader subscribers to help you find these opportunities. And more importantly, we guide you every step of the way. We never leave you hanging. We don't throw stuff against the wall. We help you develop a plan of this is what you want to do to execute. If you can focus yourself on execution instead of having to find the magic indicator and worrying how right or wrong you're going to be on your next trade, if you can focus instead on saying, look, I've got an edge over time, your job just becomes so much simpler to just say, every time I call out one of these trade alerts telling you to get in here or get out there, you just execute it. Your job is a lot simpler, right? So now you don't have to play the guessing game, the waiting in line for the magic indicator, the hope mode, the hopium, as one of my longtime Big Trend students call it. That gets people in kind of hooked in the wrong way on what to expect next. If it's not working, we'll stop it out. If it's working, we'll take it down at a double. If we don't hit either our target or our stop, we'll tell you how to get out before the expiration there. So quick recap here. We enter on a Wednesday afternoon or a Thursday afternoon. So like I said, our very next trade could come between 3 and 3:30 today here in just a few hours. We wait for both of those indicators to be confirming together. I'm going to tell you how you can get a lot of continuing education as part of this special offer I've got for you here in a couple minutes. But then that risk reward ratio is set up to help you benefit for the fact that you can make double, but you can only lose half on any one given trade. By doing this consistently over time since the beginning of 2020, just a quick reminder on trades, you look back and you say, okay, so you could have taken a $5,000 account from the beginning of 2020 up to over 25,000 here, 20,866 gross profit, adding up all gains and losses before commissions and before subscription investment. This assumes you would put in no more than $1,000 a trade with no compounding, right? Knowing that we can't guarantee the future, past performance never guarantees future results. But the idea is looking backwards, you can see that's including the bear phase of COVID. It's including then the bounce back post-COVID, and it's including, of course, the bear market year of 2022 when the NASDAQ got just trash and even the S&P was down over 19%. And then, of course, the bounce back this year. So the idea is that you don't worry so much about market gyrations. You're worrying more about catching the next major move in an individual stock name with these short-term weekly options. It's fun when you get nice comments from new subscribers like Robert M. said, I just started, got my first Lightning CRISPR trade. CRSP was the biotech name we traded there. Great profit with a bunch of dollar signs, he said. You can see Stuart O said, hi, my first trade, Big Trend Spectacular winner. Again, I can't guarantee that. LOT is the short acronym for Lightning Options Traders, what we call this service. We got to put on PNC. He actually made a multiplier on that. And so again, I can't guarantee what your first trade is going to be, but look at it as a plan for how you can get yourself pointed in the right direction over time. Never load up. Don't come in saying, okay, I'm going to really pour it on one trade. Even after a string of winners, never load up after a couple losers in a row. Don't bail out either. So if you say, well, how can you take advantage of these real-time trade alerts when we get a new signal? I've set up this special Lightning Options Trader package. And by the way, you're going to get, as part of this package, you're going to get the training on the indicators with some extra special bonuses I'm going to throw in here. So I know I can only cover so much in 45 minutes. That's just, I know I'm going fast here, but the idea is that I'm going to give you multiple hours of bonus educational training here today that we just decided to throw in kind of at the last minute. as an extra value add to say, look, we care about your education, we care about your training to be successful as an options trader, even for those that have never traded an option before. This is a great combination package here, where I'm going to give you 3 months, the next 90 days of Lightning Options Trader alerts. So that's basically saying the next 13 weeks worth of trades, I would expect that you'll get at least 13 trades. But more importantly, I'm going to give you access to all the specific settings and rules, what the indicators are, what the parameters are, so you can set them up on your own trading platform. I'm also going to give you weekly video training with me every Monday at 6 p.m. I pop a new video for Lightning Options traders that you can watch and learn. I'm going to give you a dedicated email to me and my analyst team too. So if you've got a question about the Lightning Options Trader trades, you don't understand why we made a trade, we'll refresh you on it, okay? This alone, if you look at my website, 297 bucks a month times 3 months is an $891 value. But wait, I'm going to throw in some extra bonus content here for you. I'm going to give you, if you're one of the first 15 buyers today, I'm going to give you access to my Quick Options Bootcamp course. This is several hours of training at no additional cost. So I'm going to throw in the Lightning Options Trader System revealed in depth. That's a full hour session. Second session, I'm going to show you how I scan for these every single Wednesday and Thursday with me and my team looking for new trades for Lightning Options Trader. You could actually do this yourself if you wanted to and find even more opportunities on top of what we share. So you can use this for your own trading benefit over time. And the third session is how you keep yourself in the game through the ups and downs. There's going to be highs and lows in any trading method. You've got to be able to stick with it. So we do a lot on trade management psychology to boost your long-term success as an options trader. This would alone would be worth the value of this package. Plus, it's $297 value, but I'm throwing it in as an extra bonus for you with no additional charge today. So when you buy the 3 months with the 3 educational resources, $891 value plus the boot camp value, multiple hours of training here, we're talking over $1,100 of total value, almost $1,200 actually. Slash that $1,100 price point down to just 177 bucks if you act today. So what we did is we set up a special link, and I'm going to come in and answer any other questions here in a minute, but this is the link we set up for you. Note that it's not a www link. It's a members.bigtrends.com/LOT3 trade link. So I'm going to actually type it in for you real quick if I can here while I'm kind of just sharing with you how this page works. members.bigtrends.com/LOT for Lightning Options Trader. That's an O, not a 0. LOT3. Okay, now that page will take you to a really simple order page. And what's cool about that order page is I want to point something out to you. Usually I would best price I would offer my bootcamp add-on would be an extra 77 bucks. Don't hit that button today. We're going to add it on for you at no charge. So that 77 just became a $0 add-on, but with a 3-hour plus lifetime access to the bootcamp training. So you get that for life. You're buying 3 months of trade alerts for Lightning Options Trader, so you can try that for the next 3 months at 177. I think you're not going to just like it. I think you're going to love it. There's no promo code to be applied because I've already knocked it down from an $891 normal cost to just 177. And you get the bootcamp bonus today. We'll just tack that on to your subscription and say you now have lifetime access to the 3 hours of bootcamp training on how to be a quick options trader and be successful at it over the long haul, right? That's what we want to set you up with. Obviously, we can't guarantee any results, with the idea is that with the education, with knowing that we're going to guide you every step of the way over the next 3 months on these trade alerts, I think after you see how well we do for you, you're going to want to continue after that. But there's no future commitment. It's just a 177 one-time investment you're making today to lock in this tremendous value. By the way, when you look at that page, you got your credit card info up here on the left, your billing information for your credit card, or at the bottom of the page, you can also click PayPal and it'll take you to a PayPal setup to do it that way. Once you're ready to go, just hit the I agree to the terms and conditions, which are hyperlinked here and also hyperlinked at the bottom of the page. So you can check that out. Again, we're coming up on our 24th full year in business this coming month in November of, I started Big Trends November of 99. And also we've got our 800 Big Trends number shown up here in the top right of the page. So if you have any trouble with your order, contact us at 800 Big Trends, because this is offers with the bootcamp bonus is only available to the first 15 buyers. And you can see you can also email my customer service group at clientcare@bigtrends.com. So that's the beauty of that. Okay, now, so remember, go to that link. It's members.bigtrends.com/LOT3. I got a question from Rajesh saying, what happens if you don't get out of the trade within the trading hours on Friday? I mean, if the option's in the money, then theoretically, yes, you could acquire stock if you're not paying attention to it. But you know that you should be out by 3 o'clock Friday, even if you're holding a trade. And you can always call our team at that 800 Big Trends number. You can email us, and we'll basically kind of confirm that, yeah, we just sent an alert if you didn't see your alert. And that's why I also recommend you not only have your email alerts, but also you get set up for, we send WhatsApp as another backup to your smartphone to remind you, yes, we're getting out of this trade 3 o'clock on any Friday. If we're still in it, we didn't hit our 100% profit target, didn't hit our stop loss, right? If that happens, then yeah, sure, that's how you would manage. Now, by the way, let me also show you something else, which is how we send out these trade alerts. Because I mentioned roadblocks earlier, right? And this is one that we called out back here. You can see it was a new trade recommendation back October 4th. So we like to show you ones that have obviously expired. This was going to expire October the 6th. Those were the week 1 options, right? So that's something where this is how clear it is. It was sent at 3:18 p.m. back on Wednesday, October the 4th. So we send that alert out via your email, real time, and also you want to get it via WhatsApp to get it on your smartphone. So it's hitting real time. Boom. You need to get in before 4 o'clock. So we're saying get in at $1.30 or less. I think our average entry was actually $1.15. So when that gets sent out, we now know, okay, we get our entries. We know that we're in at $1.15, and then we send a new alert out to you the next morning where we're saying, okay, here's your target. We're in at $1.15. You want to get out at 2.30 or higher on your full position. That's the double target. Or, well, we're in at $1.15. We're putting a stop in at 60 cents, which is slightly less than the 50% stop out, but we know if it hits 60, it might get filled at 59, 58, 57, 55. Any of that's possible. We know that that's how we have to manage the trade. 50% stop loss, or give or take, and then 100% target profit. And so we'll guide you through that so that when it does get hit, I'm just going through and kind of showing, okay, you know what? We actually reminded people, okay, this was what we said was, look, it's in the last hour of the trading day. We're saying get out of this trade, sell to close that trade at $1.90. And we were filled at that, I think even maybe a little bit better than that. Our official exit was $1.94, okay? So you see it there. So we're guiding you every single step of the way. That just kind of gives you a quick walkthrough on what it looks like to get entry and exit instructions from us and not have you worrying about what you should be doing. So remember, if you missed it before, it's a tremendous past history. Can't guarantee the future. You can see the past history, $5,000 account grew to more than 25K from 2020 to today. And remember, that package looks like this. The 3 months of Lightning Trader alerts, Lightning Options Trader with the Quick Options Bootcamp. When you act today, that's more than $1,100 of value. Slash that down to just a one-time investment, $177 at that special link page, members.bigtrends.com/LOT3. So it's not a www. Don't try it that way. But if you're having any trouble, you can call us at 800 Big Trends or email us clientcare@bigtrends.com. We'll walk you through what you need to do to take advantage of that. So remember, we had a number of people that said they're brand new to options. This should not worry you. You can definitely take advantage of this with 0 day trades, getting in one afternoon, getting out the next day, or possibly the following day. In this case, it's Thursday, right? So we get in today at 3 p.m. If we get a new signal, I can't guarantee we'll have it, but if we do, we well could. Between 3 and 3:30, we'd send you an entry instruction like I just showed you an example of with roadblocks. Then we'd tell you what to do with that trade come tomorrow morning. And if we didn't hit our target or our stop, come tomorrow afternoon at 3 o'clock. If we're in the trade, we'll tell you at 3 o'clock, right about there where it's got to get out, time to go. Here's your exit instruction. So you are never, ever left hanging. When I launched Big Trends almost 24 years ago, November of 99, that was one of my first objectives because I'd seen so many other services that just threw stuff against a wall and then didn't tell you about trades that weren't working, only bragged about the trades that were. We know it's reality trading, folks, not fantasy trading. We know we're going to guide you through every single trade from the beginning to the end. You are never going to be left hanging. We're there for you. That's why we've been in business now coming up on 24 years next month. So thank you. I appreciate everything. And basically, I want to thank Rob and all the team at Traders Corner that do such a great job of setting up these events with a lot of great fellow traders and a lot of different ways you can learn. What I encourage you to do from all the content you take today is find the one that resonates the most with you and focus on doing one particular new strategy well. Okay, so bottom line from there, William, regular monthly price is actually $297 a month. This will not auto renew. Try it for 3 months. We'll be talking with you and you'll be wanting to talk with us about why you want to continue, in my opinion, after your 3 months are up. Let me hand back over to Rob so we can keep on schedule for our next presenter. Thank you again, Rob, for having me, and keep trading well, folks. It's always such a pleasure. Take care.
Thank you, Price, for coming back. And I love trading same week options. And in this market, holding for 48 hours or less seems like a great plan, as well as such a favorable risk reward ratio. As usual, your technical analysis is always spot on, and we always love having you on the show. Ladies and gentlemen, hey, it is. And I was excited when I saw your name on the list.
Oh, thank you, Rob. Always a pleasure.
You're always welcome. But ladies and gentlemen, if you want to learn more about trading same week options and be in and out of the position in 48 hours or less with amazing precision, then you can find Price's special offer in the chat link in the chat box. He and I both put the link on it. You can find him at www.bigtrends.com. Thanks again, Price. We can't wait to have you back again. Hope you have a great week.
You too, Rob.
Ladies and gentlemen, that was Mr. Price Headley of Big Trends. Let me just make a little switch. And I mentioned at the top of the show that we had a great lineup, and our staff at Traders Corner sifts through hundreds of pro traders to bring you the most credible and qualified to participate on our shows. And our next presenter exceeds all of our standards. He started trading in 2006, trading firm money while attending the University for Finance and Math. After that, he became completely hooked on trading the market, working for hedge funds, prop firms, technology companies, and individual traders. As a chartered market technician, he uses the technical knowledge in combination with years of quantitative and algorithmic trading to combine the best of these two worlds and create a unique trading style. Here to present Redefining Relative Strength is Mr. Michael Nauss of Trade Ideas, and I have to say that the idea presented is one of my favorite and changed my trading for the better.
Oh, well, I'm glad to hear that right off the bat. That's fantastic.
So, do you mind if I share
okay?
it, or do you want to work to it in your presentation?
Sure, go right ahead.
He talked about not buying oversold stocks and selling overbought ones, but to buy a stock that fails to get oversold. And that single principle has increased my profitability level amazingly. So thank you for that.
Awesome. And that will be a component of what we go over today. So that's fantastic. I appreciate that.
That's all right.
Awesome. Okay, everyone, let's get started here. I think you can hear me and see me okay. That's fantastic. So today we're going to talk about how we're going to adapt to macro shocks using relative strength. Again, relative strength being one of the most commonly used and commonly sought after analysis of the market. And we're going to talk about how we adapt this concept. Relative strength is something that can be used in a handful of ways. We're going to go over those and traditionally and prove to you why and how they work. But then from there, we're going to talk about how we can reinvent this topic, how we can take something that we know works and change it up. And as always, at the end, I'll be showing you some of the cool stuff that we're doing over at Trade Ideas, but my goal with these presentations are always to first educate, give you guys something to take home, whether or not you're interested in checking us out at Trade Ideas. And then after that, if you want to make your life a little bit easier, a lot of the concepts that I cover will be talked about. I have the chat open here, and then I also have the questions open as well. So feel free to chat as we go. Okay. So first, who am I? Who's talking to you today? So a lot of, I already had that great introduction right off the bat, so I won't go over everything, but my name is Michael Nauss. I'm a chartered market technician, which for people who don't know, essentially the CFA. A lot of people know the CFA, but focused on technical analysis as opposed to fundamental analysis. So yeah, I started trading in university. I started trading firm money there. They had a little job fair where they were recruiting mostly video game players to trade in the prop firm. So this was before the age of HFTs, when in fact these prop firms were the HFTs. So that's kind of where I started. After that, I worked in 10 years in the hedge fund space. This was around the Bernie Madoff time, which if people don't know about that, I keep forgetting how old I am, but if you weren't living in that time, definitely check out that Netflix documentary on Bernie Madoff. It was really, really well done on a way to summarize what happened there. But long story short, nobody trusted each other in the industry for a long period of time. So there was a lot of demand for firms like mine who would check out what hedge funds were doing. Now, for me, this was awesome because my job was essentially to go into a hedge fund and speak with their portfolio manager and their traders and figure out how they were trading and what the risks of their trading style would be, which was a great way to fast track being exposed to a whole bunch of different trading styles and philosophies. After that, I have my Kaya, which is an alternative investments designation, which we won't really talk too much about, and my CMT. I have a little website called Stats Edge Trading where I essentially just share my thoughts on the market completely for free if you want to check that out. And there's just my Twitter handle. This is also, I have the speaker notes over in the other monitor I almost missed. It's also where I talk about Trade Ideas as a software provider, right? We are not an investment advisor. I know I've been watching a lot of these presentations. You'll get this kind of stuff a lot, but the legal team gets mad if we don't say it, right? Past performance isn't indicative of future. We sell kind of the picks and the shovels. We sell the software that will allow you to be a better trader. We do not provide investment advice. But okay, so before we talk about redefining relative strength, we first have to define relative strength and talk about what we're talking about. And I'm going to prove to you mathematically with studies as a quant, that's something that I love to do, that this actually works and why it actually works. So relative strength, simply put, is a performance of a asset to a benchmark or an asset to another asset. We will talk about the RSI indicator and how we're going to use that, but just note that this is not about the RSI indicator. This is about this concept of relative strength. And I have some charts to kind of show this. So the top one here, this is ELF, which is a makeup beauty supplier. And then the bottom is the S&P 500. So the dark line is ELF. The pink line is the S&P 500. So quite obvious, right? You don't need to be a CMT to say, hey, at any point in the last handful of years, it would have been better off to be owning ELF as to own the S&P 500. The S&P 500, 20% up. I think this was from the beginning of 2021. I did this, and then 430% in ELF. So just comparing those two things. This next one is, what if you don't want to compare something to a benchmark, but you want to compare it to its competitors inside the same space? We have Lilly as the dark line and Pfizer as the pink line. Eli Lilly is doing part of that whole Ozempic thing, which is obviously taking off for them. Pfizer, not so much, down 31%, where Eli Lilly is up 100. So the idea is that we're comparing one asset to another. Now, why would we want to do that? And do we have any proof that this concept works? So as mentioned in my intro, I am a quantitative style trader where most people will take fundamental analysis and then they'll take technical analysis and they'll combine those two things. So for example, let's use the Eli Lilly for example. I think this Ozempic is going to be a big thing. It's going to change the world. I actually read an article that it was bullish for airlines because the planes would be lighter if everyone lost so much weight. But whatever fundamental reason you have, As a technician, I hope then you're then backing that up with technicals. You're saying, okay, that makes sense. I like this fundamental, whether it's AI, whether it's Ozempic, whatever it is, that I am backing that up with some sort of technical analysis to, I'm going to only buy this thing when it's in an uptrend or when it breaks out or whatever have you. Now, I am a quantitative / technical analyst. So I look at the quantitative side. I say, okay, prove to me that a concept works in the market over time, and then I will apply my technical analysis thinking to that. So I'm going to go over a couple studies real quick. I don't want to go over time here, so I'm going to go quickly through these, but I'm just going to leave these up for a second. If you want to look up Jadish in 1993 or the Black Star study in 2005 or Medfaber in 2010, these are just 3 of the studies I pulled out proving this concept of relative strength, beating the market in the long run. So first is Jadish, who took 1965 to 1989, and that's when the study was done. That's why I stopped in 1989, and simply said, what if I only take the top performers from the last 6 months, and then I hold them for 6 months, and then repeat. That was his entire investment philosophy and concept when coming up with this study. Noticed a 12% year-over-year increase, simply buying whatever worked and balancing a portfolio into whatever worked over the last 6 months, and then applying them to the next 6 months, and so on and so forth. The next study here from Black Star Funds basically just said, what if I go even simpler, and as opposed to ranking things by performance, I just bought stocks as they hit new 52-week highs. This is basically showing the percentage of names that were that made money buying new 52-week highs and putting on a really wide trailing stop. Everything on this side would have been making money. Everything on the other side would have been losing money. But then they just built a portfolio with it over this period of time, which was 1991 to 2005. Said, okay, we're only going to buy things that are breaking new 52-week highs. We are going to then put a 10 ATR trailing stop on them, and we're going to build a portfolio based off of that, with the blue line being the Black Star Funds and the pink line being the S&P 500. Again, showing this concept of relatively strong names, right? Not everything is hitting a new 52-week high, so anything that is going to be relatively strong to anything that is not. Just focusing on those as opposed to the buy low, sell high that a lot of people have been taught really outperforms the overall market. Next one, and this might be one of my favorites, this is from Meb Faber, who basically just took the top ETFs and said, top industries, and said, I'm going to look at whatever industry performed best last year, and I'm going to put my portfolio into it this year, and I'm going to repeat that process year over year. Now, with the top performing ETF, that's the light green line. If you balance it into the top 2, you had the blue line, which returned a little bit less, but actually had better risk-adjusted returns. And same with the red line, that was the top 3, performed a little bit less, but had better risk-adjusted returns. And then buy and hold of the S&P 500 in the dark blue line. And this is from 1928 till 2009. So I really like this because that is A, a whole lot of data, and B, shows that that outperformance persists. Buying stuff that is stronger than the overall market and stronger than its peers works. And you know, those are 3 studies to prove it. There is a litany of others. Those are just the 3 that I thought made kind of the best point. Now, why? Why does this concept work? Why would it make sense to buy stuff that's already gone up as opposed to you know, every value investor's book of buy low, sell high? First concept, I think this is just speculation. We'll never know why anything actually works in the market. Anyone who tells you they do, they're making up the story after the fact. But the main thing is that you don't pay income tax if you don't have income. So if you are, say you're a portfolio manager, you have 2 securities. We'll use the Eli Lilly and the Pfizer, for example. So you bought both those at the same time. The year end is coming along, or you just have to free up money for redemptions, or you have to free up money for another trading idea you have, and you have to sell something in the pharmaceutical space. Well, am I going to sell Pfizer and actually claim that tax loss, or am I going to sell Lilly and pay a whole bunch in tax gains? It makes sense that you sell whatever stock is not working, and as it's kind of like the government is trying to get us to trade correctly, we know that's what we should be doing anyway. Anything that's not doing well, it's time to get rid of, replace with something that has the potential of doing well. That's one reason I think so. The other reason I think is window dressing, where it's basically the concept is that imagine right now if you have to do a presentation and you're a portfolio manager to your investors and you don't have any Ozempic stocks and any AI stocks. Even if you believe the evaluation on these things is incredibly stressed, you will be berated by your investors that all have heard that AI and Ozempic, these things are going to change the world. It's going to be crazy. You need to make sure that you're investing in these names. So that's the idea of window dressing, is that, hey, if I put some NVIDIA in the portfolio, even if I don't like it too much, oh well, I have to put it in there because then I can tell my investors, hey, we are invested in NVIDIA. We are ready to go for the AI craze. So that's that phase. Now, this part of it, before we redefine relative strength, is just talking about how these work really well in macro shock type environments, and which is very important because any trading strategy will work well when things are trending and when things are normal. We want something that actually does very good job of withstanding these once in 100-year events. As someone who's 36 years old, and over the last handful of years, I have heard once in 100-year event many times over the last few years. So we're definitely getting a lot of these. Here's a monthly chart of the S&P 500. We have 3 boxes on this chart, and we are going to basically highlight these as this box right here. We're going to call this the interest rate scare, where this was when Trump and J-Pow were fighting on Twitter and raising interest rates and lowering interest rates. I remember it had made this awful Christmas where the market had just kind of fell apart in Christmas and then came back in the New Year's. We all know what happened in 2020, which was the pandemic. And then we're going to call this kind of the Russia-Ukraine, which kicked off the bear market, which was then led by interest rates and all this kind of stuff. So this is what you would have to know if you were a fundamental style trader and you didn't want to look at the concept of relative strength, you just wanted to look at fundamentals. You had to understand during the 2018-2019 bear market, that the president would yell at the chairman to change interest rates, that they would change interest rates, and what stocks would have done well in that period of time. You got to know a lot there. Then in the COVID crash, you need to basically just forget all of that information. You need to become a virologist now. You need to understand how a government's going to react to a pandemic. You need to understand the economic impacts of how a government would react to a pandemic. Again, you got to know a lot of stuff, and then forget all that, and you got to be a geopolitics expert right after that. So you basically have to be this guy, and nobody likes this guy. We've all seen this guy on Twitter. No one's a fan of this guy. Who just, oh, I know everything. A thing has happened. Let me now put in my input on this thing, even though I don't know this stuff now. The beauty of that is we don't actually have to do that. We can use this concept of relative strength in order to make sure that we don't have to be these people, that we can just say, hey, we know relative strength works. Let's focus on that during these kind of trying times that seem to happen over and over and over again. And let's see what happens. So first we have to define strength, which we've already done. We have to assign some score and say, hey, I'm going to do it by, we talked about the new 52-week highs. We talked about ranking things by how well they did over the last 6 months or how well they did over the last 12 months. We're going to assign some value to what we've defined as strength. We're going to then find the strongest stocks and take trades. Right, so the first way to define strength we talked about was this absolute price move, which is just saying, I want the stuff that is up the most in the last year. Well, here is more evidence that something like this will work if you don't have enough already. The blue line, or the green line, sorry, is essentially saying, I am buying stocks that are going to, sorry, I took the S&P 500, I picked the top 10 names of the S&P 500 based on how well they did over the last year. Just absolute performance, as we talked about. How much was the stock up? Buy me the top 10 of those stocks. The red line is the S&P 500. You had a 6% higher year-over-year return, and you had a 6% higher drawdown. The other way, which we talked about on the entrance here, is this using indicators. So we talked about this RSI and how we know that, if you attended the last one that I like to talk about here, we know that buying stocks as the RSI gets oversold is not the move. Buying stocks that refuse to get oversold, that's going to be the move, right? So Dell here was an example that I just pulled out, where you can see this nice trend that occurred in Dell, and you notice that every time it pulled back, that RSI was unable to get oversold for a period of time, and you get this nice trend. Dell is actually still looking nice even after I made this presentation. So I did the same thing. Now, these are very rough back tests, again, just to prove the concept, and said, okay, we're just going to buy stocks and we're going to rank them based off how long they've been unable to get oversold, and we're going to buy those S&P 500 names. We're going to compare that to the S&P 500. You can see a good year-over-year gain, and then a little bit of an increased drawdown. Right? This one's not the best. Now, this one is one we're going to talk about as well, where we're going to take position in range. We're going to ignore absolute performance, and we're going to ignore indicators for this one. We're going to talk about position and range. Don't worry, all this will be coming together and make perfect sense in a second. Position and range is basically saying the what is the high of the range and what is the low of the range, and we're just going to make those percentages. So here in this picture of the SPY, the low of that range is 0%, the high of that range is 100%. This normalizes for absolute gain, which we talked about before. Yes, does work, but it could have some problems. What if you're rolling over and you're buying AMC or Bed Bath & Beyond because for a second there it had the highest absolute gain? Issue being there, those things have crashed and probably are never coming back. Bed Bath & Beyond most certainly never coming back. So absolute return can actually affect based off of price. It can affect based off of how liquid the security is, a lot of these things. Whereas stocks just holding into the high end of their 52-week range, we know is going to be a good thing, because this is, again, that simple back test. We had taken the S&P 500 at the end of the year. I rank it by, or end of the month, I rotated these monthly and said, here are the top 10 stocks based off how high they are up in their position and range. Buy those 10 next month, repeat. 5% year-over-year gain. Again, these studies are going back to 1980. So 5 years before I was born, all the way up until I think a month ago I ran this. So 5% average gain, 5% less of a max drawdown. You can see holding the S&P 500 from 1980, putting $1 in the S&P 500 is worth about $32 now. Putting $1 in this strategy and rotating it and compounding as it comes turns into $256. So a much better return. Again, just I'm not doing any fundamental analysis. I'm not doing all that where I understand virology and all this stuff. I'm just saying, hey, what's the strongest stuff out there, and how can we define what is the strongest stuff? And I'm just going to put my portfolio there as opposed to anything else. So what happens when we slap it all together? We look at all of these periods of time and we build a system. Well, that's one of the things on top of many things that we did over at Trade Ideas. During the interest rate scare, you can see here, this is the chart that just shows the distribution of what that security or what that portfolio was in at that time. And again, no crazy AI stuff that knew that this was an interest rate scare and there was battling going on back and forth. 26% in utilities and 26% in manufacturing. So nearly over half of the portfolio is in staples type stuff that does very, very well over that period of time. During the global pandemic, we had 28% in pharmaceutical manufacturing companies. Again, doesn't know that there's a pandemic going on. All it knows is that when the market is selling off, the market is not selling off pharmaceutical companies, which makes perfect sense. So how do we do this? Again, I want to teach, and then I'll show you guys the system after that. So how do we do this? We basically took all of the concepts that I've talked about before and we put them together. We took the position, the value of the position and range. We took the length that the RSI was not able to get oversold. We ranked by absolute return. We put in a whole bunch of indicators like, is it above the 200-day moving average? Give it a couple points. Is it above the 50-day moving average? Give it a couple points. And then we rank every stock in the market by this system that we created, which updates every 30 seconds. Now, you could do this yourself if you wanted to assign these values and build them out and run that. One of the advantages we have at Trade Ideas is server tech, right? So we're able to refresh this constantly, and I'll show you some of these symbols that are in there right now and show you it refreshing live. So this is one way that we're able to build these out, right? Without saying I want a stock that's uptrending and trying to figure out all the stuff, all the crazy indicator behind that. We can just push these together and find stocks like this that are close to the high end of their position range, great yearly return, and RSI not oversold. Again, going back to the evidence that I gave before, that statistically speaking, it's better to at least be looking at these ones than anything else, right? So how would you use this? Everything I've talked about before is portfolio rotation. Is you just, pick the top whatever ranking mechanism, you just put your money in that and you just rotate that portfolio daily, weekly, monthly. That's totally fine. For people who want a really hands-off approach, there's nothing wrong with that. And in fact, that's how we back tested this system, which as of the end of June, I update these quarterly, so I actually have to, I'm in a bit of trouble because I'm a bit late on that. But as of the end of June, it was 25% return this year. The S&P 500 was up around 15 at that time. I would bet both of these have come down a little bit. The hope is TI Swing Picks or TI Strength has come down less than the overall market as a long-only system. And this is a chart of the same system from 2018 to that same period of time. You can see, again, not a perfect system. If anyone comes and shows you a perfect system, they're absolutely wrong. But just by balancing, we're using no other criteria or ideas, or we're not even applying our own thinking to it. We're just rotating the system into that. Great relative outperformance to the overall market, making new equity highs, even when the market was struggling to get up to new highs there. Other way to do it, and this is more or less how I talked about in the beginning, how I trade, is stock selection. So we use this rank, then we pick things. And we say, okay, if FLR is up there, it's a nice looking chart. Well, I'm just going to set a stop limit over these highs to try to catch a breakout and a continuation of these trends, using this as a way to focus. We have this go, no go indicator, which we're talking about later, something we're building into Trade Ideas. You can apply other indicators or other styles, even if you have your own trading style. I implore you to take a relative strength approach to that trading style. Right? Bottom-up analysis. This is something, again, as a CMT, I use this for all of the time, where what I want to do is, as opposed to top-down analysis, which I do, which is looking at the overall market and then the sectors in the overall market and then the names inside those sectors, sometimes bottom-up analysis can actually tell you what's happening before the sectors does. If gold miners start to move before gold or before the market, that could tell you that there's some risk-off behavior happening. This, again, these rotations happened before the pandemic crash got crazy. It started to allocate more into pharmaceutical manufacturing. So I may not have taken even the tickers that it was suggesting, but it gives me an idea where to look. Last but not least, this is day trading. So if you are a day trader, if you're an active day trader, we have the ability, and I'll show you that just 1 second here, to just rank all of the stocks by how much they're up from the open or from the close or in the last 30 minutes, and only show you guys the strongest stuff out there. That's another great way to go through and to make sure that you're only looking to buy the stuff that's doing the best. Again, for all the reasons that I showed you about why, please don't buy stocks that are hitting new lows unless you're a really old school Buffett value investor kind of thing. All right, so before we get into it, just thank you. Here's all the ways you can follow me. Basically, if you put Michael Nauss CMT into the internet, I have a Substack and Twitter and YouTube and all that stuff you can follow me at. Now, let's get in, let's show you the products, because again, I want to educate, then I want to show you how we can make these concepts a little bit easier over at Trade Ideas. So first of all, if you go to, this is just tradeIdeas.com. good thing to do. You can sign up for our test drive. We have a coming up on November 6th, so in 10 days from now, we have 2 weeks of the product for $11. You can play around. Basically, the $11 covers the data feeds because we buy data from a whole bunch of different places to build these systems for you. So you can try it out for 2 weeks, see if you like it, play around, ask questions. We have a trading room for free on our YouTube channel going 24, whenever the market's open. I was about to say 24/7, but that would make the trading room moderator mad. We're also having, if you're going to download our Windows product, for now, eventually this will be on the web as well, but we're having a paper trading competition. If you win, we'll just send you over Amazon gift card. So give it a shot. And if you click, be the first to catch the stock. My computer's chugging a little bit, but that's okay. You'll see this opening dashboard. And this is exactly what I was talking about, where now we are ranking all of the stocks by what's happened in the last 30 minutes. I apologize. I don't know if it's go to meeting. I don't know if I have to reset my computer, but everything's running a little bit slow for me. But yeah, so we have right here, I expect that to be an arrow. We have right here, change the biggest from the open, from the close. It's in the last 30 minutes. Let's see what's the biggest stock move from the open today, and we can rank these for you. We have a chart right here with some fundamental data all kind of set aside for you. You can actually try this right now for free with delayed data just by going to tradeIdeas.com, and as we can kind of click through these, you can see what's occurring here. But I'm going to go over to the other software just because this one's, again, my computer's just a little bit lagging right now. So FRBN, this massive move from the open. This looks like a de-SPAC company going live today. Things that are hitting new highs, things that are hitting new lows, all of that cool stuff we cover right away. But if we get into the software here, I just wanted to show you this ranking system. So what Trade Ideas does at its core is we are a scanning software. So we can scan for pretty much whatever it is that you want. If you want to build your own scans, if you want stocks that are pulling into their 200-day moving average, you can do that. If you want intraday 15-minute opening range breakouts on relatively strong stocks, you can build those in. So I just wanted to say, hey, there's a lot more that we can do that I'm going to show you, but we were talking about relative strength, so I'm going to focus a little bit on that. And as always, you guys can ask questions as they come. So I don't know if the new questions are on the top or on the bottom. I think they're on the bottom here. Anyone in the trading competition? Yeah, anyone, again, if you pay the $11, you can enter the trading competition. I can't enter because I work there, which is a shame because we've been having a lot of fun internally trading them and talking SPAC. So what you'll notice right now, and this was something interesting as I was scanning through, relative strength to me right now is way more important with what's happening in the market. If we go to the SPY, you can see the SPY is pulling back. Now, another way that I describe this relative strength concept, especially right now when the market's selling off, I love looking for NTI strength, which is the name of the system, for relatively strong names. Because the way this was described to me actually by a client a couple years ago, which I love, was essentially if you hold like a beach ball underwater, which would in this scenario be the market holding down stocks, it kind of builds up that pressure. And the same as if you can find stocks that are holding on well when the market is selling off, when that pressure gets alleviated and the market bounces, then the stocks that were relatively the strongest, in my experience and with all the data I showed you, have the ability to bounce the highest. So this is actually a perfect time for me to be scanning through here with you guys again as you ask questions. But again, so FTI has no idea this is a purely technical system, has no fundamental data at all, but it knows that, hey, energy is strong and this thing reported earnings and it's up 7% on the day the market's absolutely getting killed. So if you wanted to just rotate your portfolio on a basis, this would be a pretty good candidate. If we zoom out here, we have this thing at Trade Ideas, which is called picture-in-picture charts. So this chart in the bottom is a monthly chart. This chart on the top is a daily chart, so I can see the long-term trend while I'm looking at the short-term trend. You can see the long-term trend is very strong in this FTI, and the short-term trend is very strong. From there, I just apply basic technical analysis. What I've learned from being a chartered market technician is that the people who do the really complex technicals and tons and tons of different indicators and different things they're looking at generally have a harder time than people are doing simple technicals. So this is actually a name that I'm watching now that earnings are out of the way. And if we can close above these recent highs right here, I think I'm going to get involved with a stop under 20. Don't need to make it complicated, but I would not have known anything about this name if it wasn't for this. IBM seems to be holding up well. Nice gap up on earnings. IBM still exists. That's funny. TAL, even though it's down on the day, you can see if you just look at this chart right here, and then we go look at the market, that comparison that I was talking about before really holds true, where the market is down and downtrending and even down today, even though TAL, which is I think a education company out of China, even though it's down a little bit today, this overall trend has been doing absolutely phenomenal on this. TW, TradeWeb, another one, had earnings this morning. Massive engulfing candle here. Really interesting look as we break out of these prior highs. So this may be another one to look at. You can see that we can put in price alerts, all kinds of stuff. Again, just the very, very basics of what Trade Ideas can do here. If we're looking at an iceberg, I'm just showing you the tip here. We also have this fundamental screen right here, which you can look at. Shows you can customize this. Let me show you everything that you can customize with Trade Ideas here. I'm going to start scrolling down. These are all of the filters that you can either add or remove from scans or from your charts or from these single stock windows, which is what we call these data windows. I'm continuously scrolling. We're about halfway through now. I'm gonna grab just a drink real quick. Right, so tons and tons of customization if you really want to get into it, but we know there's some people who want to do that, and we know there's some people who don't, and that's why we have these kind of ready build systems for you. So I can learn a whole bunch about the stock just by looking at this right here. Big cash to debt ratio, has 60 times more cash than debt on hand with a market cap of $10 billion. It's a pretty big company. Short float, the actual float of the company, earnings per share, when earnings is, because if anyone's been caught in a bad earnings report, sometimes we want to avoid earnings. That's why we highlight it nice in red when it's within a couple days. Average daily volume, these are just the filters that I have currently. What's the debt of the company? How much cash does it have on hand? These type of things. You can go and read, because a lot of the idea behind Trade Ideas is we want to show you the stuff that not everyone's looking at. Everybody's looking at NVIDIA, Apple, Google, Meta, everyone's looking at the same basket of stock. Where trend following and breakout systems and relative strength systems really, really shine is looking in those areas that nobody is yet looking into. So I often spend a lot of time in here where I'm trying to figure out what this company does, because I'll be presented things like TW, which I don't really know anything about. So I can just read that they do something with credit, some sort of electronic marketplace for the trading of across rates, credit, money markets. So some sort of exchange type company. I can also just read the news if I want to know the news about it. We have the news filter just completely built in. Again, this is all part of the built-in Trade Ideas subscription. If I want to read more about the earnings, you can see all the data is right in there as well. And then also competitors. So say, for example, I really liked the look of this chart, but I didn't like this particular company for whatever reason. The setup wasn't right, or the fundamentals weren't right for me, or didn't have enough volume, but I kind of want to see what the other guys in the sector are doing. Well, if I go through here, you'll see other names that are going to be in the same sector. So right here, we have the actual NASDAQ, which makes sense because this is an exchange. We have the Intercontinental Exchange. We have the CME. So these are all competitors. And as I click through these, it updates my charts, and these are the competitors. CME looking really good here. Very strong recovery off earnings, holding up pretty high. So if you find a stock, sometimes the competitor is the way to go. Maybe, for example, you're interested in NVIDIA, but you think maybe the valuation's overdone there. If you look at its competitors, you can quickly go through and scan its competitors and see maybe there's something that's valued something a little bit more interesting. Speaking of exchanges, looks like CBOE is in here as well. Very nice look on this one, but November 3rd for earnings. So that's a little bit close for me. On top of this, so say you didn't buy my presentation on relative strength. You're like, I'm not interested in that. I'm more of an indicator guy. Well, these are all the pre-built scans that we have for you. Now, again, you can customize to your heart's content, but we just don't have the time to go through that today. But for example, if you're a Bollinger Band person, we have Bollinger Band squeezes. These are ranking stocks by the tightest the Bollinger Bands have been in an entire year. For those who know about Bollinger Bands, they know they're essentially a volatility measure. How tight is the volatility versus how wide is the volatility? We compare all of the stocks in the universe of stocks, like every single stock that exists, and we say these are the list of stocks that the Bollinger Bands are the tightest they have been in the entire year. For people who trade Bollinger Bands, this is great because, hey, if you're looking for these things to potentially break out, you want consolidation to begin with. If you're someone who's interested more in, let's say, a MACD, we have names that these are doing bullish MACD crosses today, which again, talk about relative strength, anything putting in a bullish MACD across today is definitely going to be a relatively strong company. We have Cleveland Cliffs, which is a good one, putting in and I can show you guys here, MACD, right? Plus charting, plus auto trading. You can send trades directly to interactive brokers and E-Trade. Let me actually just connect to our sim, because again, you can enter our simulated trading competition. The person who makes the most money over that 2-week test drive period is going to be sent $1,100. You can see we're doing some trading competitions here. Of course, we're all going crazy with it. So no, I'm not up $153,000 on this trade, but we're definitely trying to break the system as we get ready for you guys to come aboard. NXE. So this is putting, as of today, a bullish MACD cross, right, over, which is, again, relatively strong. Say you're not a MACD person, you just want to trade candlestick patterns. We have, let's just do the inside day. So these are all stocks doing an inside day today. We can rank them by volume, we can rank them by ATR, all types of different indicators, but again, scanning everything for you in real time as things go. My favorite, support and resistance. I'm a very old school trader. I don't use a lot of indicators, but hey, I just want to find stocks that are at support on their daily chart. Where are they? At support, daily short term. This just uses a simple algorithm to detect what is support and what is resistance. And we're going to find stocks that are at that support area. So Adobe is coming into support. You can see it right here, a little bit from there, but it's getting close to that zone. PCAR, right, pulling into support, a little bit far away from that as well, but getting close. We can go in and do Anchored View app. If anyone's a fan of Brian Chan, which I am, we actually built this product in conjunction with him that will not only show you stocks that are pulling into major Anchored View apps, but as you can see here, it draws them for you based off what you've clicked on. So UUUU, which is a uranium play, uranium's been on fire recently, is pulling back into an Anchored View app. And as I click on these names, you can see they're being drawn in for me here. This INOS came into this Anchored View app right here and is now bouncing off of them. So a lot of what we're doing is we're trying to build in popular trading and popular scanning techniques for whatever it is that you look for as a trader, and then we're trying to help you along there. So if you're looking for relative strength, I did a whole presentation to show you that. We were talking about earlier, as I came in, about the RSI and how buying stocks in which the RSI is unable to get oversold is a good move. So let's just put on, I know I got 3 minutes left, so we'll do this quickly. I'm gonna remove this, and we're gonna add in the RSI. So what you'll notice with these stocks is the RSI has been unable to get under 30 for a long period of time. So as I click through these, let's go and grab just one random LFLPG. You can see the RSI, even at its low here, was, as it pulled back, was unable to get under 30. These are just going to naturally give you nice, strong, uptrending stocks. Again, earnings a little bit in the way for this one, but as we click through, you can see, and then there's SIBO. Makes sense, right? Part of the algorithm is looking for these RSIs, the redefining strength, to make sure that for a long period of time, the RSI hasn't even been able to get under 30. Not even way back here when it was at its lowest. Massive strong trend in that one, but earnings is definitely in our way. So I think I've showed you guys enough. I may actually end a few minutes early. I'm just going to open up for questions just in case there is any, but I want to make sure there is time to get going to the next presentation, which I'll certainly be watching.
Michael, can I ask a question?
Absolutely.
Is there a way to take your algorithmic, approaching anchored VWAP, RSI is above 30, and, is near 52-week all-time high, and determine if a certain ticker is on multiple lists?
There is not, but that is a really good idea. So we may actually build that in the future. This is one of the things that I love about Trade Ideas is we are a smaller company. So we're always we move quick. So I like that idea. So I'm actually going to steal that one. And maybe by the next time we do a presentation, maybe that's actually what I'll be talking about.
Hey, you might want to reward the founder of the idea too. But go ahead and take a couple of questions.
Sure. I don't know if I see any in there. So I think, which is good because I think the end of the time is here.
No, we're right on time. So if anybody does have any questions, I'd like to ask you to email Michael at trade-ideas.com. Michael, I want to thank you for being here. I think we know that I'm also a numbers guy and, stuff like that. And I thoroughly enjoy your presentations. In the current trading environment, this is all so relevant. It clearly shows how powerful and important RSI is. And, your little bit of a modification to what everyone assumes is the correct way to use it is just brilliant. It should be considered one of the ultimate sentiment indicators. But great information, ladies and gentlemen. If you're interested in compounding your portfolio by always rotating into the strongest names and having the ability to exit trades that have lost momentum, then look no further than Mr. Michael Nauss, who is a chartered market technician and has a solution for you. You can find his offer by clicking the link in the chat box or find him at TradeIdeas.com. Thank you so much for taking the time out of your day today, Michael. I think we all enjoyed your presentation. Please come back and see us again here on Traders Corner.
Absolutely. Thank you a lot for having me, and I'll talk to you guys soon.
All right, couple of clicks. And ladies and gentlemen, we're just getting warmed up here on Traders Corner. Stick around because the information gets better and better. Our next presenter is a true professional futures and equities trader with 20 plus years of trading experience in stocks and futures, and she spent over a decade working in investment banking prior to becoming a full-time trader. She's the founder and CEO of TradeOutLoud.com, an international trading education and service company. She's an expert day trader, swing trader, and active investor with a precise approach to daily income style trading and wealth generation trading, consistently delivering results in any market environment. Here to present Swinging to Profits, trading 10 minutes a day, is Anka Metcalf of Trade Out Loud. Welcome back to Traders Corner, Anka.
Thank you so much, Rob, and thank you for having me here today. I really appreciate it. I see here that you have a full room of traders eager to learn new strategies. And before I get started, just want to do a shout out to Trade Ideas. I have been using it for close to 16 years, and I wouldn't go without it. All right, so I'm going to begin right now, and just like the title suggests, we're getting ready to swing into profits trading only 10 minutes a day. And I could share with you today what my train of thought is when I'm swing trading, what I look for in swing trading. So let's get started, everybody. First off, thank you so much, Rob, for the wonderful presentation. But I just wanted to add something along here, and that is the fact that I have been trading for more than 20 years. And yes, I'm the founder of TradeOutLoud.com, and I really run a very successful swing trading service. It is in fact the first service that we have offered at Trade Out Loud since 2010. So we're going strong on towards the 14th year. We have a transparent track record for our service. And also what I wanted to share is that we haven't had a losing year since to date. I focused on high velocity trades, and I'm going to share with you some of the strategies here today. If you guys want to get a hold of us, you can visit us at tradeoutloud.com, and you can see all our handles, our social media. They're pretty much Trade Out Loud and on Facebook. You can also follow me on my personal Facebook account, which is Anka Metcalf. All right. Okay. Oops. Clicked on something that is just, hold on. All right, I hope you guys can still see it, okay? All right, so I don't know what's going on. All right, here you go. Here is our agenda for today. First of all, we're going to talk about how to get started investing. And this is so important. And how to start swing trading, because this is where the big money is. And this is coming from me. I love day trading, but I have to say that swing trading is a lot more profitable than day trading is. And I don't know if you guys are aware of this, but swing trading is where the money is at. And we're going to be looking today at some of the elements that produce the maximum returns. We're also going to talk today about the best trading setups, and that can literally line up days and weeks before the trigger, so you could actually have a lot of time to find these kind of setups, set alerts, and definitely even place buy limit orders at these very important levels. So we're going to be talking about focus time frames. What are the time frames where you can produce the maximum results in the least amount of time? We're also going to talk about selection criteria, and yes, if you use a scanner, that's going to be a really great help for you. It's going to be like your personal assistant. And also we're going to talk about how to spot mega opportunities even in the worst market environment, in which like we are trading right now. All right, so just one second, because I don't know why my I don't know why my screen here is acting up. Hold on a second. All right, here it is. All right, sorry about that. I don't know what happened. Okay, so let's get started. All right, so self-directed trading. Let's talk about self-directed trading, or even investing, right? And we're going to talk about the difference between the two, between swing trading and investing in a little short while. Basically, it's all about taking control of your financial future. What does that mean? Managing your own money, because guess what? Nobody can do it better than you. And that is how you make your money work for you. Because in other words, swing trading is also another way, just like day trading, of generating cash flow. So what is cash flow? Basically, you're bringing money in. That is income. More income, you can allocate more towards an investing account, and that produces, and that creates wealth. So you become a money magnet. And guess what? The best thing about it is that you do not need to be a math whiz. I'm not a math whiz. You do not need to have a finance degree. You do not need to know fundamental analysis about the company that you're trading. In fact, you do not need to know anything about the company that you're trading if it really meets certain criteria. For example, volume-wise, you want to make sure that the stock is liquid enough and it's not thin, that could be easily be manipulated. You want to make sure that it trades at least 1.1 million shares on a day-to-day basis. And based on that criteria, you go ahead and you create your trading universe. Did you guys know that every year stocks, and this is like crazy pants, every year stocks will move about 20 to 30%, maybe more. That is in each and every single year. And this happens, like I said, at least a couple of times per year, and it happens in cycles. The more cycles we have, the more money we can do. Yes, you can make money as the market is going up, and yes, you can make money as the market is going down. So here's a quick example of Apple. Apple went up from January to the top right here in July. You could see the arrow right here, and you could see that it went up close to 60%. Now it's into the pullback phase. You either sidestep and wait until the market resets itself, or you could actually start engaging in some shorting opportunities. Take a look at the Qs chart, and this I pulled today. This is actually the lowest point that it had today. This is the January chart all the way into July of this year, which is up close to 45% and down from this high right here, close to 12%. So add up these percentages, these add up a lot. So you can manage some swings. And I'm not saying that you're gonna really buy the bottom and you're gonna sell the high, but you're gonna get from swing low to swing high. Let's say you're gonna sidestep the pullback, you're gonna get back in from this swing low to swing high, then you're gonna wait for the pullback. This is actually a base, and then you're gonna take the breakout for higher. So all in all, actually, by sidestepping all these pullbacks, you're actually going to go up in percentages, and this is going to generate you even more than 45%. Now, let me let you in on a little secret. Money managers and hedge funds live mostly off commissions and your fees, and you are just an account number to them. And I'm thinking about the 401ks, all right? So whether the stocks or funds perform or not, they get paid. So here's this. Barclays Hedge reported that over the past 5 years, the average hedge fund in its universe produced a net annualized gain of 7.2%, with a Sharpe ratio of 0.86%, with a market correlation of 0.90. Oh, okay, so that is a really poor performance compared to how the market moves and how the swings moves, right? Take a look at this image. So here's another article that this time is from CNBC, saying that new report finds almost 80% of active fund managers are feeling behind the major indices. This is really bad. So wouldn't it be worth it for you to put in a little bit of effort and learn how it's done? So this way you can take advantage of this massive gift that is the market. Here's another chart, and this is the January through November, actually through this year, right? Through the end of October 2023, and this is up 26%. Take a look at Amazon from January all the way into September, up over 70%. Now, how is this in comparison to the performance of hedge funds? They're really poor, right? Really, really poor. So what is swing trading all about? Swing trading is the easiest trading style to make money. Why do you think I say this? Because in swing trading, you're most likely to stay to trades a little bit longer than you were to day trade, right? And in day trading, you have levels of support resistance that you're going to trade on that are less likely to hold than the swing trading ones, right? Because in swing trading, you're focusing more on daily charts and weekly charts rather than on 5-minute charts and 15-minute charts or even the 1-minute chart. So basically, the support resistance on higher time frames has a higher likelihood of holding rather than the ones that are on a smaller time frame. And swing trading is that core, is that little, let's say, cushion of comfort level that is not too aggressive. So you can fight every single day with algos, right? And you have the possibility of stopping out much more often. And it's not as far out as investing, where you would have to wait months and probably years until you cash on some profits. But you need to know how to respect the rules of the game, and you need to know how to be patient and wait for the setup. And remember, you don't have a setup, clear setup, you don't have a trade. Because it's not about the trade as much. Because I can give you one example right here. You could throw me in a trade right now. For example, you could throw me right now into the Qs long as they're dropping. And I could show you, and I've done this multiple times in the trading room live in front of my traders, and I have a damage control plan that if I apply it, I'm going to come out of the trade with profit. Because in trading, it's all about risk and risk management, and who's the master and who becomes the master of risk and risk management is going to make the most money. So why is it important to get started in swing trading? Because the money that is sitting right now in your bank account or even if your 401k is losing value every single day due to inflation. This is a trade that I closed this week on on Monday. The trade was originated on October 6th. This is my entry and this is my out. I made over 8%, and with 4 contracts in the futures, I made $60,000. You can see it on the technical chart. This is my entry, and this is where I trailed out of the trade. And by the way, we reinitiated a new trade yesterday in gold. Yes, long again. Okay. So let's talk a little bit about swing trading. So who is swing trading for? Everybody. If you don't want to get stuck in front of the computer, if you really want to, take advantage of free lifestyle, and you can trade off of your phone, you can trade off of your laptop, you can trade wherever you are, because your trades go with you. You can set alerts, you can take profits, you can do anything from the smallest device that you have. So you don't have to have, for example, like 3 to 4 monitors, because you do need a lot of monitors, especially if you're day trading, especially day trading stocks. Okay, so I do need the real estate because I do need to see what's going on with different types of stocks. You need to have eyes all around the sectors. So if you don't want to have that hassle, swing trading is for you. It's really great for very busy professionals. It's really a great method to create cash flow and generate wealth. And it's great if you work from home, or if you're a busy mom, or if you're busy in general. So what are the steps to get started in swing trading? First of all, you have to open an account. You have multiple options. You have to do your due diligence and see what's right for you. These are some options right here. I'm with Charles Schwab. I've been with TD Ameritrade for so many years. So I'm literally have all my accounts right there. But you could choose whatever, and I'm not affiliated with them by any means, so you could choose any broker and go with it. The second thing that you need to do is protect your money. Protecting your money means that you need to establish your risk or your risk tolerance. Because, for example, if you have a retirement account, and if you're trading a retirement account, and you may have, let's say, a 2 comma type of account where you have, let's say, $1 million, $5 million, $100 million, whatever you may have in that specific account, you can't really go ahead and say, hey, I'm going to risk 2% on each and every single trade, or basically the norm is from 1% to 3%, but 2% is, let's say, a really good average percentage that you can risk in trades. You have to determine what you can tolerate, because it may be really too much for you, especially if you're a beginner trader, to risk, let's say, $50,000 on a trade. So you can start small by trading $500 on a trade, and you can start from there. So that's why I'm saying risk tolerance is very important. Then you can establish, you have to establish step 3, you have to establish your game plan. Your game plan is your trading plans. You need to establish what kind of rules you're going to be following. Where am I going to enter the trades, and how am I going to enter the trades? Where am I going to place the stops? What are the targets that I need to apply? What is the risk that I'm going to be applying on each trade? After that, step 4 is to create your trading universe and make sure that you're diversified, right? So you have a little bit of home builders, you have tech stocks, you have semiconductors, you have utilities, you have some defense stocks. So you have a little bit of everything. Step 5 is to create that specific strategy. Whether you want to trade with the trend, whether you want to trade against the trend for bounces, for example. I mean, there is a market for that. When the market gets very extended to the downside, you're going to look for squeezes. And these are shorter term trades. With the trend, you're going to have a longer duration. So probably for weeks, 2 to 3 weeks, that you could stay into a trade. And definitely you have to have a list and say, hey, what stocks am I going to trade? Am I going to trade like well-established stocks, or what kind of stocks? Or, for example, you could use different scanners that are out there. All right, so the next thing is that you need to understand what swing trading really is, because you're never going to get the very top of the to short. Let's say if you want to short, you're never going to get the very top, and you're never going to cover at the very bottom. And in a long market, in a trending market, an uptrending market, you're never going to buy the bottom, and you're never going to sell the top. But swing trading is that sweet spot, like I said, between day trading and position trading, that is investing, and it generates the highest probability for you, and it generates the best return on your investment. Like I said, the stops are more likely to hold. So swing trading positions will be held from anywhere from 2 days to a couple of weeks, or until the market starts moving, because it depends on the market environment. If you're having a market that is sideways and tight, it's not, and that's not allowing the price action to follow through, to have continuation on either side of the tape, then you're going to be in the trade a little bit longer. And there's no such thing as saying, hey, I'm bored in this trade, I'm going to take my loss and done. No, you're either going to get out when you, that's part of your plan and should be part of your trading plan. You exit when you achieve target, or you exit when you hit your stop, because stops are part of the plan. So like I said earlier, swing trading is not about capturing the whole entire trend. It's about getting the core, because you're never going to get the very bottom. You're never going to get the very top. You're always going to be working in the core. So let me show you some ideas and the strategies that I apply. I always love to wait for pullbacks at key psychological levels. So in this particular case, we have the price action moving up, and then we have the price action pulling back. And you can see that the price action that pulls back is really shallow, right? And it doesn't really violate the prior lows. And this is something that is specific for uptrends. So I know that being in an uptrend, I am going to look for a rotation, for a buy point, a buy pocket that we're going to talk about in the next few slides. So buy pocket is basically when the next candle right here takes out the prior high and it forms the pivot, because that is how pivots are formed. So I like to buy it up here as a confirmation that the price action is getting ready to trigger above the prior day or the prior week high. And then I place my stop right below the pivot, not right at the pivot. And then here it is. All right, this is the trend. And do I exit at the very high? No, because I have no idea that this is going to be the highest point. And at the same time, I have no idea, no indication what the next price action is going to be. But if I know technical analysis and if I know buy points and sell points, then I know that if I'm getting a rotation from green to red, at the first sign of the red taking out the green, I'm going to be out. So this is going to be my out zone. So you can see here that I'm banking on the core of the trade, on the core of the move, because I cannot nail the bottom and the high. And that is the fact is that nobody can. So the question is how to select winning stocks, right? So if you're using a scanner, you have a wide selection and the scanner makes your life so much easier. But you could also, just do the scanning yourself and go through all and every single stock that you have on your watch list in your trading universe that you select, and you try to find parameters that you identify. So the stock needs to be fundamentally strong, and it has to be good for medium and long term. Fundamentals have to be in line with the technicals, and pay attention now, especially that we are in full earnings season, because this week and next week, like I said, whatever is left of this week and again next week are the two most important weeks of the quarter, where most of the market movers are going to report that are going to impact the big market indices. You always love to buy stocks on sale. And what a better opportunity than this time right now to create your shopping list. And if you have never been in stocks that have been screaming higher into this year, this is the time to say, hey, you know what? I never took advantage of Meta. I never took advantage of Microsoft. I never took advantage of so-and-so stock. Put them on your list, and the next time it creates a pullback and that rotation that I showed you, it's time to get in. So bottom line is that you need to have, certain events, and especially if you're looking for longer term holds, you need to have certain events that are happening, like the dot-com bubble, the 2008 financial crisis, 2016 election, 2020 pandemic, which was a great opportunity, and wars. Yes, we can profit on wars. And let me tell you something. There are a lot of people that are literally making money off wars, right? Think about all of these defense stocks. And if you're feeling guilty that you're making money off wars, think again, okay? So do you really need these events to happen? Well, yes or no. I mean, these events create accelerations in price, whether higher or lower, but you don't really need to have them. Because if you're going to have a stock that is on its own, meaning it's literally rejecting and it's not paying attention to what the market is doing in general, and it's just chugging along whether higher or lower, by all means, if you have a setup, just get into it. I typically stay away from airlines, hotels, bio stocks, any kind of travel industry, because I know that for long-term holds, these are very delicate. See what happened in the pandemic, see what happened into 2008, and I don't want to wait years before I recuperate my money from those specific stocks. Here is an example of Google. So Google, look at the macro look. This is a really high time frame. This is a quarterly chart. Look at the beautiful pullback that it has off of the 20 simple moving average, and look at the pocket rotation that is so evident and so clear. See this candle taking out the bear's high and confirming that it's ready to continue higher. This is a perfect illustration. Do you guys want to see it where it is, where it was now? Well, this is where it is today, but it went up close to 2 Rs. And this was a while ago, right? This was a while ago. This was actually in the second quarter of this year. And this is where it is right now. Second quarter, third quarter, and we're into the fourth quarter right now. All right, so the most important thing to remember is that you need to be in sync, not to follow. You need to be in sync with the institutional footprints, and institutional footprints are all over the technical charts. They keep in mind that 93% of trading, Wall Street trading, is algorithmic trading. So what that means is that they're not basing their decisions on fundamentals, but they're basing their decisions based on technicals. So that's why it's easier for us more than ever to make more money into the market. Now, you have to pay attention to stages. And remember, at the beginning of this presentation, I mentioned that yes, you can make 20 to 30% in a cycle. Take a look. When you get the breakout, right, you make money here. Yes, I agree, you don't make money here, but you can day trade this range. And then this is the next cycle. So this is cycle 1, this is cycle 2, this is cycle 3, this is cycle 4. And here again, we're getting ready for a move back to the upside, right? Okay, so there are a lot of types of stocks that you can invest in. You have growth stocks, value stocks, income stocks, blue chip stocks, and penny stocks. All these, I like to base my trading decisions, and I have a watch list and I have my hot list based on a lot of blue chip stocks. I have growth stocks, and I also have income stocks as well. So when it comes to trading, no one has a crystal ball, but it's just 99% technical and 1% fundamental. Here is another stock, and this is Alphabet. This is a while back. This is back in May, and this is the movement to the upside. See that little rotation, that little pocket there that left that super awesome clue that the price action was going to go higher? Every single time it repeatedly went into this low, it popped up. So how to select winning stocks? You have to have a good history of earnings, 3 years or more. You have to look for companies that make a splash. You want companies that generate new products, new services, launches, etc. You want good, solid technical charts. You want to look for volatility contraction. So what does that mean? That is a fancy way of saying look for smaller range bars, because the biggest moves come from the smallest candles, not from the largest candles. Here's another opportunity here. This is Apple, and it pulled back. It went into an inflection point. It created the pocket, and it's not hard to identify the pocket, and it's skyrocketing higher. So when to enter the trade? Entries are based, and like I shared with you guys before, on these pockets and interest levels, right? So you want to wait. I use the moving averages as my guides. So I use the 50 simple moving average, I use the 20, and I use the 200. Typically when prices pull in to the 200 simple moving average, they tend to rotate off of that level. Here is an investing opportunity right here. You can see the pullback is coming right into, this is Meta, right into the 20 SMA. So when the price comes back here, what do you think? It's going to be probably another opportunity. Swing trading opportunities, pullback, rotation, and back up. So keep in mind, number one mistake in trading is to know and to understand the trades that you're in. You need to learn how it's done, and then you get the performance. You can take a look at the performance, and I haven't even included here. Gold was one of our biggest performers this year. 10 ways to generate income, Well, and I'm telling you right now, you need to be patient and wait for the pattern to form. Game plan, you got to zoom out on the technical image. See what other time frames are telling you, higher time frames that are telling you about the pattern, because that is the most important thing. And rules, keep in mind, seasonality earnings are very important. We're in full swing earnings season, so pay attention to earnings. Don't get in the trades ahead of earnings, but after earnings, watch them. As a few trading rules, and my time is almost up, as few trading rules, look for volume, look for stocks that are trading 1 million or more per day, shares per day. And if you want to turn 10 minutes a day into a six-figure income trading account, you have to make sure that you follow the rules of trading. So yes, wealth generation and cash flow generation is literally can be achieved by swing trading. So part-time trading with full-time results. So if you guys are interested, we do have a program. This is our 13th year. We're approaching the 14th year of activity, and we have transparent track record. We never had a losing year. And if you're interested, you can head on to our website. It is traderlaw.com/swing trader right here. And you're going to get into our swing trading program. So basically on Mondays, you're going to get a newsletter, and into that newsletter, you're going to get a video with a pre-market game plan. You're going to get so much information about the stocks that we're initiating, and not only that, but you're going to get this is the page that you're going to go to, and that is the stock swing trader. We have performance tracker right here with a lot of information. We provide you with the position size calculator as well. We give you all the tools. We do have a private X feed where you have updates for all the trades that we have active. And this is a wrap. Thanks so much, Rob, for having me here today. I don't know if we have time for questions, but definitely email me at info@traderlaw.com if you have further questions about the program.
Anka, take some questions. You got another 15 minutes, hon.
Oh, I do? Oh my God, I didn't rush through. I thought it was just for half an hour.
No, we do 45 minutes. So if you'd like to go over some live examples, some anything.
Oh my gosh, I would
feel
love
absolutely free. And usually I send a polite 5-minute reminder in the admin chat. You know, our next presenter is present, but I don't want to cut you short on time. And our next presenter is known to go quick too. So.
Oh, this is so awesome. I love it. Okay, so if you guys have any questions or any stocks that you want my take on, that just, more than happy to address those. But because we were talking about the opportunities and we were talking about, pullback zones, this is the daily chart of the Qs, right? So this is going to be highly anticipated reaction when it gets into this 200 simple moving average. I was telling you guys that I love to use these moving averages, not because I like to have these spaghetti on my charts, but because they make a splash. And what I mean by that is because they're very algo heavy. Remember that 93% of the market volume is algorithmic trading, and there's going to be a strong reaction based on these levels. What we see is what algos see, and the more people and the more traders see a specific indicator and a specific reaction in price, that is what creates the follow through. But all in all, I'm expecting the Qs to pull back at least into this 200 simple moving average right here. The price line is 339.35. That is the area around it. Doesn't mean that it's going to go on point to 0.35 cents, but this is the area. But I want to give you a take for tomorrow. Tomorrow is Friday. We also have 3 days until we close the quarter, and it was not a pretty quarter. I just want to put the quarterly chart right here. The quarterly chart just suggests that we have entered into a sell pattern, so we may have a continuation lower all the way to $324 into this 10 EMA. This is going to be the next support level that we have. And first of all, I just wanted to put out the weekly chart to show you that if you're seeing a little bit of a bounce in price at this time into the Qs, is because it's hitting support, and the support is coming back from February 2021 and April 2021. You can see here that we had a double top formation, and this double top formation is impacting the price right now. So this week we broke below this whole entire congestion that we have been into the last 1, 2, 3, 4 weeks. So for the last month, this is the month of October, which was a big sideways choppy cluster that was unable to trade above this trend line right here, and we followed through to the downside. So we're going to have to wait for the reaction to see if this level is going to hold here. This is called a minor support level because it's deriving from 2 prior highs. And just as a side note, minor support zones are so much more stronger than major support zones, because minor support zones are areas that have been tested before and have been taken out before, and they're present only in uptrends. So therefore, this is very interesting to watch here. Nonetheless, I was telling you guys that tomorrow it's Friday, and if there's still, a couple of hours left into the trading day, we're already seeing a swift reaction of a bounce. So that therefore, if the price action tomorrow is going to get over this high, that's 350.75. It's going to try to go for a little bit of a bounce. So keep an eye right here. And one of the things that I wanted to add, this could very well be like a COP and handle. So we're going to get a break above this blue line right here, which is going to confirm the, let's say, the break of the mini downtrend that we have. Because all in all, the Qs, let's face it, are still into a very massive uptrend. If you're looking at a monthly chart, I mean, this is a massive uptrend. We had a steep pullback in last year in 2022, and we're back here into close to the highs that we had in January 2022. So we're just challenging those highs. But on a side note, this would be like a gorgeous cup and handle pattern that may be ready to break to new highs. And new highs meaning over these 408 levels, which are going to be significant. Okay, so it's very interesting to see that, from the monthly perspective, we're already trading on support into the Qs. You can see that we're already trading on that 10 EMA. So that is why I'm seeing a little bit of reaction here already onto the daily. Excuse me. But all in all, pay attention to these levels that we have. All right. And the next thing that I wanted to take a look at is the SPYs. And the SPYs are a little bit weaker. And you can see here that we didn't produce any kind of bounce off of the 200 simple moving average. And we actually broke below. So we did a sell pocket. This is what I was telling you guys about in the presentation. We did a sell pocket below this low right here. So the chart of the SPY is a whole lot weaker. It's actually breaking below the trend line, and it's actually impacting the price a little bit harder right now, even though the low of even of today's activity, because we did pull a little bit lower, it's trading into some kind of minor support from these prior highs. Okay, sorry about that. I'm just choking here. Okay, so bottom line, the same type of aspect. We can look at the doji formation right here. Now, keep in mind that the volume is subsiding a little bit. And tomorrow, if we take out this high, the 417, actually a little bit higher than that, 417 of 417.59. Yeah, 417.59. If we take out this high, we have room to go higher to 424, or at least to 422. So one thing that I wanted to share is that within this market environment, you got to pay attention and take profits sooner rather than later. This is not a continuational market. It's having a hard time moving down, and it's having a hard time moving up. Looking at the daily charts, you could easily see that it goes up, but not with a lot of events and a lot of stalls along the way. And when it goes down, it pulls back because it has a lot of trouble along the way. So it doesn't really have that massive continuation. Like, for example, today, if the market decided to be weak based on the environment in which it was trading, it should have followed through much lower. and it didn't. It didn't. I mean, it has free space all the way to 394 area, and it didn't. Okay, so that is the path of least resistance right now, all the way to the support into this 200 simple moving average. One thing that I wanted to share also with you, I see that I still have a little bit more time. IWM. Okay, so IWM sitting on support. Now I wanted to show you what kind of support we're sitting at, because we have been talking about the minor support. We have 2 prior pivot highs, and we have this support level right here. So basically this support is created through the resistance from 2018 and 2020. This is really impressive. As long as this whole entire area, the 160, if the 160 is still holding, we can still say that we're in an uptrend. This is not by any means, IWM weekly chart is not in a downtrend, but it's in a sideways range in an uptrend. You have a low, and we have a series of higher lows that are being developed above the 160. In order to become bearish, we need to have a massive breakdown below the 160. So that would qualify as a bearish market. And the diamonds, because we pretty much talked about all the indices here. Okay, the diamonds as well. Oops, where'd it go? Okay, here we go. The diamonds as well, they have been in a sideways range for a really long time. Let's just go to the monthly real quick and take a look at this sideways range that we have. We're back to ground zero. Let me remind you that we were trading into these levels. This was the first tap into the level right here in January 2022. Okay, this is I don't know what happened to the chart though. Okay, let me see if I could do this. And okay, yeah. So basically what we're looking at here is a hold of this level right here, which is very significant. Exactly where it's trading at, 328. So we have been in this area for a really long time, guys. We have been testing this area for a lot. And then if you're looking, for example, onto the daily, you can see here that we're struggling into this mess. So if you're looking at the Dow stocks, they have been messier. Dow is very rich in financials. It's rich in energy, and you know that financials have not been performing that well lately. But yeah, this is what I'm seeing. This is what I'm seeing right now. So let me know if you guys have any kind of questions. More than happy to answer your questions. Let me see if I see anything. All right. Okay. Thanks so much, Rob. Okay. Cool. All right. So yeah, this is going to be interesting. Remember, we still have tons of earnings that are coming next week that are going to impact price action, and they're going to have a pretty cool reaction in price. Okay, I don't know why this chart just got messed up. Today I had so much tech issues with my charts and my computers. It was just a ridiculous day. All right, so let me walk you through very quickly. I still have a couple of minutes left. Let me walk you very quickly because I really rushed through. If you guys are interested in the Stock Swing Trader, this is a program that has been going strong for 13 years. We have a transparent track record since we have started the program. We never had a losing year. And basically, we're looking for trends, for trades within trends. Within strong trends. So what this program entails is that you will basically receive an email every Monday where we perform the market analysis, and I walk you through the indices from macro to micro, and we'll show you exactly what's going on in the market and buy points and sell points within the market. Now, in addition to that, we will go through the new stocks that we will have in play for that specific week. Typically, we have on an active week, we have anywhere between 3 to 7 trades every single week. And you're also going to get access to a performance tracker. And this is where we're going to be posting all the trades. You can see here we have a transparent track record from basically from when the program was created, so for 13 years. And you will have access to this. This is where all the trades are going to be posted. This is real time. As soon as we make some changes or we hit some targets, you can see that we are highlighting all the targets that are hit. And you're going to have everything here. I mean, you're going to have all the winning trades, all the losing trades. You can see it right here in percentages. Not only that, but you get access to a position size calculator. So you can actually click this, and it's going to get you into your own position size calculator. You can decide your risk per trade, your entry price, and your stop price, and it's going to give you the amount of dollars that will sum up this, and it will give you the amount of shares that you need to take the trade with, which is very important. Other than that, we provide platform layouts for those of you that are using Schwab, meaning Thinkorswim. You have guidelines, you have the P&L explain, you have holidays, you have option expirations, you have charting if you like charting, softwares that could guide you through that. We got year-to-date performance as well, and we have a lot of bells and whistles here. We even provide you, like I said, with updates on all the trades that you're in. You can see that here, for example, we have a private X feed in which we inform our members that, for example, Apple stopped at break even. In this case, Costco gapped up today. X stopped to break even. So you can see that we're actively managing the trade. So you're not left alone. All right. So I think this is a wrap.
Sorry, my mute button was giving me a little bit of trouble, but thank you, Anka.
It's the tech day. It's the tech problem day.
I don't know what it is. My computer too. Right before we went on, I had to reboot it to make sure everything was working and go to webinar to work. But thank you for being here.
It was crazy, Rob. Yeah, it was so crazy. I'm actually on a laptop right now. My desktop cannot connect to my Bluetooth speaker. My camera is not working. I had software issues. It was just a mess today. And today I had a very hard time just presenting off the laptop.
The Bluetooth speaker. That's it. Call emergency support. We can't trade without good music in the background.
I know. Crazy.
But trading in just 10 minutes a day and generating a 6 or 7 figure income does sound very attractive. Thank you so much for joining us today, ladies and gentlemen. Mrs. Anka Metcalf of Trade Out Loud. If you're interested in trading less than 10 minutes a day, set it and forget it. Swing trades and take home 6 to 7 figures trading in the market, then look no further. Mrs. Metcalf of Trade Out Loud has a solution for you. We put her special link in the chat box. Great presentation, Anka, especially being from the laptop, not, your big cool desktop, which probably has multiple monitors and all of that.
I know. Thank you so much. I appreciate it.
Thank you for taking your time out of your day and joining us on Traders Corner. Ladies and gentlemen, Anka Metcalf.
Have fun.
Be well. Ladies and gentlemen, we have a great lineup of seasoned trading professionals. And if you trade options or want to learn more about options, then you'll want to listen very carefully to our next presenter, who's a professional trader, registered investment advisor, and commodity trading advisor. He's an active trader of his own account. He also manages option-oriented accounts. He speaks on option strategies at many seminars around the world. He is perhaps best known as the author of Options as a Strategic Investment, the best-selling work on stock and index option strategies, which has sold over 300,000 copies and is often referred to as the Bible of options trading. He's regularly quoted in publications such as Wall Street Journal, Barron's, Technical Analysis of Stocks and Commodities, Data Broadcasting Exchange Magazine, Futures Magazine, TheStreet.com, and Active Trader Magazine, as well as others. Ladies and gentlemen, here to present McMillan's Market Outlook, what option indicators are saying now. It's always an honor to introduce Mr. Lawrence McMillan of McMillan Analysis Corporation. Welcome back to Traders Corner, Larry.
Oh, thanks a lot. Can you hear me all right?
Loud and clear.
All right.
We got your splash screen up.
Good. All right, so we're going to spend the next 45 minutes. I'm going to review our indicators, but also I added a a bit of a expansion of what we usually talk about, because we're coming into a period now where there's a lot of seasonal trades, really between the end of October and the end of January. I mean, there's a couple of others during the year, but that's the primary time when you have a lot of seasonal trading. And we're coming up on a very important one actually tomorrow. So this is a really good time to be talking about those things. So we'll get to all of that. First, just a little bit of background on our company. I started out as a derivatives research company, well, over 30 years ago, after having been a prop trader on Wall Street for a while. And we basically, we were doing research, selling research, writing newsletters, that sort of thing. But in 2008, we had a lot of good calls on the market. So we got into money management. So we're currently a CTA, which is on the future side, and an RIA on the stock side, mostly just using one particular option strategy that's been quite profitable over the years. And then we also do a certain amount of option education, mentoring, webinars like this, that sort of thing. I'll come back to this later, but the PDF of this webinar is posted at this website, optionstrategist.com/MCM web, so you can download the PDFs there, both in color and grayscale. And also there's this special that we're offering. I'll talk more about that later. So the four main indicators that I want to go over that we use to have pretty good success in predicting the market. One, of course, the chart of the S&P 500. That's a must. But then we look at equity-only put-call ratios or other put-call ratios as a measure of sentiment. We look at market breadth, where we have an option-oriented take on that. And then, of course, the various aspects of volatility, VIX, and the various futures and things that you can trade volatility with. So this is a very important rule, especially right now. Oversold does not mean buy. So we've had a number of oversold conditions in the last, well, 3 weeks or so. Most of them did not materialize into buy signals, or if they did, they were very weak buy signals. So oversold markets can continue to decline for quite some time. There's a companion saying as well, overbought does not mean sell. We don't really have anything that's overbought right now, but we did last summer, and we will again someday, I'm sure. So here's a 2-year chart of the S&P. There's just a couple of pretty important things on this chart. First of all, this level right here, the 4,200 level, well, there was support at 4,300, but that was already blown through. Now we're blowing through at 4,200. We've fallen below, not only below 4,200, but below the 200-day moving average, which is right here. So those are pretty negative things. And, right now we're in the midst of a 10% decline off the highs. That's, garden variety correction, I guess. But, it's nothing like the ones we saw last year when the market was off 24%, had a pretty big rally, and then went to new lows a year ago and off 27%. Unfortunately, most charts don't look like that. The things that include the big tech stocks look good like this, but the things that don't are really more struggling. We'll talk about that in a minute. But there's a really important thing on this chart. I'm just going to erase those things I just put on there. Yeah. It's this downtrend that's in play right now. So when we get a pattern of lower highs and lower lows, as we've got right here, so the high, high, high. So it's a series of lower highs and lower lows, and now we just made another lower low. That's a downtrend. I mean, you don't have to get more technical than that. And once you're in a downtrend, you have to respect it. So we're basically carrying a core bearish position as long as that downtrend is in place. Yes, we will trade other oversold buy signals around that or what have you, but that is the basic trend right now, is down. And while the fall of the year is often bullish, we'll just have to see how it's going to unfold this year. Here's just a 1-year chart. one thing that's different on this chart I just added here is this. There's a gap that was left in September. It was actually right after the FOMC meeting, I believe. We gapped down. That gap has not been filled. The gap would be filled at 44.01, and so we're basically saying right now this is a negative market until it can fill that gap at 44.01. So what happens when we break support at 4,200? Well, there's a little support here at 4,100 or just below, and then you're talking 3,800. So if we get down that far, it's really pretty ugly. And normally, again, I wouldn't say that was going to happen in the fall of the year, but it did in 2018. So nothing's off the board. The market can do what it wants to do. It's our job to try to stay with the trend and maybe pick specific entry points along the way. So just to summarize, when we drop below 43.30, if you were a subscriber, you know that I was very concerned about that level being major support. Now we've broken 4,200 and the 200-day, and we're in this pattern of lower highs and lower lows. So to me, that all adds up to holding a core bearish position until the gap at 44.01 is filled. And as we move lower, we use trailing stops. I'll bring those stops down closer to where the market is. So another thing we do with the S&P chart is we draw Bollinger Bands around it. I call them modified Bollinger Bands because when John Bollinger invented Bollinger Bands, he defined volatility as the standard deviation of closing prices. And while that sounds logical, and it is logical, the math guys have a slightly different approach. They use the standard deviation of daily percentage price changes. So here's the chart of the S&P with the modified Bollinger Bands drawn on it using that alternate definition of volatility. So that's the +4 standard deviation band right there. Inside of that is the +3. So we get a signal when it moves outside it, and then back inside that is a sell signal right there. And then typically we hope to see it reach the lower band and then we cover. So the red letters here are successful signals, and we've had this system in play for a long time, 20-some years. So it's made a lot of money over the years. Fortunately, right now, it gave a false buy signal there, and now this is a buy signal generated right around the 1st of October. I'm actually the 6th of October, but it's now obviously not doing too well. And if we fall below the -4 sigma band there, which right now is around 41.40, if we fall below there and close below there, that will terminate that signal, and a new one would have to set up. So it has a great track record. Obviously, any system is going to have some losses. It's rare to have 2 losses in a row in this one, but it looks like we could be in that period right now. This technique can be applied to not just S&P chart, but to any index stock or futures contract. And so we actually offer a service where we have the the charts show these signals on them. You can see there's the buy signal there, a sell signal there. This is the S&P, and we email you every day with new signals or where the new signals would set up. So one that I'm actually looking at pretty closely right now is XLP, which is consumer products, where the thing really got sold off very hard, dropped way below the -4 sigma. Now we're trying to get back inside the -3 sigma and generate a buy signal. Anyways, moving on, the next indicator we look at is put-call ratios. Put-call ratios were discovered as an indicator by Marty's White back in the 1950s, and it's a contrary indicator. So basically, if there's too much put buying, that means everybody's bearish, and we want to do the opposite. We want to do something bullish. Conversely, if there's too much call buying, then everybody's bullish, and we want to do something bearish. Of course, defining what too much is the whole key to this. And so let's just look at a simple example. Suppose at the end of the day in IBM, we sum up the volume of all the calls that were traded, all the puts that were traded, and separately sum up the volume of all the calls, divide the two. that's the put call ratio for today for IBM. So that just uses the volume of the options, not their price. So what happens here, since puts are in the numerator of this fraction, if the numerator increases, the ratio goes higher. In other words, if put buying increases, the ratio goes higher. But when's put buying likely to increase? Well, it's when the underlying is going down, right? So they move in opposite directions. Same thing with call buying. If the denominator increases, the ratio drops. And of course, when is and that's with heavy call buying. When is there likely to be heavy call buying? Well, that's when the stock is rallying. So we publish about 1,600 of these charts on our website every day in a very low cost area of our website, which we call the strategy zone. And I keep a moving average just in case there's something to do with Fibonacci, but we use a 21-day moving average on these. And here's how it typically would work. Let's say the stock is moving down. And so as the stock is moving down, people are buying puts, forcing the put call ratio higher. So the public is right during a trend. But now eventually the put buying wanes and we get a local maximum on the put call ratio chart. The local maximum on the put call ratio chart is a buy signal for the stock. So now if things are working right, the stock starts to go up and move back over to the left, stock's still going up. As the stock is going up, people are buying calls, forcing the ratio down. Eventually you get to a local minimum on the put call ratio, and that is a sell signal for the stock. So for the broad market, we use all stock options that trade the equity only put call ratio. So this is not a current chart, but on top is the S&P 500 index, and on the bottom is the equity only put call ratio. And you can see the inverse symmetry that exists there most of the time. That's why we use that ratio. So here's the current situation using, again, just option volume. We had a great sell signal back here in July when the indicator was way down here. So there's a local minimum right down there. Remember, that's a sell signal. So that coincided with this. Then the market did sell off. Now what's happened here is we did get a local maximum right there, which would be a buy signal, which is premature. But as you'll see in a minute, this is not the only put call ratio that we use. So as computers came along, we could calculate what's called the weighted put call ratio or the dollar weighted put call ratio and take price into consideration, option price, so we can see how many dollars are being spent on bullish opinion versus how many dollars are being spent on bearish opinion. So again, let's say it's IBM. At the end of the day, we take the option closing price, we multiply it by the volume that traded in that option that day, and we sum those up for all the puts. Separately, we sum them up for all the calls, divide the two, and now that's the weighted put call ratio. You could do it tick by tick. We use this end of the day method because it's a lot cheaper and basically gives the same results. So now we're measuring these dollars. So it turns out that this can be quite interesting because here we had this same sell signal at the end of July, but now we have not had a buy signal. This is still moving higher. This is right through yesterday. And I would think with today, the market being down, 30 some S&P points, will probably have a good amount of put buying today too. So we're waiting for this to come up here and make a local maximum, which would be a buy signal, but it hasn't happened yet. So based on these two put call ratios, obviously this one is more in tune with what the market's doing right now. We're really not calling this area bullish at this time. We would wait for this other signal to come along. So again, we follow these for a long time. These equity only put call ratio signals, they're in the Option Strategist newsletter, the long-term track record. Right now, as I said, we have the buy signal on the standard, but the weighted is still bearish. Also, we follow what's called the total put call ratio, and it's very much in tune with what the weighted ratio is doing. So we're waiting for these to roll over to get a buy signal. At the current time, they're still bearish. Now, what do we buy when we want to buy here? So in these two cases, the Bollinger Band signals or these put call ratio signals, we're trading the broad market, so we buy SPY calls. And we typically, I want to buy an option that's got a fairly high delta because I'm trying to predict what the underlying is going to do. And I don't want to be right on the underlying and wrong on the call. And if you buy an option with too low of a delta, that you could have that happen to you. So we buy fairly high delta. If we're trading short term, we're looking to buy a SPY call in the money, 1 or 2 strikes with a delta 70 or higher. If we're going out a little farther, maybe say 3 months, we'll buy an at the money call, but it still has a delta slightly larger than 0.5. So what happens is, when we're right, the option moves with us. Now on TV, they seem to always spread, and in reality, I don't know any strong, confident option trader who's speculating and is spreading every time like they do. Now there's times to spread, but when you spread, you buy this call at the lower strike, and then you also sell a call at the higher strike. So what happens is when you get to the higher strike, the call you sold limits your profit potential beyond that point. So you really should only be doing that if the options are expensive. And again, on our website, we publish free volatility data every weekend, and you can refer to that during the week, or if you want to buy every day, you can subscribe to it every day. But what the red line shows what your profit graph would look like if you owned a call. And of course, it's unlimited to the upside. But if you have the bull spread, you've cut off your upside. So beyond this point, you're not making any more money. And the proponents of the spread say, well, you're risking less. Actually, you're not risking less. You're risking 100% in both cases. Your broker will only ask you to put up the price of the spread or the price of the call, in which case you could lose all of it. So you're really risking 100% in both cases. If you're that concerned about dollars, then instead of buying 4 spreads, maybe buy 3 calls or something like that. But the risk is 100%. So that's a fallacious argument. So there's a couple of ways, if you are spreading, to minimize the negativity of having sold that call. First, you could widen the strikes when you put the spread on. So right now, with VIX starting to move higher again, we are spreading when we're trading VIX, but if we're doing a call spread, we leave 15 to 20 points between the strikes. And if we're doing a put spread, we're leaving 30 to 50 points between the strikes, because puts are more expensive out of the money than calls are. So, okay, well, this is just a refinement on that. Also, what you can do to improve your profitability is once it rallies to the short strike, let's say you've got a bull spread on, rallies to the short strike, take that spread off, take your profit, and now put it on a new one, because there's really not that much more left to the upside. So those things, when we're making recommendations in our newsletters, we talk about those things quite often. The next thing that we look at in terms of a market indicator is breadth. So breadth is simply advances minus declines. You can keep a cumulative total of that, or you can keep an oscillator. So we do both. And the oscillator that we keep is today's oscillator value is 90% of yesterday's oscillator value, plus 10% of the difference between today's advances and declines. Now, there's 2 data sets that we use. The first is the obvious one of the New York Stock Exchange, but because there's a lot of things on the New York Stock Exchange that are not stocks, they can distort breadth. So we also use what's called stocks only breadth, or what we call stocks only breadth. And in this case, that's all stocks with options. There's over 6,000 optionable stocks right now, so that's a pretty big data set. And we keep the oscillator. Here is the oscillator going back almost 10 years. And you can see that in the bull market, we didn't get the oversold areas are green. We didn't get oversold very often. We got overbought a lot. But then, once we hit a couple of hard spots, this was December of 2018. This, of course, was March of 2020. Those created huge oversold conditions. And as I said before, oversold doesn't mean buy. So we didn't actually buy till here, but there's still plenty of room left on the upside. Now, since 2022, we've been in a more bearish market most of the time. I understand that we rallied, on S&P terms, we rallied since last October, but in real stock terms, it's been a much bigger struggle. Look at the chart of the Russell 2000, for example, is mostly going sideways. In fact, it's really right down to its lows. So either it bounces from here or there's big trouble ahead. Anyway, we're currently in a very oversold state right now. So the market has sold off here in the last few weeks, has been oversold most of the time. It tried a little pop there, didn't really work. So we're down in here. We're pretty oversold. It's going to take a couple of days of positive breath just to get this thing back to the buy signal. And even then, this is a very short-term indicator. It does have whipsaws, but it can't, if it gets it right on the market, when breadth is truly improving, that's obviously a big proponent for the market. We use fairly tight stops on this one. They happen, but right now it's on a sell signal, and we're waiting to see if it can deliver a buy signal here coming up. New highs versus new lows is another indicator that I think has a lot of worth in the market. We use a very simple situation. If new, in this particular case, as you were showing about the last month and a half of data, and right here on these 2 days, September 21st and 22nd, new lows on the New York Stock Exchange were more than 100 on both days, back to back. Same thing here. So this is a sell signal, and that sell signal is still in effect. Now look what's happening here recently. 3 of the last 4 days, we've had more than 400 new lows. So that means that, new lows goes back to last October. So not only are these stocks making new 52-week lows, but they're actually making lows below the low of the bear market that we had in 2022. Today, there's about 250 new lows so far. So this is pretty ugly, and I think it represents what's going on in the market right now, whereas if you're not just a few select stocks, you're probably getting hammered. And it has not been a good market to just be in some sort of broad-based mutual fund or one of those kind of things. Anyway, this is still on a sell signal, and it will remain on a sell signal until we can get 2 days when new highs are greater than 100 back to back. Now brings us to the VIX indicators, and the VIX indicators are very important. Now, the trend of VIX is important to the stock market, and also spike peaks in VIX are important for stocks. So it turns out that we have a trading system based on each of those. And also, just as an aside, the VIX is very low. People sometimes say it's overbought, and that's bearish. But it really, again, as I said before, overbought does not mean sell. So it wouldn't be bearish until VIX begins to rise. So here's the current VIX chart. These Bs are spike peak buy signals. So the red ones and the orange ones are strong. Those are winning trades. We trade the first one, the red one. We don't really trade the orange one if it occurs within a month of the first one, because we're just trading the first one. But you can see that that happens fairly often. Now the blue ones are where we got a false signal and we get stopped out on those things fairly quickly, usually. So there's been a couple of false signals, and there was one here in early October, as again, that market that sold off there, it looked like it was going to rally, but it didn't. So now we've just gotten another spike peak. The other day, VIX got up to 23, fell all the way back to 18 almost. And so VIX is only 20.7 right now. So it hasn't really rallied, even though S&P, SPY are making new relative lows below 4,200. VIX is not getting too excited about that. So there's a new VIX spike peak buy signal. Countering that, though, and this could be extremely important for the longer term, this is a trend of VIX sell signal. In other words, both VIX and its, get rid of that. Both VIX, so here's VIX, and here's the 20-day moving average, and here's the 200-day moving average. You can see both the 20-day and VIX are above the 200-day. That's a big negative. When that happens, VIX has a trend of VIX sell signal. The last time we had one of those was back in September of 2022, before we went into the lows in October. There had been another bigger one way back in the beginning of January 22. So we don't get those too often. The fact that we've just gotten one now could be, again, a more intermediate term negative. That would be canceled out, of course, if VIX fell back below the 200-day, which, as you can see, is just above 17. So if VIX falls back below 17, the VIX spike peak buy signal is winning, and this trade would be stopped out. But there is obviously some concern here. Now, I just put one other comment on here. It used to be VIX, in a bull market, VIX will go down to almost 10. But the fact that VIX really didn't go below 13, even in a pretty strong rallying market this year, indicates to me that things are just a little more bearish than you might think. Because if things had been really bullish, VIX would have gone down to like 10. So in any case, we have these two signals. They're split right now. We'll have to see how that one resolves itself. Now, you can't trade VIX. You can trade futures on VIX. You can trade options on those futures, which we call VIX options. And by the way, if you are trading those, you're trading options on the futures, not options on VIX per se. I don't want to get too much into that. But we can use the pattern of the futures, how they line up, as an indicator for the market as well. So here, if the near-term future is the lowest and then they go higher out in time like that, that's bullish, and typically VIX would be somewhere below these, and so they would all be trading at a premium. On the other hand, if we have this situation where VIX is high and the futures are sloping downwards like this, futures prices, that's a negative or inverted skew, and that's very negative. So we haven't had that negative skew really since March of 2020. The entire bear market in 2022 was very calm, very orderly. Anyway, here's where we stand right now. And I don't know why that is happening like that. So I can get rid of that. No, okay, there we go. So here's the price. I took a snapshot midday today. VIX was 2162. The near-term futures were 2095, and the next month was 2090. All right, well, that's not good because that's slightly inverted. But slightly inverted, we can live with. If that gets to be a big inversion, we have a problem. We start to see that second slide there. But you can see from then on, they slope upwards, not a lot, but a little. They're sloping upwards to even where we go out, out to next June. There's a premium. It's only 63 cents. That sometimes is as big as $5 or something in a real bull market. But this is sort of indicating that there's some concern here. And you can see that the first 3 months are all trading at a discount to VIX. Yeah, again, not a huge discount, but a discount to VIX, also slightly bearish. Now, if you don't have the futures, you can look at the CBOE's volatility indices. There are 6 of them: 1 day, 9 day, VIX is the 30-day, etc. Here's how they line up right now. You can see this is not a perfect slope. These slope upwards right here, but this 9-day being above these other two, that's somewhat worrisome. Again, I wouldn't say that's an outright, terrible sell signal, but a couple of times in the past where the market has had some severe dislocations, February of 2018, February of 2020, these things inverted very obviously before the market broke. So this is something we're keeping a very close eye on right now. If these inversions really take hold, that would be negative for stocks. So what does really take hold mean? Well, I would say if November futures rise more to a price of more than $1 above December futures, then it's time to really take some defensive action. So just to summarize what we've got going on right now, we do have some bullish indicators. If you recall, there was the MVB, the McMillan volatility band indicator, the standard put call ratio, and the VIX spike peak. They're not, I wouldn't say doing that well right now. As we just went over the construct, it's kind of in the middle, but all these things are negative. The trend of VIX, the trend of SPX, the breadth oscillators, new highs versus new lows, and the weighted put-call ratio. So if some of these can move over this way into this column, things would improve a lot. And since they are very oversold, that's a possibility of happening, but we can't say, I don't anticipate. We just react to the indicators themselves. All right, so I want to finish up by talking a little bit about some seasonal patterns. So this just summarizes our whole thing. So SPX is in a strong downtrend. We're holding that core bearish position. We would stop ourselves out if VIX closed that gap at 4401. SPX closed the gap at 4401. And but we will trade other signals around that as well. So right now, we're entering the first of these seasonal trades, and normally these are pretty profitable. They seasonal trades means they're based on the calendar. So this is the first one. Buy the market on October 27th and exit on November 2nd. But we only take the signal if there's been a somewhat severe sell-off during October. This year there has been, so this trade is definitely going to be in play. Here's the track record. In the last 45 years, there's been 8 years in which we didn't take a trade because that decline didn't happen. And the 37 years that we did take a trade, there were 31 winners and 6 losers. And the average gain is 2% on SPX. So, that's 80 or 90 points in today's market. The median trade is a little less than that because there were a couple of huge winners, one of which actually occurred in 2008 during the financial crisis. As bad as October 2008 was, there was a 115-point rally, a monster rally in SPX in this time period, right there at the end of October. Then it went back into a bear market for November. So this is just a short-term thing, but we are going to trade it this year because that 3.2% decline did take place. And so tomorrow on the close, we will be buying the market and planning to hold, perhaps take a partial profit or whatever if it arises, but hold some position into next Thursday's close, November 2nd. So that's the first one. That one I really like. That's gotten a lot of publicity over the years. You probably read about it in Barron's or something if you're reading Barron's. But we've used it for quite a while. The next thing that comes up after that, though, is a more complex situation. So typically, right after Thanksgiving, there's a rally. You can go back and look those up. It's a little hard to time the end of those rallies. It's like 1 or 2 weeks. It's very vague, but typically rallies, even in 2018, which was a very bad December, the market did rally right after Thanksgiving. Then the next thing that occurs seasonally is what's called the January effect. And when it first started, it took place in January, but now, as with many things, traders see what's happening and try to get a jump on it. So the January effect really occurs in December these days. But basically, it's this. You're trying to buy washed out small cap stocks, looking for a rally, and small caps will outperform big caps when that happens. Then finally, we end the year with what's called the Santa Claus rally, invented by Yale Hirsch years ago. The Santa Claus rally here at the bottom, it encompasses the last 5 trading days of one year and the first 2 trading days of the next year. Typically, market will move about 1% higher in that time period. If it doesn't, though, that is also a bear market warning. Anyway, the post-Thanksgiving rally lasts for a week or 2. And of course, as I said, this takes place in December. So it was very hard to put these 3 things together, but what we decided to do was combine all 3, buy some Russell 2000 calls right at the end of Thanksgiving and hold them into the second trading day of the next year. And the Russell 2000 representing the small caps, IWM would be the ETF for that. And so that's had a great track record. 2020 had its best year. That was 134 Russell 2000 points, which was a lot. But then it's last couple of years it's struggled. In fact, 5 of the last 6 years, S&P has outperformed the Russell, except for that 2020 during that time period. So, you know, we're considering this year we might want to throw some S&P in there as well as the Russell. But this has a pretty strong track record: 23 wins and 8 losses in the last 31 attempts, 31 years, and the average win is 4.7%. That's because it's a longer holding period, about 5 weeks or so. So just a couple of other facts. You sometimes hear people talk about trading during Thanksgiving week. To me, I wouldn't bother. This is the last 33 years what's happened on Monday, Tuesday, and Wednesday of the week of Thanksgiving. You know, Monday is really up in the air. Tuesday, there's been more winners than losers, but they've only totaled 54 S&P points in 33 years, so that's not very much. Wednesday seems to be the best day, but again, I don't know if I'd really trade that. And then if you really want some justification for not coming into work on the day after Thanksgiving, this is it. The market basically averages going down 0.1 of 1%, so it really doesn't do anything. And while I know a couple of years ago, the market was down 106 on the day after Thanksgiving, overall, it averages out to not much of anything. But we do then move into January, and there's 2 strong patterns in January. And if you take us up on our offer, and we'll talk about in a minute, you will be a subscriber during these time periods. And the first is what I call the January defect. Actually, I didn't name that, someone else did. But basically, you sell NDX on the 8th trading day of the year, and you cover 10 days later. Obviously, we buy puts, not sell short index. And then later, starting on the 18th, when that season was ending, you buy S&P and you hold it for 4 trading days or 5. There's some nuances there. So both of these have had some pretty good trades over the years. 2 years ago, we are 1900. Well, 2 years ago, 2022. The market, if you'll recall, started down pretty heavily in January, and the brunt of it was taken by the big cap, tech stocks. And so S&P or NDX dropped 1,900 points in that time period. So that was a very profitable trade for our put buyers. There's been some big losses in this trade too. In other words, like this past year, more NDX rallied a lot in January. I think people have been waiting to buy back those same stocks in January. But since we're buying puts, we have a limited loss. So we're not, taking a huge loss on any of these. It's just limited based on your capital. Then in January, that trade, 30 wins, 8 losses in the last 38 years. The average is about a 1% move on the S&P. In the last 2 years, we've seen moves are way better than that. So these all add up to, seasonal trades that we are going to be making coming up. And also there's a couple of others during the year, but these are the main ones. And so this offer that we're offering right now is $249 for 4 things. Number one, you get the Option Strategist newsletter where you'll be reading about these seasonal trades. And we usually try to write some articles about them and things like that so that you're, more informed than just saying, do this, do that, whatever. You also, if you're interested in learning, receive a 14 webinar intensive home study course. These are all recorded in the last year and a half, and they are ranged from elementary through advanced. Each one is at least an hour and a half long, so that's quite a bit of option educational material there. And of course, then you get the book. And if you want, we'll talk to you about our money management strategy as well. So just the things that are in there, the Option Strategist, we've been publishing for 32 years. There's a full track record on our website. As I said, the intensive webinar, home study webinars are each about an hour and a half in length. and if you're interested in the consultation for money management. We also have a brand new website, so I invite you to come and visit that. This is just what our homepage looks like now. If you're familiar with it before, you know it looks quite a bit different. And we just put up a number of new. Well, actually, all the pages I guess are new, maybe until you dive way down deep into the subscriber areas. So we have 2 other newsletters that are more expensive, the Daily Volume Alerts and the Daily Strategist, where we talk about all of these things daily, and we trade all these signals as soon as they happen. We also have a YouTube channel and record a market comment every Monday if you're interested. And then in a less specific way, we have a daily put writer newsletter where we write deeply out of the money puts with a high probability of success. And that has a really good track record. And then we also have a special situation alerts newsletter as well. So you can access all of these things. If you go to this MCM web, that's where you can download the PDFs of today's webinar and also get that special, as well as looking at these other things if you're interested. So this is my contact information. If you're interested in money management, visit this website, McMillanAsset.com. And you can see our track record and learn a bit about it. Since we are registered, we do need to talk to you about things. So it's not like everything is up there on the website. That's not the way you can do it when you're registered. In any case, I think I'm just about on time for concluding here.
Oh, Larry, I want to ask again. The thing for tomorrow, 10/27. We're going long on the SPY, and we hold it for a couple days.
That's it.
Well, I'm gonna buy a couple week outdated calls and test that out.
Yeah, you should. Yeah, definitely. I mean, I'm definitely be seeing that myself. I've been doing that myself.
Hey, if I'm following you, I feel like I'm, kind of doing well. But, hey,
okay.
As usual, incredibly informative information. I love your presentations. Ladies and gentlemen, that was Mr. Lawrence McMillan of McMillan Analysis Corporation, and we refer to Larry, like I think it was Mario said in the chat, as the E.F. Hutton of options traders here on the Traders Corner, because when Mr. McMillan is talking options, it's a real good idea to listen. I guarantee you'll learn something. Keep up the great work, Larry. I've been waiting all day to get to your presentation and hear your perspective on the current environment, and bullish for the next few days, and it seems to be bearish after that.
Right.
Please come back and see us again. We love having you here on Traders Corner. Ladies and gentlemen, if you want to learn to trade options from the author of the Bible of options trading, or just start receiving Larry's trades, I put his link with the MCM web on it in the chat box. Thanks again, Larry, for being here. We hope you come back and see us again. Have a great rest of your week and weekend.
All right, you too. Thanks.
Thank you, sir. And I just have to promote our next presenter. Here we go. And that will bring us down to our last 2 of the day. And next up is a seasoned trading professional with over 14 years experience trading the markets. Over the years, he has tenaciously studied charts, strategy, and trade plan development. And since his own enrollment into Neuro Street's coaching and training, he has found his way to consistent, profitable trading for several years now, after facing a grueling 10 years of break-even-ish anguish. He's a highly sought-after guest speaker for virtual events worldwide, tasked with educating and sharing his insights on how other traders can pull themselves out of the mire and into consistent profitability with discipline, proper money management, and a greater focus on the big picture. Here to present Live Trade Room, Real Trade Fills, Transparent Performance Tracking is Mr. Jim Simmons of Neuro Street Trading Academy. Welcome to Traders Corner as always, Mr. Simmons.
Hey, Rob, how's it going? Thank you. Thanks for having us back, and always good to be here. Can you guys see my screen okay? You can hear me and everything?
Always doing well, loud and clear. We got the right splash screen.
Super. Love it. So stuff is working. That's a good sign. So excellent. Well,
A
let's
few
go
of
ahead
us have had tech problems today.
No, actually, not today. Knock on wood. So, all good. So, yeah,
Well, I'm
perfect. Well,
glad to hear. Feel free to take it away.
all right, good deal. Perfect. Well, thanks traders for being here. Always a pleasure, and great to have the opportunity to visit with you today. Got something pretty exciting to show you that I think you're going to absolutely love. As just a quick overview of the audience, if you could type in the chat box in the questions or wherever you like, and let me know, what do you like to trade? Are you trading stocks? Do we got stocks traders in here? Options? Are you trading futures, forex, a little bit of all of the above? Just good to know where everybody's at. If you could do that, that would be super. And let's go ahead and get started here. So first off, before we dive in, of course, we do need to put our disclaimer here. Neuro Street has no financial interest in the outcome of your trades. Our products and services are for educational purposes, and there's risk in trading, so please understand that. Okay. Cool, all good. I'm sure you've seen this a number of times today, so nothing new, right? I'm just gonna go ahead and dive right in. We'll just skip over the fluff and get into it here. So quick intro on who we are. Sean Kozak's the CEO and founder of Neuro Street, systems architect for over, I don't know, probably reaching toward 100 indicators and algos at this point. And myself, Jim Simmons, sales room, sales and education manager, trade room instructor. I run the trading room for the futures, forex, and crypto, which we're going to look at today. Jim Schmelzer is a portfolio manager and an options trading instructor for Neuro Street. Ethan is our trade room instructor for stocks. And really great team here we've assembled. All of us have years and years of trading experience. Here's what really matters is we have a no nonsense approach. When we present something, it's our intention, it's our focus to be transparent in everything that we do. So that means when we show you what we're doing, we're going to show you the performance of it, because we believe that you should be able to see that performance in order to believe or trust that what we're doing is actually working. We have a no nonsense approach. We don't do false hopes here. We're here to lead by example, and we're here to show you what we're doing. Sound fair? So, why are you here today? Are you here because you wanted to learn some new strategies? Are you here because you wanted to see some of the top new gadgets in the industry? No, you're here because you want to make money. And now you can correct me if I'm wrong, but we're here because we want to make as much money as possible. We want to make more money in less time. That's why everybody trades, right? More money, less time. That's the name of the game of trading. It's why we got into trading, because we believed that there was an opportunity to either replace an income or supplement an income or create income for retirement or whatever the case may be. To not be attached to a ball and chain, but to be able to trade from anywhere. These are the visions that we had when we got into trading. How many of you have realized those dreams of being able to create an income in trading or to supplement an income? It's not easy to do. And there's probably some of you here that have already done that. And to you, I say congrats and excellent. Let's take you to the next step and give you more winning trades, right? But we're all here because we want to make money. Now, some of you are not where you want to be in trading. And the reality is, it's probably not your fault. Trading's hard. It's not very easy to do, not very easy to get to a profitability. So maybe you're not where you want to be. Maybe you're sick of the vendor rat race. How many of you are tired of spending money in the industry and you're ready to just make some money, right? Maybe you're desperately trying to get funded. How many of you are doing evals? I know there's this slick little deal I see floating around from Traders Corner through Apex, right? Trying to get funded, and they have a great operation and a great opportunity to trade someone else's money. That's an incredible opportunity. But some of you have been on this hamster wheel of trying to get funded. Maybe you've even gotten funded, but then you lose your funding. And you feel like you're just on this cycle of, I can't get to the friggin' finish line. Some of you have drawn a line in the sand and said, I'm sick of it. It's either now or never, right? Cue the Frank Sinatra. Or whoever that was. Was it Frank Sinatra? You can correct me if I'm wrong, because I actually don't know now that I think about it. Maybe you want trades like this, trades that come into your area of interest and then leave and then go to hit multiple targets. Quick trades, in and out. Some of them are quick, some of them aren't. That's okay. Some of you want results like this, where you can see stats that actually show profitability for you. So when we look at what we're doing, we have to start with performance, because there's no boasting without proof. So what we do is we track all of the trades that we take on futures, Forex, if we take anything on crypto. Right now we're covering it, but not facilitating the trades necessarily. But futures and Forex, definitely. So those of you that answered, you're trading futures or Forex, Mary, you're new and love it, and welcome to trading. But you want stats like this, stats that can show profitability. What we're doing works for day trading. It works for swing trading. It works on different time frames because it employs a multi-time frame analysis approach. The goal here is complete transparency. So I'm going to sidebar here for a second, and we're going to go into the actual up-to-date trade log, which is updated through today. We took a trade on dollar Swiss. We took a trade yesterday on euro dollar, and then last week on HG, took a stop out on crude, took a trade on nat gas. Anyway, all the trades are in here. Okay, so if we look here, we're at 157 trades and we have a 70, call it 75, 76% blended win rate. Futures, 78% win rate, Forex 71. Okay, so you look at this log and you say, well, that's great. 769, that works too. So you see the win rate and you go, okay, well, what about risk reward, right? Because win rate is only a small portion of the story. Can you manage risk? What does that look like? All of these trades are 1-to-1 risk reward or better. Some of them go on to yield 3-to-1, but let's just pause on that for a second and say that all of them are 1-to-1. Okay, so let's assume all of them were 1-to-1 because they're at least that. So at a 1-to-1 risk reward and a 76% win rate, can you make money as a trader consistently? Yeah, absolutely. What does the profit factor look like? Well, if you're at 75%, you're at a 3.0 profit factor. So does it work? Yes. Is it consistent? Yes. We've got a few days left in October and I'm hell-bent on making sure we have that number where it needs to be. But it's consistent. Yeah, even if we end at 68%, it's not the end of the world. Still solid. It's still over a 2-point profit factor. So that's what we're actually doing. How do you know we're actually doing it? Well, because we have screenshots of every trade that we've taken. So we can go in here at any point in time. You can go in and see every trade that we've taken. Actually, HG, was that the most recent? I don't know why that's not in there. I have to update that. That one didn't get in there. But all of the trades that we've taken are either here or need to be updated. They're all here. Real fills. Entry, target 1, trailing stop. Entry, stop. Put the stops in there too, of course. We've got an entry here, break even. We've got an entry here, break even. We've got another stop out. Entry here, stop. We take stops. This one, they low ticked us, jerks. Here's another one. Took a break even on this one. And then we start getting into some profitable trades here. There's a break even. MGC, here's another one. Took profit. Another one, entry, target hit. Another one, entry, target, 2 targets. Entry, break even roughly. Entry, end of day close because we hit the end of the day. Got to close your positions, right? Entry, target, end of day exit, break even, and it goes on. They're all here. Here's another target. So that's futures. What about Forex? Yeah, they're here too. There's one we took today. Confirmation entry on dollar Swiss. Didn't give us the bigger target, but we took 1-to-1, so that's fine. There's one 1-to-1 back to break even on euro dollar. Here's one, took an entry there, euro pound, target there. So they're all there. So how do you know we're not just cherry picking the trades? We have in our Discords, we go in and we post all of the trades that we're going to take in advance. So we have all these threads. Here it is. Dollar Swiss. That's the one I showed you that we took a profit target on. There's the entry waiting to get hit. Posted in our Discords for everybody to see. All the details on how to trade it, where to trade it, what's going on. Here's the trade that we were in. Other one, we post all of the trades in advance. So if we take pictures of all the trades and we put all the trades in our logs and we take pictures of everything before we take it, it's 100% the real deal. Because make no mistake, if I forget to put a trade in the log, the traders will tell me about it. Hey, you forgot this one. They're not going to let me off the hook, and neither should you. So they're all in here and all planned in advance. So let's break this down for a second. So you have somewhere where you can go and just watch Discords, enter the trades exactly as we're trading them, and get a 75% win rate. Yeah, that's what I'm telling you. And what we're doing is working, but it's not just working for us, it's working for our traders. If we go into live trading picks, you can see traders showing their trade fills. There's a winning trade. There's another winning trade. This one, yeah, there's Bill posting his trades. And traders showing that they're getting funded, that they're getting paid out, all of the above. It's the real deal. And it's an amazing thing to see when your traders are posting the trades that you're putting. There's some that I miss and they take and then they make money. And I'm like, all right, that's awesome. So you can see I'm posting my trades in here and then the traders are posting theirs as well. Okay. So this is how you know that what we're showing you is not just a bunch of fluff. We don't have time for that, and neither do you. And you deserve better. So we show you what we're actually doing. So how do we do it? That's the next question. Well, there's some things that you need to know in order to get ahead in trading in general. And this goes for no matter what you trade. If you trade with what we're trading, or if you trade something else, or you trade a combination of, that's up to you. But what are you willing to do to get there? There's a couple things you need to be willing to do. One is you have to be willing to let go of the past. As far as I know, you can't go back in the past and change it. It's over. So let it go and let's move on. So you lost money last year. Sucks. I'm sorry. But that money's gone. So let's forget about it and let's focus on making money with what you have today. You made money last year. Great. What did you do today? Because the only thing that matters is what we do today. Tomorrow doesn't matter. Yesterday doesn't matter. The only thing that matters is, are we in a position to take winning trades today, to scale our accounts and to make profitable income for ourselves as traders, to spend less time on the charts and make more money, because that's what we're after. You have to be willing to do what it takes. We've heard the stats. I don't really care what they are. 90, 95%, whatever it is. Doesn't matter. But you have to be willing to do what all the traders that aren't making money weren't willing to do. Does that mean it needs to be overly complicated? No. It just means you need to be able to follow in the footsteps and get help from somebody who's qualified to help you get there. Now that could be us, could be anybody. But you got to be willing to get help from somebody who's qualified, that one can demonstrate their ability to trade profitably. Two, they can show you. In other words, they can actually teach you. And three, it has to be something that you can actually replicate. Is it repeatable? Because if you can't replicate it, then what's the point? If I go in and I put on a bunch of trades that you can't even enter because they happen so quick that you have to be sitting in front of your screen all day, well, what did that solve? The whole point of what we're doing was to work less, not more. So why do you want to sit in front of your screen all day? Most of the trades that we take are set and forget trades. We put them on, we leave them alone, we go about our day. We have trades that hit overnight. But when 75% of them are hitting, you're good. So be willing to follow a new process. I haven't heard a trader tell me yet, you know, I'm consistently profitable, have been for years, and nobody ever taught me anything. I learned on my own. It hasn't happened, and it's not going to. Trading is hard. We know that. So be willing to get some help. Be willing to have somebody show you, what are you doing? How's it working? So be willing to learn. Keys to success. You need a strategy that can produce consistent winning results. That's probably a given, so that's an easy one. We need a strategy that we can trade in any market condition. Up, down, sideways, doesn't matter. You need something that can always give you trades with no excuses. Now, we don't take a lot of trades with what we're doing. We take maybe 1 to 3 a day. If it's a busy day, we'll take 2 to 3. But otherwise, we're typically about one a day. There's not a lot of trades, but the trades we do take are really good. You could take more than that. You can absolutely take more than that. All you need to do is take what we're doing and size it down to a smaller time frame. And just for fun, later I'll remind me and I'll show you what those numbers look like, because they're just as good. I've been testing it on shorter time frames because a lot of our traders want more trades. And that's totally understandable, but I'm not going to just bring them something without testing it first. Got to make sure that we can prove the viability of what we're doing and so on, right? So just responsible trading, right? We use multi-time frame analysis, and with that, you can trade on any time frame. So we trade on a 4-hour, we trade on a daily, 4-hour, and 1-hour. Those are our time frames that we trade on, and we're day trading. And you say, how on earth can you day trade a 60-minute? We'll show you. Actually works extremely well. But you're not going to get a trade on the MES every day or the crude oil every day because you're on a higher time frame. But if you trade everything, then you always have trades. We're not just trading one equity and one energy and one metal. We trade all of them. And then we trade all the Forex pairs too. So you can day trade this, you can swing trade this, you just go up a time frame. Instead of doing daily 4-hour, 60-minute, you would go to weekly, daily 4-hour. And now you're swing trading, which is going to work great on Forex especially. Now, I know some of you are trading prop firms and that sort of thing, and you don't have the ability to swing trade or hold overnight, and that's fine. You could day trade with what we're doing too. The best part is it's compatible for all asset classes. Anything that you want to trade, it'll work. How do I know this? Because we've looked at futures, we've looked at Forex, and we've looked at crypto, and they're all great. They all hit. Crypto was the one that I was like, I'm not too sure about it, right? Because what we're trading has to do with liquidity, and crypto is purely speculative. Like there's, if news hits, look out, don't trade. But crypto, I just I wasn't expecting much from it, but it's insane how good it is. Actually, it's kind of insane. All of our trades are planned in advance. So no more sitting in front of the screen all day waiting for a trade. You put the trades on, you go about your day. So those of you that are working 9 to 5s, you don't have time to sit in front of your screen all day, this is perfect for you. Perfect. So we do have trades that we take, I would say, on the 4-hour, but the 4-hour is kind of our directional bias. Everything that we do is on the 4-hour, but then we scale into a 60-minute time frame as well to refine our entry locations. So that'll kind of bring the time down a little bit, but all of the trades we take are in and out within a day. So they're definitely day trades. Yeah, we don't ever hold trades for multiple days. So yeah. Here's the beauty of what we're doing. It's pure price action. There are 0 indicators on our charts, none. This is all done manually. And we teach you how to do it so that you know how to do it, because we don't expect anybody to just rely on us. We want you to be able to trade it too. And we're trading liquidity. Why would we trade liquidity? Anybody have an answer for me there? Who knows why we would want to trade liquidity concepts? Anybody got an idea? Liquidity equals money. Who's looking for the money in the markets? Big financial institutions, banks, Institutional traders. If institutional traders need to know where liquidity is in order to do their positions, then that's where we want to do business. And that's why we trade it, and that's why it works. Yeah. It's like finding, the best way I could put it is like, there's a pile of money. The bigger the pile of money, the more the market's going to move from that pile of money. Because money talks. I mean, call it what it is. If somebody asks you to do something that you really don't want to do, you'll probably do it for a price. I mean, it depends on what it is, of course, but I'm talking ethically, of course. But, you know, somebody's like, hey, can you come by and clean my toilets? Nope. I'm pretty sure you're capable of that and you don't need my help. But, hey, they throw enough money at you. Okay, fine, whatever. So the bigger the pile of money, the more likely the market's going to do something from that. And that's why it works. So how do we get there? Well, we want to get there as fast as possible. You've been in trading long enough. Some of you are new to trading. Perfect. You're in a great spot where you don't have to learn all the nonsense. You could just learn exactly what you need to know and go trade. Wouldn't that be nice? All of the traders that have been at it for 5-10 years are like, yeah, wish I had this 5 years ago. So it's not going to take a long time to learn this stuff. We can help you get funded in as little as 10 days or less. All you need to do is follow our trades and follow proper money management. We've even had traders in the past who've kind of challenged that notion. And then I showed them what the numbers look like and how over the course of less than 2 weeks, there was enough money to be made on futures to get funded in less than 2 weeks. And there was, during that time, there was 12 trades and every one of them was profitable. I think in futures, we hit 14 in a row was the best run that we had was 14 futures trades in a row. And then we took a couple stop outs, a couple wins. I think we're like 16 of 18 or 17 of 19 or something like that. Anyway, solid. So again, no false hopes. Now, are you going to get funded in 10 days or less? I have no idea. We don't know what the future looks like. We don't know if next week we're going to take a couple stop outs. We have no idea. But it is possible. Absolutely. Follow the proper money management, follow the trades. If you are patient and you just do what we're doing, things are going to go well. And no guarantees, but just do what we're doing. It works. So our focus here is to make sure that we can help you learn our systems, help you make money as quickly as possible, and make it as stress-free and simple as possible, so that in all of that, you can get there in a short amount of time. Okay. So what do you need to know? Like, what do you really need to know in trading? Well, here's our thoughts on this. We've taken concepts in the trading world, and we've taken the most powerful concepts and put them into courses. The courses are not fluff. They're not light-hearted. They're like, we're going in, we're going deep. Here's your fire hose, start drinking. But we do it in a short amount of time because the whole goal is to give you everything that you need to know, nothing that you don't, and do it quickly so that you can learn it and process it and move on. So what do we teach? We teach structure, waves, and SMC, smart money concepts. Multi-time frame analysis, liquidity and volume concepts, order flow concepts, price action, support, resistance, trend lines and traps, supply and demand and order blocks, trade management, money management, and risk management, because if you can't manage the money, good luck. And then psychology, discipline, trader development, because if you can't manage yourself, you definitely can't manage the money. So it starts here. This is how you become a successful trader right there. It starts and ends between the ears. Whatever's in your head is a reality. Trading's hard. Well, that just became a reality for you. It's not hard for us. It's actually pretty easy. So just do what we're doing. So, but this is everything that you need to know, nothing that you don't. We have master level courses built out on these concepts, and there's more coming. Actually, we're still building out more. So this is what you need to know. It'll probably take you maybe a week per course to get through it. Spend time practicing it. so on. Trade breakdown, what do? We're trading order blocks, liquidity pools, fair value gaps, supply and demand zones, all of those, breaker blocks, the whole thing. We're trading it aligned with multi-time frame directional bias based on market structure and smart money concepts and so on. Bottom line, we look for pools of liquidity in the market. There's one right here. We trade it, we make money. We do that over and over, and it's great. Here's another one. Market's going up, broke through the strong highs, broke through the trend line, came into the highs, pivoted briefly, came out with strong momentum out of the zone. So what do? We find where's the liquidity, where's the down move that led to the up move. It's right there. That's where the trade is. 60-minute chart. You think that level is going to hold? Yep. Keys to your success, more of them, earn while you learn. So we have this idea that you shouldn't have to wait to make money, that if you want to make money, let's go. Sure, you're going to trade and sim with us for a while until you get the hang of what we're doing and get a feel for it, get the orders in, start to get comfortable with it and so on. And then just come into the trade and trade with us in the trade room. Come in and trade with us. You're going to trade with professional funded prop traders and instructors with real trades, real fills. All of the trades are planned out for you in advance. Stops, targets, entries, all of it. All of the trades are posted in advance in the Discord thread, as you saw. So you can copy our trades while you're still learning the process. There's example of, prepping trades, and Sean's posting trades, and I post them as well. What about trade copiers? Can you use trade copiers? Yeah, of course. Those of you looking to get funded on multiple accounts, most of the trades that we trade on futures, we're trading the micros, except for nat gas, platinum, copper. I think that's it actually. Then we trade micro crude, gold, ES, YM, NQ, RTY, which is M2K. So that's what we trade on futures. Forex, we trade dollar pairs and euro pairs. So if you want to take the currency future trades, you can do that too. The idea with trade copiers though is, if we're trading, the way that we've been doing it is about $500 risk per trade. You don't have to do that much, especially if you're trading the micros. You could easily do $100 per trade if you wanted to on those, and you'd be fine. You just wouldn't be able to trade, copper and nat gas, because some of those get pretty expensive. But even if you only traded the micros, you're still doing fine. You take that $100 trade and multiply it by 20 accounts, and all of a sudden that's a really nice trade. Go from 100 to 2,000 bucks. The best part about it is you're not over leveraging your trade and getting at risk of blowing out your account or your evals. Trade lower size, scale it with more accounts. All you're doing is buying a bigger drawdown. Profit target goes up, sure, but so does your drawdown. So you can make more money spread out across multiple accounts. Makes things easier. We talked about no indicators. We don't use indicators, none, not one. You hand me a blank chart, I'll mark it up and show you exactly where the trade is. I know any chart, doesn't even matter. So with that, you can trade on any platform. You like trading on Quant Tower or Addis or Regina or whatever you like to trade on, great. You can trade it. Doesn't matter. Ninja Trader, multi-charts, MotiveWave, TradingView. Platform neutral, so anybody can trade what we're trading. What about results? Let's go over some examples. Here's a profit factor 3.25. The only thing that matters when you're looking at these reports, guys, is this, the profit factor. Because Ninja's kind of quirky with how it, parts out the trades. Some of them get split up into multiple trades, even though they're just one trade and so on. And then realistically, you might have like really small, winning trades or big losers or whatever the case. It's just easier to look at this. Wins versus losses. How much did you make? How much did you lose? That's a simple factor. 3.25 is solid. Anything over 2.0 and you're crushing it as a trader. You start getting 7-point profit factors, you're doing a few things right. Okay, so does it work? Yeah, it works. What do our traders say? Well, they say amazing. Haven't seen anything like this before. Game changer. Can't wait to use it in my evals. Oh, by the way, he's funded like 10 times over now, and he's still funded. Crystal clear. Could never figure it out before, but Jim and Sean are crystal clear. Game changer. There it is again. Like the new program direction. Less stress, easier to follow. Like making money while we're sleeping. You know, that's a good thing too. Don't have to sit in front of the screens all day. Prop room is epic. Everyone must join. It's the real deal. Nothing like it. Excited. Thank you for willingness to teach. Game changer. There it is again. We don't tell these people to say this. They just say it. But yeah, real-time results in the room. It's the real deal. I've seen things in the industry, and look, there's a lot of great stuff out there, but this is one of the better things that I've seen. And it's great because we're the ones doing it, and it's been awesome. Here's an example, PKI in our Discord threads showing profitability in the funded account. Let's go in. Let's go take a look, because this has been updated since he posted that. Let's see, where is he at now? Here, I'll just give you a breakdown. Here he is, pulling profits out multiple times over. There's a screenshot. I want you to see this here. Now, this trader's doing what we're doing, plus trading some other stuff as well. So he's not just doing just what we're doing. But this right here says PA, right? What does that stand for? Performance account. All of these are evals. This is a performance account. P&L, 58,000 with a stop of 50,000. What does that mean? It's a $50,000 account. His balance is 108. So he made $58,000 on that one account. So now you take that and multiply it by 20. Now we're talking. And then here's the screenshot showing the actual balance before that, 91,000. Made 4,700 bucks that day. So there are traders that are making really good money doing this. Some of them are in our communities. We have some traders that make great money, some traders make a little money, and some traders are still working on it. And we want to help you get there too. So we've already looked at Discord. We've looked at the examples of the trades. We've looked at trades and logs and all of that, and 75% win rates and 1-to-1 or better. And we've seen logs. I mean, what else do you need to see, right? So it's just comes back to, what do you really want? What do you really want to do? Do you want to make money trading? This is a way to do it. I talked about you can trade this on any time frame, right? So I'm going to show you an example here. I'm just going to show it briefly. It's not, you know, it's still young. It's in its infancy stages as far as tracking. So I don't want to puff it up and make it sound like, oh, this is definitely going to happen forever and ever. But you can't argue with a 90% win rate across 20 trades. Like, sure, it's not a lot of trades, but it's like, okay, now we're starting to take it seriously. These are actually logged trades. I didn't have the dates on the other one, but over the last couple days, from just yesterday and today, there was 4 wins and 1 stop. So 5 trades in the last 2 days, that's plenty. 2 to 3 a day. That's what most traders are looking for. What about the trades? Well, here they are. Here's a break even. Okay, here's a winning trade. Clean. This is on a 5-minute chart. Some of you are getting excited now. 5-minute chart? Ooh, I love trading on a 5-minute chart. Here it is. Trade, win. Break even. Almost got stopped out on that one. Data got disconnected, but I put it there anyway just to show it. Here's another one. Clean. Clean, clean, clean. Came into the level, came out, took profit 1-to-1. There's another one. Clean. How do we get such clean trades? They're not all that clean. Look at this one. I'm gonna play devil's advocate here for a second. That one almost got stopped out. This one took on some heat too, but the trades are hitting. There's another one. Boom. 2 for 1. It's a 2-for-1 special that day. What was that? Euro Aussie. It works. So you want to trade it on shorter time frames? Great. We'll show you how. We're building out lessons on this currently. So it's coming. There's another one. Winning, winning, winning. So it doesn't matter what time frame you trade it on, it works. So good stuff. What questions do you guys have for me at this point? And then I'm going to give you a special opportunity here to get involved. Can you get a replay link? Absolutely, we will send you a replay. I'm sure Traders Corner is sending out replays as well. So any other questions? You have a choice. If you're stuck, you can stay stuck, or you could do something that works. What do you want to do? It's up to you. Or you can join with our traders that are getting funded, making money, so on and so on and so on. So what comes with our program? You get access to the live trade room, 8:30 to 11:30, Monday through Thursday is our trade room hours. Mostly what we're doing, the first half an hour to an hour, we're setting up our charts, we're going through each market, we're breaking things down, we're going over questions, planning the trades, and the rest of the time, we're managing, looking over the markets, updating. It's pretty easy going. I mean, sometimes we'll be sitting there just waiting. It's a lot less stressful. You just have to come to grips with, you don't always have to be in a trade. Trading's not about always being in a trade. Trading's about making money. The sooner we all get to that point and forget that we don't always have to be in a trade to make money, the better off we're going to be. Weekly afternoon classes, these are on hold until we finish the curriculum, and then we'll start those up again. Intro courses, foundations courses, price action mastery, liquidity mastery on supply and demand and order blocks, all of the pre-planned trades, private chat room, instructor guidance. How many of you have somebody that you can send all your charts to and ask for questions on what went right, what went wrong, get feedback on your trades or your charting? Yeah. I wanted to make sure that when we built out this program that we had the ability to help our traders if they needed to get some help. We have traders that'll send in screenshots of their charts or ask questions, and I'll send them a quick video back. We'll mark up the chart, send it back to them so that they can review and study. Because you need to have that feedback. How do you know if you're doing something wrong unless somebody can help you? So it's pretty important. Risk management, money management, trade management, we talked about that, workspaces, cheat sheets, trader development, and a $500 coupon because we like, why not? And it's platform neutral. So all this comes with, obviously you don't pay that. It's just to show if you were to buy this stuff separately, and some of you have and spent that or more, double. We've had traders that have spent double that not with us, but in the past. So you don't have to spend near that. Here's the deal. We are not here to sell you anything today. We are here to show you what we're doing. If you want to come in and check it out, we're going to give you a free pass to do that. All you need to do is fill out your info. Actually, let me give you a different link because this is going to be easier. I'm just going to give you the guest pass link. We're going to go there and I'll give it to you right now. Guest pass. Here you go. Maybe send to all. Okay, did you guys get that? I don't know what happened there. I'm going to put it in the chat as well.
Hey, Jim, I put the info.nstradingacademy.com/NSTF. Okay. There it is. Oh, no.
That's organizers. Let me see.
I'll cut and paste it.
Okay, cool. There we go. So you guys should all have access to that link. This is going to give you a free guest pass into our trade room for all of next week. Okay, we want you to come in, check it out, see it in action, see that we're not, that we're really doing what we say we're doing and all that. Plus, we'll give you an extra $300 coupon just for coming out and hanging out with us. So, and you could use that for anything. You could use it on this program. You could use it on our indicators, whatever you want. So that's what we're up to. If you have any questions, we got a couple minutes for questions and then we'll go ahead and wrap up. I know I go through this stuff pretty quickly. So if you have questions, ask away.
Can I ask one?
Yes, of course.
If we're not available next week, is it applicable to a week in the future?
I got you covered. You just let me know anytime.
Hey,
You can come in
cool.
anytime. It's fine.
Host privilege.
Yeah. Well, I mean, really, if anybody else asked me to, I mean, you're specialer, but you know, they're special too. So
Thank you, sir.
yeah, you guys are welcome to come in. If you can't make it this next week, just send me a message. My email's at the bottom here if you hadn't noticed, and we'll get you hooked up. Absolutely. Cost to join, send me an email. I'll send you the cost in a separate message. We don't put them in these events. These are more informational events, and we run different promotions throughout the year and so on. So we don't like to put them in an event, because then what if somebody sees a higher price or a lower price? It just gets finicky. So we just, yeah. So just send me a message and we'll get you covered. Hal, you're in the program. No indicators. We don't use indicators. Hal knows that. He's already with us. But we do have indicators. We sell indicators. They're great. We just don't use them for this program because this is a price action course and a price action program. There's some really great indicators. Oh, we have indicators for sale? Yeah. They're available through our sister company. We have a number of different companies. Arc AI. So this is, see if it loads here. You got in the meantime, you can wait watching the beautiful waves. Yeah, Arc AI is our indicator and algo company. So loads of indicators. If you guys aren't up to anything tomorrow afternoon at 3 p.m., very specific, yes, Eastern time, you may want to come in and check out what we've got going on, because we're releasing a new order flow tool and it is slick. So time frames, the winning percent, the same. I mean, from what I've seen on the 5-minute, it's been better. I mean, it's kind of weird to think the smaller time frames would have a better win rate, but no, it's been solid. I haven't tried it on swing trading yet, so I don't know the win percentages there, but the 5-minute has been like 90% profitable so far. I don't expect it to stay there. My expectation is to see like 75 to 80% too. That would be a fair expectation. So yeah, good stuff.
And I did the math on that. 75 to 80% is 3 out of 4 to 4 out of 5. And with a 1-to-1 risk reward ratio, the profitability level of it's ridiculously impressive.
Yeah, it's been solid. Yeah, really solid. And I could tell you from the dollars and cents side, you know, we don't post that stuff because it's brings a lot of red tape with it, but it's been really good. So
Jim, if that's all, I'd like to ask the audience if they've got future questions to direct them to jim@nstradingacademy.com. And your setups and strategies look great. We can tell even I'm interested.
yeah, awesome.
Ladies and gentlemen, if you're interested in avoiding all the common pitfalls that traders fall into and learn how to stop failing prop firm evals once and for all, with 4 unbelievable trading setups that crush the markets so you can finally achieve consistent results, then Jim Simmons and his staff over at Neuro Street Trading Academy have you covered. It's called the 3-in-1 Global Assets Prop Program. We've placed a special offer in the chat box. That was Mr. Jim Simmons of Neuro Street Trading Academy. Thank you so much for being here, Jim, and sharing such incredible information and the opportunity with our audience. Great presentation. I hope you have a great weekend, and we hope you come back and see us again sometime soon.
Yes, absolutely. Thanks so much for having us. Thanks, traders, for hanging out. We'll catch you all next time. Have a great rest of the week. Cheers, everybody.
Not a problem. Thank you, sir.
All right, take care.
Well, ladies and gentlemen, I mentioned at the top of the show that we had a great lineup, and I hope everyone is listening closely, because our last presenter is a graduate of Syracuse University and has been trading the financial markets for the past 15 years. He wears several hats over at Right Line Trading. He is a trading coach, assists with the optimization of trading strategies and indicators, provides logistical and technical support, and is always ready and willing to assist the Right Line trading community. Here to present AI Auto Trader, powered by next-gen technology, is Mr. Rory Powers of Right Line Trading. Welcome to Traders Corner, Rory.
Hey, thank you, Rob. Thank you so much. Thank you for that great introduction.
Always welcome.
Thank you, sir. It's always an honor to be here, and I always love Traders Corner because there's just hundreds of traders, and I'm one of you guys. I feel like I'm part of the family. So let's go ahead and get started. I know that today's been a lengthy presentation. I'm the eighth in the lineup, and man, this has just been a plethora of great information from. We just saw Forex, and Larry McMillan was talking about options, and a few of us are going to be talking about futures. So it's been a really great event, and I want to keep the ball moving, and I want to get your attention because I have something today that's working, and it's a very exciting system. And if you could give me 30 or 45 minutes of your attention, I know that you'll be glad that you did. My presentation is on our AI auto trader. This is based on mathematical modeling combined with next generation technology. So let's keep the ball rolling. I want to get the CFTC out of the way. The information I'm going to share with you is for demonstration and educational purposes. I am not a licensed trade advisor. Trading the financial markets does come with a substantial amount of risk. If you're not familiar with the risk, we highly recommend that you consult with a qualified licensed trade advisor. With that being said, I'm actually part, and I want to run through this quickly because I want to show you this presentation and the charts and the numbers. But I'm part of really a well-educated, super qualified and experienced team. It's just not myself over here pulling the switches and levers and hoping for the best. And I just wanted to take a minute to acknowledge my team because as a team, our vision here at Right Line Trading is to develop innovative trading strategies that help predict the future direction of price. Man, what valuable information that is. And we want to use this information to extract profits out of the financial market. And the tools that we provide our traders with an edge when they're looking at that right edge of the chart and all of that static and all of that noise and the question mark of which way the market's going to go. We've got software that we've been developing over the last decade, 10 to 15 years, that's extremely powerful. So the team that I am really privileged to be a part of, and listen, really what distinguishes Right Line Trading from a lot of our competitors is that we actually trade our system on the right edge of the market every morning. When that bell rings, not the whistle, that's the football game. But when that bell rings and it's 9:30 New York time, we have several traders in a live trading room who are calling out trades in real time. So the information that our software provides us with, those signals for entry that help predict the future direction of price, we can leverage that information in a variety of different ways. So let me start by introducing first our live traders. First, at the top right of my screen is a professional prop trader named David Kushner. He runs our prop trading live trading room. He successfully and consistently over the last several years has maintained 6 funded prop accounts. In fact, year to date, he's at about $80,000 in profit. He treats it as a business. He journals every trade, and he's extremely disciplined and follows the rules. So he leverages those signals by trading prop accounts. The second trader that I'd like to introduce is Mr. Craig Emery. Craig Emery has been trading for 20 years. And listen, I have the privilege of talking to traders now for the last 10 or 15 years. And his story is just like all of ours, that the trading journey was full of pitfalls, and it led to blowing out a lot of accounts. He bought a lot of indicators and trading systems over the years, that just didn't work. About 5 or 6 years ago now, he found a home with Right Line Trading, and he kind of found his groove with our money flow tracker trading system. And now he's consistently profitable. In fact, he has his own futures live trading room, and he trades his own real money live account. Now, third, I want to introduce Mr. David Wise. David Wise is on the bottom right of my screen, and he's a professional options trader. Excuse me, a professional options trader. He has a Reddit verified performance, and he has a really interesting story how he started. He got his career started. He was actually laid off from his job as an IT salesman for a cloud services company. And when they laid him off, the boss called him in, and he kind of had his head between his tail between his legs, and he got the bad news that he was being laid off. Well, he took advantage of that as an opportunity to trade full time. Several months later, the same boss who called him into that office called him back on the telephone and asked him, please come back. We need you. He told him, I'm sorry, I just can't afford to come back to work anymore. And the reason being is David has consistently maintained a 90% win rate. And the key to his success is he relies solely on the technicals. There's no guessing games, opinions, or listening to the talking heads. He bases all of his decisions on the technicals that our software provides. Mark Sachs, who is actually the founder of Right Line Trading, is also a very valuable member of our team. He's a PhD graduate in applied mathematics. If you've ever heard Mark Sachs talk, he's extremely educated and knowledgeable. He has 20 years of trading experience. He's the lead trader of several of our Options Alert newsletters, and he's a valuable member of our research and development team. Moving right along, Mr. Charles Sider. Charles Sider is our engineer on the team. All the I's must be dotted and the T's must be crossed. He's got his degree in computer science from UCLA, and he's been providing technical support for over 30 years, global client support and technical services. We also have Mr. Brock Miller. Mr. Brock Miller is pursuing his degree in computer science. He's currently working with us in customer service and digital marketing, and he recently just became a funded prop trader. He might have 2 or 3 months experience trading, but he now is a funded trader. So congratulations, Brock. And I really want to take a moment here and recognize Mr. Sergio Luque Rodriguez, who heads up the software development team. He has a master's degree in computer science. He's responsible for bringing the company's complex analysis of price and market analysis to life. So Mr. Sergio's been with Right Line Trading going on 10 years. And our team is led by U.S. Army veteran and MBA graduate from Cal State, Mr. Mark Miller. Mark Miller spent several years as a day trader and stock market investor. He currently holds several prop accounts. But most important, what Mark brings to the team at Right Line Trading are those core military values of honesty, integrity, transparency. And those core values have worked their way in to every department of Right Line Trading. He's a great guy, true man of God. We're very grateful that he's our leader of this team. So let's keep the ball rolling. I always show a couple of personal pictures. Recently, Mark took Sergio and I fishing. This was us on a fishing trip down in the Keys. I'm an avid saltwater fisherman. We live down in South Florida, love the Miami Dolphins, Miami Heat, anything Miami, I love it, especially the ocean. But I wanted to highlight today Mr. Sergio Luque Rodriguez because, well, he has a special place in our hearts today. Last night, his wife gave birth to their second son, Jonathan Luque Rodriguez, and it is a boy. And we've been smoking cigars and celebrating and high-fiving in the office this week. So congratulations, Luque, on your second son. God bless you and your family. So just to backtrack a little bit, and some people asking some questions, taking surveys, and I just want to know if you're alive or not. I want to ask you a question. When you're trading the markets, are you trading your own live money account, or are you a prop trader? Are you trading your own money, or are you part of this prop trading revolution? I mean, now for, you know, 25 bucks will buy you a $50,000 account. It's not like it used to be. So prop trader, or are you trading your own live money account? Irene's trading her own money. Tess is trading a prop account. Michael, prop. George, his own live money. Okay, so it looks like it's about 50-50. Very good. Steve is trading his own money. Adrian, prop. Yeah, these prop accounts now, they've really opened the floodgates, and it's really exciting. It's an exciting time to be a trader. With the prop firms, the advantages, there are advantages and there's disadvantages, just with everything else. But like I had just mentioned, for $25 now, you've got $50,000 accounts, at your disposal. So it opens the doors and it gives you an opportunity to get in the game. And I know that it's been a long day. I'm going to run through this kind of quickly because I want to respect your time. If what I show you today has any interest, I want you to put your name and your phone number, not yet, but once you've listened to the presentation, if you find yourself interested or you have more questions, put your name and phone number in the chat box. I could see it. And when the presentation's over, I'll be happy to give you a call and answer your questions. So let's keep moving. Listen, I started off the presentation by saying that we've all experienced problems being consistent, creating the financial markets. The trading journey is not a simple one. It's not easy. I mentioned that I talk to traders every day. Yesterday on a phone call, I had one of our newest members call me and she asked me, she said, I'm just getting started trading. Do you recommend trading, discretionary or an automated strategy? And I said, well, listen, the most people that I speak to, the way this journey begins is the journey begins that you receive these great emails that make it sound very simple, that in a very short period of time, you're going to make a lot of money and it's going to be fairly simple. But once they jump in, they learn that it's not that simple. They have, let's say, emotional issues that prevent them from being profitable. Maybe they're trading with indicators that just don't work. Maybe, they revenge trade or they make impulsive decisions like myself. But the way the process goes, what I told her in this conversation was normally all of these pitfalls that we fall into usually leads them through the road of hard knocks to coming and trying out the automated strategies. So it's been my team's commitment to you. My slide says it's my commitment. I can't take it all on my shoulders and be successful at it. There's no way in the world. I have a highly educated and qualified team behind the scenes that is their number one commitment to bring these pitfalls to an end. So when it comes to the right edge of the chart, and when that opening bell rings, and we have absolutely no clue which way price is going to go. A perfect example, when very recently that we had this geopolitical unrest. And, the first thing that popped into my mind was, hey, I'm going to buy shares in Lockheed Martin. Well, I think I was a day late and $1 short. You know, I didn't look at the technicals. I thought it was a great idea and that everyone's going to need to buy military defense equipment. Well, I was wrong once again. So when that opening bell rings, it's very important that you have the proper tool set. So we've narrowed it down to two things that you need to create trading success. Number one, you've got to have the proper tools. If you're a carpenter and you're gonna go put in a door, you're not gonna go with a butter knife. You're gonna bring your tools that can get the job done. And that's what I'm gonna show you today are tools that can get the job done that you and I just have no chance of keeping up with. This is software that once it's enabled will automatically get you into the trades and manage the trades on your behalf. Okay, so these are automated strategies that run in the NinjaTrader 8 platform. NinjaTrader 8 is a free platform. It's absolutely free. Okay, so these are pre-formatted templates that you would load in NinjaTrader 8, where our IT techs would load it for you. Once it's enabled, it's going to trade a diversified portfolio of strategies that have been optimized by our professionals. So let's get right into the benefit that you get from using our AI Auto Trader. For myself, it's no more cutting winners short or you know, getting out of trades too early, no more overthinking, hesitating. Listen, I get into trades all of the time and the trade starts going against me and I get the heck out. I get nervous. I'm scared that I'm going to lose my money and blow my account. And that's an emotional issue that I have trading a live money account. Or if I get into a trade and it starts going in my direction, I'll take the money and run. I'll shut the trade down. I won't let it mature. And these are common issues that most of us have. I think I heard on one of the programs here on Traders Corner that there's like 15 different personality traits, and 13 out of 15 of those traits just does not lend well to being a successful trader. You know, it's in our personality. These emotional issues are just don't lend well to being a good trader. So listen, if you fall into that bucket like I do, there is hope. I'm bringing a message of hope today. We've got something that will be a solution. So I mentioned just a moment ago that we have a diversified portfolio of strategies. One of our strongest strategies right now, we lovingly refer to it as the golden goose. The golden goose trades obviously gold. And let me tell you something, with this geopolitical unrest, you could see gold is, you know, up very close to $2,000 an ounce right now. So the price of gold is just skyrocketing, and we believe it's going to continue in the same trajectory. This is an example of some trades in the past. If you wanted to see something more current, this is what the chart would look like. Today's chart, looking at the gold on our system. And you can see on our chart, the way gold works um, is it looks for a disparity. And I'm not going to get too technical. I like to keep things simple, but we're looking to follow the flow of institutional money. I heard Jim Simmons say it just a moment ago. We want to follow in their footsteps. How do we do it? Our software identifies when there's a disparity between uptick and downtick. We stay away from the pivots. We respect the pivots, and we like a multi-time frame alignment and trend. And once everything lines up, in this little list on the left of my chart are all the split-second calculations that this software is making. In a live market, those will be dynamic, and you'll see them moving. But when everything lines up perfectly, you'll see these crosses come on my chart. And when those crosses come up and my strategy's enabled, that means it's game time. That strategy is going to get you in this trade, and it's going to manage the trade for you. Okay, so let me show you the numbers. I'm kind of a numbers guy more than anything. Numbers seem to make the most sense to me. And this is through after the first 3 weeks of October. You can see gold started the month. It was down $300 or $400, but as the month wore on, over the second and third week, it just started hammering away and going long, 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 and running up the score. You could see my cumulative net profit just continue to escalate throughout the month. By the 10th, I was only at $20. The 11th, 320. The 12th, 170. And then things just caught on fire from the 12th. 770, 1650, 2530, 2680, and finally to 3420. So the golden goose, has truly delivered for us. The second of our portfolio of robots or strategies, we refer to as the Nighthawk. The Nighthawk runs on the NASDAQ. It's actually one of our reverse trades, and I've referred to it in the past. I call it the George Costanza strategy. That's from Seinfeld. I don't know if you're familiar, but George Costanza and Raymer, they used to crack me up. But poor George, just couldn't do anything right. And he figured if he just did the opposite of what he normally did, everything would work out for the best. Well, that's kind of how the Nighthawk works. It's a reverse trade. And let me tell you, traders are passing their evaluations. They're making money with this strategy on their real money accounts. It held a single day record of $4,000 in a single session. So the Nighthawk strategy is really an excellent strategy. From our Discord chat group, we have a trader, DB, and Discord is, Jim was showing it just a couple minutes ago. And, again, this is the benefit of being part of a community of traders, is learning what's working for them, and sometimes even more importantly, what's not working for them. Doesn't it make sense to, if you can learn from somebody else's mistake, that's the way to go. It's a lot less expensive. But DB in the trading room has passed 2 or 3 accounts in just a few weeks. And he told our members exactly how he did it. He paused the bot once it made $500 a day, disabled it, called it a day. He practiced some very good capital preservation. And within the strategy parameters, I mentioned with the prop accounts, we can't take a drawdown with the prop account. So within the parameters of the strategy, we can set exactly how much we're willing to win and how much we're willing to lose. And I'm not going to get very technical, but I just wanted to show you the inside of the strategy under risk management. If we want to once we reach, let's say we took DB's strategy and we wanted to stop trading at 500 and we only wanted to take a $250 drawdown. And we found that every Friday we were losing. So now we can pick which days of the week are doing the best, the times of the day that have the best data, and our team happens to be experts at analyzing the data, crunching the numbers. So we've time analyzed these templates. They come to you pre-formatted, and all you'll have to do is load them and enable them on your platform. So let's keep the ball rolling and show you some numbers on the Nighthawk. This is a chart that shows the types of trades that it takes. Everything lines up to the upside. And what does it do? It takes a short entry and goes short, and it takes a full winner. And then it continues. The market gets a little bit oversold, and it takes a short entry. Everything in our trading system is showing, hey, go long. This one goes short, and wins the trades. Now listen, it's not going to win every trade. I don't want to mislead you. It does take losers, but it's been extremely profitable, and it has been very lucrative for a lot of our members. This is the equity curve through the first 3 weeks of October. It looks like it's at about $1,200. I'm sorry, about $1,000 is our cumulative net profit. It was crushing it, and then the last week it gave some of that back, and you could see that in my equity curve here. And our next strategy is the retirement plan. The retirement plan runs on the NASDAQ. All of these strategies can be run on micros. If you trade a small account, you can get in the game with a very small account trading these strategies as well. Now, we call this one the retirement plan because we tested it for several months, and we were astounded by the numbers that this strategy put up. It takes very few trades, very few trades. It averages about 2.5 trades per day, but it has a risk to reward ratio of 2.5 to 1. And the numbers that this strategy is putting up it might just lead to an early retirement if it keeps going in the way that it's been going. So these are some of the entries that it's taken. Goes off of, we call this our signal A entry. What you see on the bottom of this chart is our Laguerre oscillator. And we've kind of done some fine tuning to the Laguerre. And when the RSI line breaks through the 20 here, and we have that multi-time frame assessment of trends and the market internals lined up, this is going to pop you into these trades early. And these have big targets. And we let these take really nice targets. I think with 60 ticks of risk, it gets about 120 ticks of, I think it's 2 to 1 or 2.5 to 1. Over here, you see it took a long target, a long trade, and it got stopped out, took a loser. Over here, it took another long trade, and boom, a full winner. And listen, the key to these strategies is our risk to reward. That's what kills futures traders. I mean, how many times have you taken 2 or 3 winners and man, you're feeling great? And then you take a loser trading futures and it just wiped out your 2 or 3 winners. It's just heartbreaking. This is the opposite. This does the opposite. So the retirement plan is $1,917 through the first 3 weeks of October. So you can see with cumulatively, as we go through these strategies, that they really start adding up to significant and substantial amounts of money. Another one of our strategies that's doing very well is our Hungry Hippo. The Hungry Hippo runs on the E-mini, the ES, S&P 500 futures, which can also be traded on the micros, but it runs on a 10 range chart, which really does very well with the E-mini. And you can see some of these trades that it takes. They're just beautiful entries. And our software, it does come for this special. We always try to do something special at Traders Corner. And we are going to include the chart templates. But more about that in just a few minutes. So this is of some beautiful entries that Hungry Hippo took. And the numbers, well, the numbers don't lie. 3,098 through the first 3 weeks of October. Okay. And last but certainly not least, we have our knockout punch that we like to call the haymaker. And you know, if you've ever traded the NASDAQ, it's a very exciting instrument to trade. The NQ can really run up the score very quickly. And with this NQ30 range, we found a really nice time frame to trade it on. You could see some of these trades. It also takes our signal A. When that oscillator breaks through that 20 or that 80, it's going to get you into these big moves early. And I think the risk to reward on this one is 2.5 to 1 as well. And this one has just been doing extremely well also. And here is the equity curve. Cumulative net profit on this one is at $1,870. $1,870. So Roger asks, tell us what this does. This is an automated strategy, Roger. When it's enabled, it executes and manages the trades for you. Okay. Now this slide here, I wanted to show for our prop traders that Mark Miller, who's the owner of Right Line Trading, and he's also a participant in Discord. He's in there every day, you know, maybe 12 to 14 hours a day, extremely engaged with the community and a valued member of our trading community. But he's kind of making a side business out of these prop accounts, trading these strategies. And we have several YouTube videos. If you have a chance, check out our YouTube channel at Right Line Trading over on YouTube. He does some videos where he's actually trading. He's got a 300,000 account, several $100,000 accounts. He's got $25,000 accounts, and he's doing extremely well using this system to trade those prop accounts. So what I wanted to do is I wanted to go over for the month of October where we're at with our strategies. And then I'm going to bring over my trade performance, and I'm actually going to show you and pull it up on my performance. It's one thing to show you some numbers. It's another thing to show the proof on the platform, and that's what I'm going to do in a moment. But you can see here through the first 3 weeks of October, cumulatively, these strategies totaled on my computer $11,211. Now, not everybody's results are going to be identical. On my computer, using the exact strategies that we send out, the total was 11,211. Now, I want to bring over the performance. And I being part of the team, in the background, we run, variations, probably 30 or 40 different strategies to optimize the settings. But what I'm going to show you are just the ones that we're going to deliver to you today if you decide to come aboard. So we're going to start at 0, and we're going to add gold, which is our golden goose. That's GC. And that was the strategy that we had at $3,420. 3420. And then we're going to add the Nighthawk. The Nighthawk was up 1,005, so that brought us to 4425. Then we're going to add the retirement plan. The retirement plan was an additional 1917, which brought us to 6342. Then we had we already have the Golden Goose enabled, the Haymaker at 1770. And the Hungry Hippo, which was at 3,098. So the 5 strategies that you'll receive today, if you decide to come aboard, totaled through the first 3 months of October, $11,211. Okay. Now I have commissions factored in, so it's kind of an unusual number. There's 28 cents at the end, but that's after commissions. So the max drawdown with this was $2,141. Now, I mentioned risk to reward. Now, you could see here that my average winning trade was $224, where my average losing trade was $113. So that's just about a 2-to-1 risk to reward ratio. So if only 40% of my trades are profitable, but I have a 2-to-1 risk to reward ratio, well, hey, I'm going to make about $11,000 if I'm trading 5 strategies at once. Okay. And, I think that's what gets lost in this message is this is a system. Now imagine if it's either you or I trying to trade simultaneously the ES, gold, and the NASDAQ in a fast moving market and trying to make all of those split-second decisions that this system is making in order to enter a trade. And you can see here, these are the conditions that it's looking at before it enters. So in a fast moving market, trading 5 instruments, looking at all of those variables, all of those conditions, and being able to put up numbers like these, okay? So when that nice lady that I was talking to yesterday, being a new trader, when she's asked me that question, I said, listen, let me save you a lot of pain and suffering. We have something here that's working, and you can certainly learn the hard way, or take my word on this one. And she did, and she's going to give it a try, and our team is going to give her all the support that she needs to be successful. So let me put this aside. So if some of the bonuses that we're going to offer you, um, if you decide to come aboard today. Okay, Stephen, I see your question. If you could type in your name, your number, I'll be happy to answer any questions you have, or you'll send an email. Great. But one of the bonuses, what we're doing now, listen, we know that half of our members, they just want us to provide them the templates that are going to win. They don't want to get under the hood. They don't want to get their hands dirty. They want the white glove installation, which we're happy to do. And they want all the settings pre-formatted, which we deliver. Um, and all they want to do is enable the strategy. However, there's another 40 or 50% of you, and I've talking to you guys, and you know who you are, that like to get under the hood. They don't want to enable a black box system. They want to know how it works, what does what, and they want to tinker around with all of the moving parts, and they want to understand it. They want to engineer it. Well, we're doing workshops. This past week, we had to postpone our workshop because of the new arrival in Sergio's family, but we're going to resume that next week. And our team, we get together and we do a interactive workshop. And listen, we're going to show you how to build your own ATM machine, what each one of those inputs in the strategy is, how to optimize the time inputs, how to optimize the ATM strategies. And by the end of this series, you're going to be able, if this is your forte and you like to do this, you're going to have all of the information that you need. So you'll be a part of those interactive workshops. We also have unlimited VIP support. Mr. Charles from UCLA with 30 years of experience. He's going to fine tune your computer and get it humming. And he's going to get on and load up everything. Okay. Now, I mentioned earlier, if you have any interest, please put your name and your phone number in the questions box, and I'm going to be calling you as soon as possible. So our special offer, let me show you the offer. As I mentioned, we do try to do something special for Traders Corner. Today, what we're going to do is it's kind of a buy two, get one. And let me explain. First, you're going to get both our discretionary and our automated systems. So all of the chart templates for every single one of our instruments and strategies, you're going to have a chart template that has our full suite of indicators. You're also going to have the automated strategies that are going to be loaded, and all you'll need to do is enable them, and all of the hard work is done for you. You're going to be a member of our Discord chat group. In the future, you're going to get all additional markets. And I want to say something about that because we're not sure how long that will be available. But if you do decide to come aboard now, you will be grandfathered in. We have a hot new strategy coming. It's on crude oil that we've been spending a lot of time getting this one ready. With this geopolitical unrest, we're seeing a lot of volatility, not only in gold and precious metals, but in energy as well. So the special offer is going to be $3.99 a month at checkout, and they'll get Brock, if you'll please put in the link in the chat box. Use coupon code SAVE$100, and it'll be $3.99 a month. Now, your best value is going to be the next two options. If you buy 2 months, you're going to get the third month free. So it's $77.99 per quarter. So buy 2 months, get the third free, $7.99 per quarter. Use coupon code save $500. And our best value is the annual. If you buy 3 quarters, you get the fourth quarter free. Okay, buy 3 quarters, get the fourth quarter free, $23.99 for the year. Listen, that comes out to $199 a month. $199 a month. You're going to have these strategies for the entire year. And if you could find something for $199 a month that could potentially make you $11,000 in a month, let me know about it. All right. So I believe in the product. I know if you come aboard, we will make a believer out of you. So real quick before I go, I wanted to see if I can answer a few questions and show you the Discord chat. If you do decide to come aboard, you're going to be part of our community of traders. Jim Simmons just before me showed his server. This is ours here where our members post their results. This is Dan Tomaselli yesterday posted his results, really beautiful results. We have our general chat. We have our resources channel. I always have people asking me, hey, do you have tutorials? Do you have videos? Well, we have a whole channel full. We have our daily results. We have our problems and solutions. If you're having a problem, listen, tech is tech. You're not going to be lost on the bottom of a deck of a large stack of cards. Charles and our team is going to be right on top of it, and you're going to be up and running the same day. We have a prop trading channel, improvement ideas, and our new feature, getting some of everyone's good ideas, because some of our best ideas come from our traders. In our strategy optimization channel, we have what we call the bullpen. And we have a spreadsheet where people put in strategies that they're testing and optimizing and working on. And they share them as, to use them for free. So you can give them a try as well. So there's definitely power in numbers, and you're going to be part of a great community with our Discord chat group. So looking over the questions, thank you for your number, Matt. Greg asked if these numbers are based on minis. Yes, these numbers are based on trading. Thank you. Good question. The numbers that I showed you are based on trading 2 E-minis, 2 contracts. We like to use a 2 contract strategy because we have coded into the strategy a proprietary trailing stop that will keep you in the trade until momentum wanes on some of our strategies. So it's going to get the maximum excursion. When momentum wanes, it's going to exit the trade and get you out. So our first target will hit, our stop will be brought to break even, and we'll be in the trade on a second contract on a runner, on a momentum-based runner. So great question, Greg. Stephen, okay, I'll give you a call. Roger asks, what do you do when market conditions change? That's a great question. Market conditions are constantly changing. And that's why I took so much time in the beginning to introduce to you my team of my associates here at Right Line Trading. We spend hours every Friday, and we crunch the numbers for hours. We look at a number of things that we're gonna go over in the workshops on how we optimize these templates. The haymakers started out the month, and it was, it started out the first week, it did well, and then it took a dive. And we looked at the numbers, we optimized the settings, we put them in the Discord chat group, and you're going to get fresh settings every Friday. Every Friday. Okay? So this turns into a win-win relationship. So every Friday we optimize the settings. Okay. Well, I think I'm just about out of time, but if one last question from Greg. If he asks if he has 50,000. He has 50,000 evals. Is 2 E-minis too much? No, no, because Greg, what I said earlier, you can, in your strategy parameters, you can limit your losses. You can limit your losses. We're going to put our best strategies on your eval accounts. We're not going to let you take drawdowns. And now listen, you're not going to pass every evaluation, but guys, with those evaluation accounts, don't get emotionally attached to them. They're $20 or $25 accounts. If we have to start a new one, let it be. Okay. So our goal is to get you funded and to keep you funded. And we've got the strategies to do it. So this is our offer. My phone number is right at the bottom. Please write your name and number in. And as soon as the presentation is over, I'm going to give you a call. Listen, I want to take a moment and thank Traders Corner. I want to thank you for all of your time. Really, we're in this fight together. In biblical terms, I always say it. It's like David versus Goliath. And we're the guys out there with a slingshot. Well, listen, it's time to even the playing field. Okay, come aboard and let's do it together. Thanks for listening. Have a blessed. Tomorrow's Friday. Have a blessed weekend, and we hope to see you on Monday in our Discord chat group. Thanks for your time.
Thank you so much, Rory. I like to call Thursdays now Happy Friday, Junior. But your strategies look amazing. I've been hearing that your automated strategies have been crushing it lately, and it's really exciting. I mean, I sure could use a golden goose strategy. You might very well may hear from me. But congratulations to you and the team over at Right Line Trading, especially Sergio, on the birth of a child. Ladies and gentlemen, if you struggle with human error, over trading, inconsistent results, or blowing out your proper live accounts, Mr. Rory Powers over at Right Line Trading has a solution for you to get funded and stay funded. You can learn more by clicking the link in the chat box. I know a lot of people put their numbers in. I'm pretty sure Rory's just going to start calling you one after the other. Sometimes it takes a bit, but Rory, thank you again. We appreciate having you on Traders Corner. We hope you come back and see us again.
I sure will. Thank you, Rob.
Thank you. Well, ladies and gentlemen, that concludes our online trading summit. The staff over here at Traders Corner wants to thank all of you for joining us today. It's been an information-packed event, and we hope you all enjoy the fall season. The replay will be on our YouTube channel, which I'll place in the chat box momentarily. Have a great evening, everybody. Thank you all for being here.